the 21's in EMA and the 9's in EMA. And we got the 200 SMA, EMA, and then the 200 SMA, which will be our final resting place to go ahead and start scaling out of this trade, unless we get a bull market after the election to Trump and this thing decides. Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I was looking at AMD, and it looks
Altice
very
USA
interesting
customers
for me.
lost access to MSG networks yesterday because of a carriage dispute between the cable operator and James Dolan's regional sports channels. That means that the New York-based cable company's customers won't be able to watch the NBA's New York Knicks or the NHL's Rangers, Islanders, and New Jersey Devils.
Too bad.
MSG said it offered fair and reasonable proposals and remains ready to negotiate in good faith. Altice called MSG's programming fees exorbitant and said that they would force it to raise cable bills.
Yeah.
You see these happen every once in a while. Pushback.
This time of year,
It was January 1st.
I don't know what. There's so many things to bet on that it's almost like overwhelming.
Oh, for the sports you're
yeah,
talking.
It's almost overwhelming. You just
Last night Matt was flipping through sport to sport, going back and forth.
I mean, I think tomorrow, or Saturday, Bengals are actually going to be televised again. So there's all these NFL games. There's all these, there's 12 teams now in the and then you got college basketball in full swing and NBA
and the NHL.
Yeah. So many ways to lose money. I got so many different ways to lose money on DraftKings. Coming up a closer, I can't pick. A closer look at Elon Musk's proximity to President-elect Trump, and the ways that actually I had Ohio State big.
Did you?
I did, and the over, and I had Arizona State because they were getting.
That was exciting. Maybe before Oregon.
It was. I mean, it was a hard day to watch football with knowing what was going on, but. Help share policy under the new administration. We'll talk about that next, and we'll try and make it not all negative. We'll be right back.
Now, what don't make sense? JP Morgan Securities downgrades Uber Technologies.
Athletics.com.
Elon Musk rang in the new year with President-elect Trump at Mar-a-Lago. Joining us now with a look at Musk's proximity to Trump and ways that he could help shape policy under the new administration. Teddy Schleifer, New York Times reporter. Teddy, the only time, good to have you on, by the way, but the only time we see some bipartisan stuff, usually the two parties agree on things that probably aren't great. I noticed that a lot, like, blocking the steel merger. So, oh, finally, we got some consensus, and a lot of times I disagree with the consensus. Both parties, or people in both parties, have relationships with billionaires, I think.
Yeah.
And you just pick your billionaire. No, none of them have trillionaires, and maybe Elon Musk is the first trillionaire. But this is an odd sort of a bromance to watch, and it's one that, I don't know, is the clock ticking? They're both so mercurial.
No, shut up, Joe. Come on.
Yeah, I mean, look, both parties have had a long history of dealing with wealthy people who want influence. But I don't think we've ever seen anything like this.
Tell that to a liberal, they won't believe it.
Elon Musk, we reported in Times this week, has been renting a place at Mar-a-Lago nonstop since Election Day. Musk is, imagine George Soros, like playing this role on the, Obama transition or Biden transition. Republicans would be apoplectic. And so we've never quite seen someone quite so involved. And frankly, look, I mean, he's not even president yet. So this could happen for a much, much longer amount of time. Is there a ticking time bomb here? That is the expectation.
There's no expectation. Just because Biden screwed up, you can't. Okay, calm down. I just can't take this channel anymore. Just calm down. God bless America.
Behind the scenes things going on, and it seems even more insidious in certain ways. But you're right. He would never rent, or his son would never rent, a villa for $2,000 a night where you're like 50 feet from the... Now, he hasn't been inaugurated yet. I wonder, it doesn't, I mean, when you're down there, it's a nice place. I think it's $1 million a year to join Mar-a-Lago now. Like, you're at these New Year's Eve parties. Doesn't necessarily mean it's the same as he's not going to rent out a room at the White House, probably.
Yeah, but look, I mean, when Trump is president, suddenly Elon is going to have direct access to the guy, and he can say, I would prefer that Trump do X, Y, and Z, and Trump's going to listen, right? I mean, look.
He listens to everybody, you dingbat.
Susie Wiles, Trump's chief of staff.
That's what makes him unique compared to other politicians. He's not a politician. He's not biased. He will listen to both parties. But maybe he might be a little bit wiser now because Democrats are jerks.
In White House policy and politics, but that is an advantage. That basically
get your hair fucking cut, you idiot.
Yeah, and he can come in and sort of observe.
He's like you just woke up out of bed.
That is not working, a country that is not working. And
who is this guy?
And that sort of is the whole point of the Doge initiative that Musk is.
Blah, 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 blah.
Is, somewhat maybe wish cast, but dream of private sector involvement is because
it has nothing to do with money, punk.
Something else that they can then bring to bear on policy making.
When I was talking about the bipartisan issue, I thought everybody agreed that we want the visa, the talent in STEM, because since we have lagged in STEM in this country to some extent, and a lot of very successful people have used the visas to come here. I thought we all wanted to be able to do that. I'm surprised that causes consternation.
Exactly.
That would be a good thing when a president like Trump backed.
No, we want a bunch of criminals over here that's committed murder and rape, just like the Democrats do, that committed, launder and crime, and those are the kind of people we want here. Naturally.
Wing is concerned about. There's been this, use the word conspiracy, like there's been this conspiracy of kind of the globalist neoliberal left and, the free market, Paul Ryan, Mitt Romney right, and that those people have been pumping the country full of H-1B visas, and that's been hurting American workers in their view, and that's why, they elected Trump to be the wrecking ball to disrupt.
And now he likes it.
Yeah, yes. I mean,
He's never been against it.
Trump's actual
He's
position
been.
It's also not. I mean,
Oh, these guys, man. He's against illegal immigration. There's a difference. Do you not understand that, egghead?
So, I mean, I don't know how much more he needs. Obviously, I don't know how many boats you can water ski.
I don't care how many of them smart people you get over here. I want them over here.
Is it possible he genuinely, everything that he thinks of is what he thinks would be best for the country? And even some of the stuff Trump wants to do, he's not trying to get reelected anymore. Isn't it possible
I'm going to beat up the station today.
Not motives of self-interest, but actually motives for what both of these guys think would be best for the country?
I do, and I think at times, people, as in part of the, effort to scrutinize power, an effort to scrutinize wealth, sometimes we do go too far in kind of the culture, in trying to, assess exactly how is Tesla benefiting from X, Y, or Z. I think those are legitimate types of scrutiny. But look, Elon Musk is an individual person. He has a heart and a brain and, 2 arms and 2 legs, and he has opinions about politics. It just so happens that he has the ear of the White House and the ear of the next president. So of course, he has extraordinary influence. But yes, I do believe that he genuinely.
Cool. I mean, it's crazy, Teddy. You got the leader of the free world and the richest guy in the world. I mean, it's weird, right? One of them likes the power, the other one likes the money. But that may not be that simple or cynical. It may be that
Must just like the money.
Both of them actually have good intentions. And you might not hear that a lot of times in the way it's covered. I think you seem to.
Who doesn't like money?
I'm open to it. I'm open to it.
Yeah, exactly. That's good. But you need to keep covering them because, I don't know. Absolute power corrupts. Absolutely. I'm sure $1 billion would corrupt the hell out of me. I don't know. I didn't know how. Wouldn't you, Teddy? Don't you think we both end up?
You're starting to think like a Democrat, Joe.
Mr. Burns on The Simpsons. Release the hounds.
Sure thing. Yeah. I mean, I'm not. Luckily, I'm not in that position of just
unluckily. What do you mean luckily?
Right.
What do you mean luckily you're not in that position?
I don't have to deal with that.
Yeah, exactly. They're not happy with all that money. All right, thank you.
You bet.
See you later. All right, we'll be back.
All right, when we come back, a closer look at one of 2024's high-flying stocks. Peloton was a pandemic darling with a market cap as high as $50 billion. It plunged in the years after the pandemic when people were not using their Pelotons, but it rebounded late last year. We're going to talk about the challenges ahead for the new CEO, Peter Stern. That's next.
Calm down, Jim. You really don't have to hurt nobody. I'm a drunken sailor. I just get very defensive when they start talking garbage. And Baba pulled back today. Oh, gosh. I'm going to make me a cup of coffee. I've got about a half hour. Ooh, look at Spy go, man. Spy's about to break the pivot point. I'm going to keep this up. This was yesterday's chart. This is on the hour time frame. La la la. We had a double bottom. 3 black crows. Jimmy called that baby out. So we're at a pivot point. I had someone debate me about my pivot points on stock twits, and Toss figures it out for you, sir. I said, yeah, it does, but not as good as I can do it. Mine are original. Mine don't come from an AI computer. So if we break 591.65, we're going to move up to 595.30 today. Just under a $4 bounce. I'm not going to adjust this, but it is a pivot point. Yeah, I got a new mouse, a new keyboard. Much better than what I had. It was definitely the problem. I wear these mouses out pretty much. So I got a new one.
Join Jim.
Join Jim.
Peloton stock
Becky,
rebounded
you
about
don't look too hot
45%
today.
in 2024. The
I don't like
company's
that
new
sweater.
leader, Peter Stern, took over the CEO role.
But I like
that
your
was effective
face.
Yesterday, joining us right now on the challenges ahead for this company is Andrew Boone. He is research analyst at Citizens JMP. And Andrew, what do you think? I know you've got a market perform on this, so you're looking at the 50+% growth over the last year and saying, okay,
50.
wait and see. What's the list you have to lay out in order to convince you that there are additional potential gains for the stock?
What I'm particularly looking for is for connected fitness subscriber growth to start to accelerate in 25 or 26. In our model and generally the street at large, we continue to expect that connected fitness subscribers continue to decline this year and then the following year. And so really we're waiting to see that, hey, all of those pandemic gains have now kind of subsided and that you're into a...
She calls this a 50% gain from 1566 all the way up to $84. Is that 50% gain? No. It's more like 500. Come on, girl. 500% gain. Wake up. Woo!
Connected fitness subscriber base. And look, that's been really steady. They've done a great job of continuing to have high engagement
50%.
from users to be able to drive subscribers and be able to keep that core base. But at the end of the day, we don't see that growing again, and so that drives our market perform rating.
So what has to happen, I guess, with those connected, if that's something that doesn't happen in the next 12 months, then what?
Yeah. Well, let's talk about that. Peloton has done a number of different things in terms of trying to accelerate growth. They've launched new markets. They added one, I think, 2 years ago in terms of Europe. I think there's more potential for them to utilize partners like Amazon or other third-party retailers for them to be able to push into new international locations.
Market Perform is an investment rating used by sell-side analysis when the expectations have given a stock an investment that will provide returns in line with those of the S&P and other leading markets averages. Market Perform is a neutral assessment of the stock and is neither strongly positive nor negative. Market performed. And I believe that too. I mean, the thing's up 500% in 1 year. Hello, John. Good pullback, right around $61 would be a bargain, if not that. So when you have something like this, you'd want to maybe, I don't know, it's up a lot. I mean, it's getting a lot of hype. We're into a new year. We could get a nice little bitty pullback and then start holding a position. But 50% is not $15 to $84. That's not 15%. That's 500. I don't know where she come up with that. She looked like she just woke up. Maybe that sweater's a little bit too heavy for her today.
past 7 a.m., about 7:02. Just before that on the East Coast, you're watching Squawk Box on CNBC. I'm Joe Kerner along with Becky Quick. Andrew's off today, Thursday.
I know, it's not Monday.
Thursday. I just have to keep telling myself that. Among today's top stories, the investigation continuing into the. See, I can't say that. The truck didn't attack anyone. It was a terrorist that attacked people in New York using a truck in New Orleans. I'm sorry, during the early hours of New Year's Day. At least 15 are dead. Dozens more were injured. The FBI now focused on the Texas-born suspect and his motives may have had something to do with the ISIS flag. He did have an Islamic State flag attached to the truck. Weapons and a potential explosive device inside the rented pickup, which was even more devious because it was an electric vehicle that you couldn't even hear coming. We're going to have a live report from New Orleans in just a few minutes. And authorities are investigating the explosion of a Tesla Cybertruck just outside the entrance of Trump International Hotel in Las Vegas. It was yesterday morning. The blast killed one person inside the car, and several others that were standing nearby. And this incident is being investigated as a possible terrorist attack, but a motive hasn't been determined here yet, or whether it's related in any way to what happened in New Orleans. In a statement on X, Tesla CEO Elon Musk says the explosion was caused by, in his words, very large fireworks and or a bomb carried in the bed of the truck.
Had fireworks
Let's
for
check
sure.
on the futures this morning. Things have actually been picking up. We've been strongly in the green all morning, but at this point, the Dow futures are now up by about 370 points. S&P futures are up by 60. The NASDAQ indicated up by 260. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. And Dom, what's really driving things today?
It's going to be a lot of, first of all, good morning and Happy New Year to Joe and Becky, to both
We
of
hit
you guys.
resistance.
We'll start off with maybe the positivity on cryptocurrencies, because we are now seeing a bid for Bitcoin prices starting the new year in the green right now, but still below that record high of just north of $108,000. Right now, Bitcoin prices are at $96,600. Now, that boost is causing shares of crypto-aligned stocks like MicroStrategy and Coinbase to move up as well. MicroStrategy's had slid about 12% this week after pulling back with its weekly Bitcoin purchases. So Bitcoin prices, MicroStrategy, Coinbase very much in focus.
Damn, I nailed it again.
Also, big technology. Alphabet shares are up about 1%. That's despite a downgrade to market perform from outperform over at JMP Securities. Analysts there say potential antitrust penalties from the Department of Justice.
So you have this is on the 5-year time frame. And each time we hit the resistance, I'm using the body of these candles as a overhead resistance. When we had these 3 white soldiers, we still had a little run, but we pulled back to the top of that old resistance, which now becomes support. So that's something to keep in mind when I talked about last video on that seminar. If you're in doubt, zoom out and you'll see a pattern of some sort. This one here was the overhead resistance with the 3 white soldiers, and it came back and touched that first soldier. And we've been sitting here for a month, coming back and hitting that area of support, which has been right around 93,000. So as long as we hold that, we're good. Now, if we don't hold that, it's a pretty good drop. That's a major, 90,000 would be your next one. And you'd go in intervals of 1,000 on the way down to this bottom of this here candle. But the 90,000 is right here, and it's right at the end of that candle. And each one of them would be a major support. This would be a solid buy right here. This is a bull flag on a breakout. So yabba dabba doo.
That you talk about with regard to financial management and wealth management, because generally speaking, the markets go up.
It's going to be up, down, or flat. I'm pretty sure that. I have a weather prediction for this year, too, with global warming and everything. It's going to be a cold, wet, warm, dry year.
Yes, I think that spring's going to be a little bit wet. Summer's going to be warm.
Probably
Fall's
colder
gonna be
in
a
the
little bit
winter.
cooler, and then winter's going to be very
colder in the
cold.
winter. It could be a really hot. It could be hot in the summer, probably.
That's just anecdotally. I'm no meteorologist, but I
Exactly.
I don't even play.
Although January's supposed to be colder. Did you see this? January's supposed to be.
It's supposed to be colder like in the next couple of days.
But
Yes.
Joe, Becky, we're due for it, right? We haven't had a really
It's
bad
been really
winter
warm.
in a while.
And we had a beautiful fall.
It was a great fall.
It was pretty.
I'm ready to sign on.
California
I
weather.
don't know about where the downside of all this is. I liked it. I don't know where the crisis is. Coming up, a new year for the markets and our North Carolina weather up here. Our first chance to talk to Wharton's Jeremy Siegel about a potential pause for the bulls. That's straight ahead. Later this hour, former FDA Commissioner Dr. Scott Gottlieb on everything from the bird flu to weight loss drugs. I'm worried about the poor birds. Squawk Box coming right back.
My name is Scott Gottlieb. I'm a doctor. So we hit the pivot point. This is the pivot point. 591.65, and that's where we are right now. If we break it, we have the 200, and that's going to be your next resistance. It's a little bit higher off that trend line. I don't know where I got that at. Probably on the 5-minute, 5-day. Let's check that out. Oh yeah, that's got it on the 5-minute, 5-day. And if I look at that chart, your next resistance is at 592.80. With a long to 595.31 this week. VICTORY, that is Washboardjim's battle cry. Let's make this a little bit bigger, darling. Oh, yeah. Is it snowing? Oh, God.
Let's take a closer look at the markets. Joining us now, Jeremy Siegel, Wharton School Professor Emeritus and Wisdom Tree Chief Economist. For about a month, maybe a little bit longer, the market has seemed to be a little bit more tentative than usual, than we've seen in the last couple of years. Even though it was no one really liked the market for a couple of years, especially at the beginning, Jeremy. Lately, I think valuation concerns, at least for me, have been, I mean, you don't want to be a new president at 22 times earnings. It'd be much better to be Obama, right? And come in at after the financial crisis.
Yeah, and Happy New Year's to you.
That's a low blow.
One of the nails, I think, right on the head. You know, we talk about 22 times earnings. Now, that's earnings that are up 16 to 17% projection from 2024. Now, in the last 2 years, and these were good years, everyone admits, we had 8 to 9%. So I'm wondering now what is going to be that catalyst that is going to jump it to 17%. I mean, that's pretty high. So if we have another 8%, and you know, most economists say, hey, that's a good increase, we're really 23 to 24 times earnings. Now, it's been higher. It's you know, in that big run up in 1999, we just kept on going. But you know, we certainly got too high, as we know, in 2020. In 2000, that caused a big decline. But there's a second point, and you know, everyone is very optimistic, as in many ways we should be when the Trump election. But remember something: when Trump got elected in 2016, in 2017, we reduced that corporate tax from the mid-30s down to 21%. We cut the capital gains tax rate. We doubled the estate tax exemption. We had pass-through tax breaks for small businesses. All that was done. What is new that's going to happen on the tax front for capital in 2025? Now, Trump has talked about 15% for domestic.
I got the answer to that.
That produced domestically. That's about it. He did not talk about any further cut in capital gains taxes, any further exemption on estate or any other.
He's an idiot. I mean, business-friendly environment, cut regulations. That's how we're going to get the next bump. But he's right. We're way overbought. I mean, it's a setup, more or less. But I don't think it has anything to do with tax cuts this time. It just has to get the government off of our freaking ass so we can do business. I'm a small business, I'll tell you. I've been through hell in the last 4 years.
To get a continuation of what we had, and that's great. But what is the new propellant that I think is going to drive some of these really very, very large expectations for 2025
Right.
S&P
The
gains?
counterfactual, just because we dodged the bullet of what Kamala Harris was talking about, or another Biden administration, just because we dodged that bullet doesn't mean that there's going to be something incrementally positive that hasn't already been done, except, Jeremy, maybe deregulation.
Right, now, but don't forget, a lot of deregulation, great deregulation during Trump's first term. Biden took back some of it, but a lot of those, not a lot of it.
Okay, then
Yeah,
all I got is AI. More AI.
Yeah.
AI. More
AI.
We have AI, and you know, with there's a lot of huge profits. That AI narrative continues. It's really hard to break narratives. The internet narrative continued in the late 1990s. I'm not saying it's unreasonable, but that is what, and we have to also see those people buying the AI getting those profit and margin expansions, not just investing in it, but saying, I'm making enough money to pay for the Blackwell chip, that it's worth my while to do that. Now, we've seen step one. I'm not sure how much. We're seeing step two that needs to verify all the excitement on AI. I think it could be there, but I'm saying there's still story that's needed on that side.
Right. And then the other thing is, I don't know how much Doge can get done, without Congress. I don't know how you really cut, since so much of it is non-discretionary. And that might be good long term, but near term it might be contractionary. So I don't know if I don't know if we can say that's going to be bullish for stocks either. All in all, Jeremy, it's
it could be a tough. I mean, it's a first year. I mean, I said, late in December. I think this is a year for a correction, which is defined in that.
10%.
I'm not sure. I mean, I think the end of the year. I'm not saying we'll be in a correction by the end of the year, but it's been a long time since I've called something like that, and so one could be wrong, but I see some of that optimism.
There's only one reason why he's calling it. Because he knows that government's going to be tightened on Doge. And that's why they keep talking about the government all the time. Because they love that free money. When liberals in office, I mean, they just throw it out to them. To all these high-ranked billionaires. And they're still, I mean, just imagine $14 trillion printed in 4 years. I'm not going to say they're not going to stop printing, but it's not going to be like that. It's not going to be wasted on green energy where they make their families rich. And we've got all these wars, so if we stop all these wars, that's another catalyst, I think, to stay in the circular bull market. If we do, I mean, it's bad. But I would love to see it. I've been saying it anyway, so I'm not going to beat around the bush. Because we're way, I mean, I've never seen the market run like this in my whole entire life of 20 years of trading this market every single day. Not a 2-year run like this, so there's got to be some kind of pullback. And they're going to be sharp, like last week. Look at last week. That's pretty sharp. So that's why we're at a pivot point right here. If we break on up, it's definitely going to hit that 595.31 area. And this market's got that bull fever, and everybody's got out of their positions last year. So this first week could be probably the best week for the next 2. Then we have more of a correction and then jump back into trade after Trump signs his executive orders. And we shut down that border. Anybody tries to cross it, I'm going to tear gas their ass. Man, I watched a guy on YouTube today, and I knew he was going to be a jerk. And I mean, let me see if I can pull it up. Probably can't. This guy really got under my skin this morning.
Here's another.
She gets under my skin too.
The honest review will give you everything you need. Opens. Ew.
So tomorrow
This
is
guy.
going to be the first trading day of options for 2025. I'm going to be preparing you to trade the best setups at the best levels.
Right off the
Turn
bat,
up
I knew he was
yesterday.
kind of someone I wouldn't want to hang with because of his hoodie. And he sounded okay at first, but
Green within the morning trading session. What matters is how we finish the day. So in terms of the game plan, this is going to be day. So in this particular pattern, we're bullish, but we're not going to let that blindly bias us, right? Because we have to trade using confirmations. And I'm going to show you on how I was able to confirm buying SPY call options towards the exact close towards the end of this video. So in terms of the gap up situation, based off the daily chart pattern, which is a foundation that we can use as a setup for a potential confirmation at the next resistance test. SPY breaks above the resistance level, drops back down, 593. Make sure reversal candlestick right here in this green trend So in terms of the game plan, this is going to be very session, and I went 2 for 2 back-to-back wins on SPY call options. I bought these calls towards the exact lows. Very simple to make money. All gap up, and it was a strong bullish trend day. So in this particular pattern, we are currently at micro oversold levels in the market, and the pattern looks very similar in a sense, and we're towards a lot of key support on the overall daily chart. So with that being said, we got some gaps that are waiting to fill above as well. So as long as we are gapping up, which we currently are, the main focus is going to be to buy all options. You guys need to understand, when I give you the price ladder of levels, you need to confirm that the level is going to be bullish or bearish. You know, we may have setups or we may have strategies at certain prices within the ladder where it can potentially be bearish or bullish, but we're not going to let that blindly bias us, right? Because we have to trade using confirmations, and I'm going to show you on how I was able to confirm buying SPY call options towards the exact lows towards the end of this video. So in terms of the gap up situation, based off the daily chart pattern, which is a foundation that we can use.
I don't know, he got pretty violent on here. I can't find where it was.
As a setup for a potential confirmation at certain levels, right? So based off the history, it did not reach the previous closing price. Now, we're gapping up in terms of the levels of interest for buying call options. You know, the first level is going to be the previous closing price, 586 levels. Those are going to be your resistance up situation. It would be the 588.68 level, right? And then in terms of the profit target above that, next profit target is going to be 590.50 to 591. And then in terms of the next level above that, it's going to be, you know, 591.70.
He's using the body of the candles. That's smart.
Make sure you are setting profit stop. When you set a profit stop and you're green on a trade, it is impossible to go green to red. It's going to secure your profits. Move the profit stop up along the way as the 570, 585.50 zone break down below, reacting bearish.
Well, I can't find it now, but he turned me off big time. I gave him a down
on trading day, and like I said, man, with the overall daily chart pattern, if we are reacting bearish, I do think we're going to see a bounce.
He got really cocky. I don't get that cocky. Who blah, 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 makes percentage points like this? Nobody. Who you going to follow? In a really vulgar way. He reminds me of Skinny Man, which he could be. He's probably aged some. I remember when I first got into Discord, it was I can't remember if it was Ascend or United Traders. We had a guy come in there and was saying, nobody can trade better than me. We ended up kicking him out because he just kept on with his ego. I think it might have been United Traders.
Obviously, emergency vehicles everywhere. Police were everywhere. Bodies, folks were just running through the streets.
At least 15 killed, dozens injured.
Damn.
In what the FBI has labeled a suspected terror attack.
Horrible.
An ISIS flag was located on the trailer hitch of the vehicle. Weapons and potential improvised explosive devices, IEDs, were located in the subject's vehicle.
The suspect, identified as 42-year-old Shamsuddin Jabbar, a U.S. citizen from Texas who spent a decade in the Army. After crashing into a roadside crane, Jabbar apparently jumping from the vehicle. And after wounding 2 officers, killed in a shootout with police. Agents now indicate he likely had help carrying out the attack.
We do not believe that Jabbar was solely responsible. We're aggressively running down every lead, including those of his known associates.
Law enforcement teams searching the suspect's home in Houston and the scene of an overnight fire at a New Orleans Airbnb, where investigators believe some of the explosive devices may have been assembled. 2 additional IEDs located in the French Quarter were rendered safe. The area still locked down as the investigation continues. Yeah, and look, the Sugar Bowl, part of the college football playoff, was canceled yesterday, or postponed rather, until today. Kickoff still scheduled for 4 this afternoon Eastern time. Even though the state attorney general in Louisiana has suggested it should be postponed at least another day. The governor, though, coming out yesterday saying there is stepped up security here, a larger perimeter around the Superdome where the game's going to be played, more officers and federal agents, more bomb sniffing dogs. He says he will be there and believes at kickoff the Superdome could be the safest place in the world. Joe?
Let's hope so, Jay. But it seems like just implied in everything, there are other bad actors around. It sounds like. It sounds like almost for sure. Would you agree with that?
No, Joe, I think you're dead on with that. I think that they are actively looking for others who may have been involved. The chief of police here in New Orleans today said that while there have been no arrests, and it's now been over 24 hours since the attack, there are what he calls people of interest that they are looking at. So that is a very key element of this investigation, and something that in the Airbnb here that we just talked about, where they believe some of the explosive devices may have been built, that those accomplices could have been in that home as well. So that's something they're really keen on right now and trying to get answers.
And we always ask, Jay, who are these people that run?
Man, don't ever kill anybody for religion purposes. That's for sure.
Fire coming at them and engage us, because who knows how bad this could have been in such a crowded area. A guy with an assault rifle and IEDs, and you just got to hand it to the bravery of these these first responders. It's amazing.
Yeah, and Joe, no question, federal agents as well as local police say that those officers on the ground saved lives by running to the incident and again engaging in a firefight with this suspect. He was taken down.
Oh yeah, he killed a lot more.
Were injured, but we are told they were released from the hospital and are going to be fine.
That's great. Okay, that's good. Anyway, Jay, thanks for your reporting. We appreciate it. Okay.
One other thing to kind of look at with these issues is Turo, the app where you're renting these cars, was used in both of these.
Right.
Airbnb used in this. Turo's described as an Airbnb for car rentals.
Right.
And I was just thinking about it. I have not used Turo, but I have used Airbnb, and I don't think I've ever been required to show my proof of identification, like you do when you check into a hotel or something. I guess it also gives you the added benefit if you have a house.
You got to show your personal ID. I did. I had to.
Something off along those lines.
Exactly. That's true. We gotta go. Squawk Box will be right back.
Huh. You gotta, I think you got to, man. Proof of insurance? Maybe I'm wrong. I've only rented a car once. Yeah, this 292.13 is a real solid resistance, but we have a nice little breakout pattern here with an ascending triangle and an inverse head and shoulders. So if we pull back to the 63, I think that's going to be where we want to take it today on the one. Well, that's the 5 minute. Let's look at the 1 minute. Same thing, be the 200. Right about there would be our support level. What do you think, Randy? It's more obvious on that 5 minute, that inverse head and shoulders. Well, I'm going to go do my thing. Man, I love it. God, I'm glad I got a new mouse. It's making the whole difference of the world today. And I got a new keyboard too. It won't be as loud. That's the 1 hour. And that's got to break the 200 on the 1 hour. So right now I'm just using the top of this here trend line on the 5 minute. A lot of people don't use that 1 minute, so I'm going to kind of move around a little bit when I'm start charting in 2025 and show 5 minute time frames.
Welcome back to Squawk Box.
1 hour.
Here's the futures this morning. Almost 400 points for the Dow of upward moves this morning, and pretty nice in the NASDAQ as well, 268 points. One of the biggest stories of 2024 was the move in Bitcoin prices, and right now we're seeing 96.5 or so.
Clock stop.
$1,000. Got it was well above 100,000 for a while, but recently a lot of the sort of the risk-on assets have
What did it do
pulled back.
there?
Not everything, but Bitcoin did a little. Let's check out the price of oil, which could be an interesting story for 2025. That's where we're starting, 72 in change here. It's January 2nd, if I got that right?
It is.
Okay.
Well done.
Huh.
What day of the week is it?
More importantly, what year is it?
2025.
Great.
Maybe I hit it or
Yeah, it's
something.
Thursday. Feels like
That's tough. It does feel like
yeah.
one day. All right, when we come back, what will the new year hold for world health?
Let's just see if it was still
From the cold
ticking.
flu season to weight loss drugs. Former FDA Commissioner Dr. Scott Gottlieb will join us.
We'll do that next
all of our
time.
questions. That's next. Squawk Box returns after this quick break.
Okay. Scott Gottlieb. So what was that pivot point again? I'm gonna chalk that up on the 1 minute. It's 587. It's the last 3 digits. 587. Oh yeah, I'm gonna love this. It's a lot better than what it was. Gosh, can't believe I went on so long doing that. Which now could probably become support. So let's change that to support. That's low support. And this here's your first one. The 200, 200s. on the 1 minute.
CNBC.
History suggests bullish days ahead.
You do in your household. We are in the thick of.
Okay, well, I'm gonna get out of here, and I'll be back
Joining us
at
right
open.
now with this and much more is former FDA Commissioner Dr. Scott Gottlieb. He is now a Pfizer and Illumina board
Scott
member, also a
Gottlieb.
CNBC contributor. And Scott, let's talk through where things stand. A lot of people probably realize this. They've gotten through the holidays and maybe have had some sickness that have come through their households. How bad is it on a national level?
Well, if you look historically relative to past years, it's not that bad right now. We're probably in the peak season right now with flu and RSV and COVID as well. So we'll probably peak over the next several weeks. Right now, about 5% of all visits to emergency departments are for influenza-like illness. It's higher among kids, so it's as high as 13% for kids aged 0 to 4. But overall, it's about 5%. We'll probably continue to go up for the next week or two and then hopefully start to come down with flu A and with RSV as well. The RSV season was a little bit late this year.
So it's maybe just kind of all colliding at the same time because of the later RSV season? Too?
Yeah, it's a confluence of things. And RSV usually hits earlier, it's hitting a little later. COVID's starting to peak around the same time. So I think there's a sense that there's a lot of coughs and sniffles around right now, and there are, because all three of those, epidemics are converging.
What about norovirus? I feel like I know some people who have come across with that.
I almost sent you an article that said it was the worst year ever for stomach-borne on cruises. She's got this.
No, I'm not going on a cruise.
I know, but it was the worst year ever. I thought about you because I would send you some 15%
I don't
off
take
on
cruises, and that's a big part of the reason why.
Yeah,
actually, it's only part of the reason.
We just dealt with this in my household. My 11-year-old had norovirus for 24 hours, so it's 24 to 48 hours. It's spread fecal oral, so people who don't wash their hands in restaurants or don't take good care.
Those two words shouldn't go together.
Not right for breakfast, but this can spread within a household if you're not careful. It's very easy to spread within a household as well.
Highly contagious.
Right, and it can be very bad. You can have severe vomiting and diarrhea over a 24 to 48 hour period. So if you can't keep fluids down for that length of time, you can get into trouble very quickly if you're older or younger. So it can be severe. We're seeing a lot of it right now. It's an unusual peak of that virus this time of the year. So there's a lot of.
You know what? I did read. I was reading up about it. It can't be killed by using those hand sanitizers.
That's right.
You gotta wash your hands, wash them really well for at least 20 seconds, and maybe people should think about that too.
And it can live on surfaces for a while.
Well, don't pee on your hand. I have like three really.
It's not pee.
It's not pee. It's poop.
Well, okay. I got three really sensational type things to talk about with you. Can I ask you about them? Is the for-profit model still what we should use for healthcare after? Well, because it's a legitimate question. If you don't, the fire department doesn't try to make money. I still think that for-profit, it does make you mind your P's and Q's, but it does seem to cause people to pull back care that's necessary in certain. I'm talking about the whole United.
Yeah, well, look,
how should we fix this?
When you think about companies like the for-profit health insurers, what they're really doing is implementing plans on behalf of the government and on behalf of employers. So people who don't like the benefit structure, the prior authorization, what they're doing is implementing constraints that are being imposed by the contracts that they have, either with the government agencies like Medicare Advantage, or with self-employed businesses that are contracted with them to administer the benefits. So it's really the benefit structure that people are entering into that's imposing them.
Yes and no. It wasn't just the Wall Street Journal or the New York Times that laid out this huge investigative story, taking a look at how sometimes United Health in particular is the one they focused on, but that there were doctors involved who were, and the setup for the doctors involved in their own healthcare was they had to go through this checklist. And it was set up to try and get you to say that these are that your patient has some really crazy diagnosis before you even saw them. And these happen to be the ones that Medicare paid out the most for.
Yeah, look, the tactics people can take issue with in terms of how the employers are trying to impose cost constraints, but they're imposing those cost constraints on behalf of consumers for the contracts, for the companies they're contracting with.
But so, United Health's profit margins are based around the idea of how much more they can bilk out of things.
Yeah, look, and I'm not trying to defend United Healthcare. Their profit margins are slim. I can tell you when I worked at the Medicare agency, so I worked at CMS, and we were implementing the Medicare Advantage plan, we looked at the for-profit health insurers as the entity that was going to impose the cost constraints so that we didn't have to do it in the government. The alternative is to have government agencies administering these rules and imposing these constraints.
Yeah.
That's going to be more remote from the consumer. I mean, as much as there's angst in dealing with your health insurer, imagine trying to deal with the federal government on these things.
Yeah.
So the government basically outsources this to the private health plans. If you take it back from the private health plans, someone is going to have to impose that cost constraint and implement measures to do that. It's either going to be these for-profit companies or the government. I think properly regulated, this is the right model. We can quibble with whether or not they're being properly regulated and they're doing things that are excessive.
And everything's related. So Robert F. Kennedy Jr., certain things are very controversial, but lifestyle issues and food and obesity in this country, if we could get a grip on that, I think the costs would immediately be more manageable.
Yeah, look,
is he a person who could be effective in that role? I mean, do you think he's going to?
You weren't here when Scott came on to talk about his thoughts on our earlier.
I haven't seen him articulate a policy plan for how to actually implement his aspirations. I can tell you, when I was at FDA, we implemented the calorie counts on menu labels that are now, when you go into a restaurant, you see the calories. We implemented the regulations.
I love them. I want to know what
they let you give more choice. We implemented a regulation.
I can't order anything, thanks to you.
To try to reduce salt in the food. Those were extremely controversial moves. I faced a lot of backlash from conservatives mostly who felt that they were nanny state type politics.
Yeah.
You know, RFK's talking about firing the nutrition staff at FDA, and he talks about the corruption at the FDA. If you wanted to if you were serious about implementing more regulation on food to try to reduce additives, that probably
so you
aren't
don't think
helpful.
he wouldn't be good, and you don't want him.
Well, you'd be beefing up that staff. You'd be beefing up the nutrition staff.
Do you think he doesn't get okay?
Well, you'd give them more regulatory tools over food ingredients. That's not what they're talking about. So I worry that they're aspirational. They're not talking about how to actually implement these things in policy.
He had come on before when you weren't here and raised his concerns about some of the other issues there. Kimberly Strassel at the Wall Street Journal has written in her piece on why she's opposed to some of the policies too. I don't know if you want to.
Well, my concern when we spoke was around the vaccine policies, not around what he's trying to do on food. I think what he's trying to do on food, at least at an aspirational level, can provide a lot of public health benefit. What I worry about is I don't see them articulating how they're going to implement that as a matter of policy, other than some things that are more talk pointy. I'm very concerned that they are deadly serious about trying to reduce vaccination rates in this country around the childhood immunization schedule, measles, mumps, and rubella, and pertussis. They can disband ACIP, the advisory committee to the CDC. They can make it harder to take the money for the Vaccine for Children's Fund. There's a lot of things they can do day one that could dramatically lower rates of vaccination for children. That's what I worry about. That's my concern.
Do pharmaceutical companies advertising, and it drives me nuts. And you know, I love nightly news, you know, go Lester, but if you were to get rid of advertising for pharmaceuticals, I don't know where the advertising would come from, but is it really productive? Someone saying it causes people to look at things that they might not otherwise ask their doctor about. I think that's crap.
Yeah, look, well, I said that.
I want the purple pill, and I don't even know what it does. They've got me wanting the purple pill. Why do I want the purple pill? What's it do? Do you know the purple pill?
Well, look at it. Two domains, right? At a business level, it will reduce revenues from the company standpoint. But from a public health standpoint, we've looked at this when I was at FDA many times because this has been controversial. The ads do drive people into the doctor's office with specific complaints, with self-recognition.
Hypochondriacs. They should be using it on research and innovation, Scott. I'm inundated. Do you want me to sing the Ozempic song? Do you want me to sing the Jardian song? Jardian, these people, all these overweight people are like getting together and marching down the street and looking at each other. What is that BS?
There is a net public health benefit from the help-seeking behavior that people engage in.
Oh, listen to you.
No, it's true. That we are going to debate whether or not that's powerful enough to justify the advertising.
All that money.
But it's going to be very hard for them to regulate those advertising.
I used to love the pharmaceutical company. Now I'm starting to wonder. I have my doubts.
Constitutionally protected speech, the advertising, so it's going to be hard to say the companies can't do it.
No, I'm not saying they can't, but as a shareholder, why don't you spend it more effectively instead of trying to talk people into...
Should shareholders push that, or should the government say you can't?
Not the government, no. Shareholders.
Well, look, from a shareholder standpoint, it drives revenue. That revenue goes back into R&D. So there is a business intent here. There's no question about that. But if you look aside at the public health implications, it does get more people diagnosed. Notwithstanding the fact that it imposes a lot of burdens on physicians who have patients coming in asking for things by name that sometimes they have to dissuade them about because they're not properly indicated.
You seen the
for.
stomach dancing around? You know, stomach is a gross looking thing. Have you seen it? It's a stomach dancing around, singing.
I haven't seen that one.
Box. That is gross as the poop in the box.
Yeah, Scott, stop.
We didn't even get to bird flu. Every time you're here, we have more questions than you can field, only because they're
Bird flu's not happening,
it's not a problem,
is it?
right?
It's not circulating right now, so we have a very good system in this country for sequencing strains of flu. People who get diagnosed, we've sequenced upwards of 75,000 people already this season. If it was circulating, we would have detected it. This isn't like COVID where it's circulating quietly and we're not picking it up. That said, you know, most people believe this likely isn't going to be an event, but if it does become an event, we're not well prepared for it. We've done just about everything wrong to try to prepare for this, including not stockpiling the full armamentarium of antiviral drugs that we would need. You probably need Zofluza, maybe amantadine. We've only stockpiled Tamiflu. If you look at the cases that were reported 2 days ago in the New England Journal of Medicine, patients who got very sick, just a handful of patients who got very sick where this got into the lower airway, the virus managed to mutate around Tamiflu. So you do worry that we don't have the drugs that we need on hand if, in the unlikely event, this does break out. And again, very unlikely, but a low probability, potentially high impact event that we should be preparing for.
Scott, thank you. Dr.
Thanks a lot.
Gottlieb, we'll have you back soon. Appreciate
Thanks.
All right, coming up, the next session of Congress is going to begin tomorrow. So we got that going for us, which is nice. And House Speaker Mike Johnson will be fighting for his job on day one. More on that battle next. Squawk Box coming right back.
Well, Congress is back in session tomorrow, and lawmakers will hit the ground running with House Speaker Mike Johnson fighting for his job. Emily Wilkins joins us right now with more. Emily, he's fighting for his job, but he does have the support of incoming President Trump.
You're absolutely right, Becky. Trump might have given Mike Johnson his complete and total endorsement the other week, and yet that doesn't seem to have done the trick. It's just not clear how long it could take Johnson to win the gavel. Obviously, he went 15 times with Kevin McCarthy. Once the new Congress, they're going to begin tomorrow at noon. This is the very first thing on their agenda. Nothing else can happen until we have a speaker. And at this point, Mike Johnson can really only lose about 1 to 3 Republicans before he's going to need to vote again. Of course, that depends on if you're voting for a person, if you're voting president, that changes the math. But Johnson needs a majority of everyone who votes for an actual person to be able to get that gavel. And that could go on, as we saw last time, for multiple times. At least one Republican congressman, Congressman Thomas Massie, has already come out saying that he won't back Johnson. In a lengthy post on X explaining his decision, Massie criticized Johnson's leadership, saying, quote, that it is Mike Johnson who routinely passes major legislation, like Ukraine, Omnibus, visa, with only a minority of Republicans, and then relying on most Democrats. Massie went on to say that he also owes his current speakership to the Democrats. Of course, there was that vote to again oust Johnson, and Democrats came in to save him. So about a dozen other lawmakers have continued to express some concerns about Johnson. We also had Congressman Chip Roy saying that he's undecided. He posted on X that change was needed. He's saying that the GOP was divided on a last-minute cram down to force approval to borrow $5 trillion more without a plan for, much less of an actual penny of spending cuts. And then he goes on to say all of which could have been avoided with any serious planning and communication. So criticism there, of course, the spending debate that happened back in December. But look, it's not clear at this point. If it's not Mike Johnson, it's not clear who else would be able to win the Speaker's gavel. Of course, last time, the Republicans who opposed McCarthy used this Speaker vote as an opportunity to negotiate rule changes and get promises from McCarthy. We'll see if there's a similar tactic here when it comes to Johnson and what these members might want and what Johnson might be willing to give. Becky?
All right. It's going to be interesting. Emily, thank you. Emily Wilkins. When we come back, Tesla expected to roll out delivery numbers today. We'll get a preview of what could be ahead for the EV maker. Squawk Box is coming right back.
venue.
All right, Tesla deliveries are due later today. Joining us right now to try and figure out what to expect is Mark Fields. He's former Ford Motor Company president and CEO, also a CNBC contributor. And Mark, what are you anticipating? We've talked a little bit earlier with Phil LeBeau about what to expect, but there's a lot riding on this for the company.
Yeah, I mean, listen, the big question is, are they going to be able to eke out some growth? I think you heard the numbers. They have to deliver about 515,000 units in the fourth quarter to get a little bit of that growth. I think they'll do it, right? Because the PR value, if you will, of being able to say you've grown for another consecutive year, I think is important for them. But if they don't, this is going to be the first year that they actually have a year-over-year decline in total yearly sales.
And it's happening at a time when Tesla shares have taken off. Now, granted, a lot of that is because of the expectation that Elon Musk's close relationship with President Trump could mean good things for the autonomous point of view. What has to happen in order to really see what's coming next for Tesla shares?
Yeah, it's a great point, Becky. You've seen the run-up in the anticipation. Now it's about delivering. And listen, the big question is, has he, alienated his left-leaning consumers with his embrace of Trump? At the same token, I think you're seeing in the fourth quarter a little bit of a sugar rush of people rushing to buy EVs potentially before the EV incentives, the federal incentives, potentially could come off depending on what Trump wants to do. I think for this year coming up, it's going to be all about, introducing new models. I think you're going to see them focus a lot on affordability. So I think their Model 3 and their Model Y, you may see some lower price versions, either because they've made some improvements in the battery efficiency, the electrical architecture, or they're just decontenting the vehicles. At the same time, I also think, you're going to see some, they're going to have to show some progress on their autonomous driving. Musk has spoken about that many, many times. He introduced the Cybercab last year and said it was going to come sometime in 2025. And as you know, he has a history of not delivering on those promises. But those two things in particular, I think are going to be really important for them to deliver on to justify this run-up in the stock.
Hey, Mark, can I ask you about a separate question? I don't know how familiar you are with Turo, but as someone who ran Hertz car rentals, I haven't used Turo before. I know that if I go to a Hertz Hertz stand to rent a car, I'm going to have to show my ID. I'm going to have to prove that I'm at least 25. There's going to be pretty vigorous checks that go through this. And I'm asking this, of course, because of what we have learned today, that the vehicles driven both in New Orleans and in Las Vegas in these attacks were both rented on a Turo app. Now, they may or may not be connected, but for somebody who's not familiar with how Turo works, are you? Could you walk us through it?
Well, I'm not intimately familiar with them. All I know is it's all app-based. And so, a lot of it is based on the information that they're putting on their profiles and that they're being trustworthy in doing that. I think it is interesting that both these vehicles were rented by Turo. And, clearly Turo has said they're helping with the investigation. But I think what we may see is, they're going to up their game in terms of, the backgrounds on their customers. But this is, it's never a good thing when your vehicles and your company is in the middle of, a tragic incident like this. But both vehicles being rented through Turo, that may be more than just coincidence.
Yeah, we're waiting to hear more from the investigators on this. It's a different relationship when it's an app, because what they're doing is basically just putting a buyer and seller, or someone who wants to rent a property with someone who has a property, whether that be a car or a house. In the case of Airbnb, they're also doing the investigation there. The apps have always had a little bit more arm's length distance from that, just basically putting the two parties together as a transaction, where if you were walk into a hotel, you have to show your ID before you can get the room rented there. Same story with renting a car through one of the traditional agencies with this. It's just been something I'm kicking around. Mark, I want to thank you very much for being with us today. We appreciate it.
All right. Happy New Year, Becky.
Happy New Year. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan. Andrew is off today. Among our top stories, authorities are still looking for people of interest related to yesterday's truck attack in New Orleans. That's according to the city's police superintendent, who spoke with the Today Show. 15 people were killed when an attacker drove a truck into a crowd of New Year's Eve partygoers on Bourbon Street. The FBI identified the driver as 42-year-old Shamsuddin Jabbar, a U.S. citizen from Texas and a U.S. Army veteran. He was shot dead by police after the crash. The FBI said other potential improvised explosive devices were found in New Orleans' French Quarter. President Biden said Jabbar posted videos hours before the attack saying that he was inspired by the Islamic State group, and that truck used in the attack also carried an ISIS flag.
Futures on the first trading day of the new year, which we always look at January, early the first day of January, and then the week, and then the month itself, and try to figure something out. It might work, maybe not. Let's look at treasuries as well. Those could be even perhaps just as important as anything that on the 10-year if it continues to confound the rate cuts coming from the Fed. Let's get to Dom Chu with a look at this morning's pre-market movers. All resting on you, Dom, to get January started off on the right foot.
Well, I mean, we're still in that Santa Claus rally period, right? The first couple of days in the new year as well. So we'll talk all about those seasonality factors throughout the course of the day, I'm sure. But we'll start off the morning movers today with a check on cryptocurrencies of all places, because Bitcoin is starting the new year off in the green, but still below that record high of just around $108,000 per Bitcoin. That jump is kind of boosting shares of crypto-aligned stocks like MicroStrategy and Coinbase. Now, MicroStrategy, remember, had slid about 12% this past week after it scaled back some of its weekly Bitcoin purchases, but MicroStrategy and Coinbase each up around roughly 4%. Bitcoin's at 96,700. Meanwhile, let's turn to shares of Uber. Those are up about 2% after Goldman Sachs initiated that stock and put it on its conviction buy list. Analysts there say Uber will continue to see bookings growth and further penetration in less dense markets. Goldman has a $96 target price on the stock. That implies a roughly 60% upside from Tuesday's close. So Uber shares up about 1.5%. And we'll finish with defense. RTX is up more than 1% after Deutsche Bank named the company a top pick for 2025 and upgraded it to a buy from a hold with a target price of $140. That's up from $131. It expects profit growth to outperform the broader defense sector in the longer term. Meanwhile, Lockheed shares are slightly down after Deutsche downgraded it to a hold from a buy, concerned about the long-term support for the defense giant's F-35 strike fighter program. So those shares, keep those eyes on those defense stocks. Now, for more on that and other top calls of the day, just head over to cnbc.com/pro. Subscribers get full access to detailed analysis behind all those big analyst calls, Joe. I'll send things back over to you guys.
Do you gain any weight over the holidays, Dom? Do you know?
I did. No, I did. I track it specifically like many Americans do.
Me too.
Kind of towards the end of the year and into the new one. I have gained roughly 7 pounds in just the last 2.5 months. So I've got to get back on the
No, we do. We do. And any resolutions? What do you think we should do?
I will always say this because you know, this is. I mean, it's not so much the carbs. I think I just have to eat better. When I tend to eat, I tend to eat things that I enjoy, and I enjoy them a little bit too much. So this year it's going to be a concerted effort on just more fruits and vegetables. I tell it to my kids. I will do it to myself as well. So.
I hate fruits and vegetables. Maybe less.
I have a banana at my desk right now.
I can't ask Becky. I can't. I'm going to ask your Denny whether he because you can't ask.
I told him when he asked you. He said he was going to ask you. I'm like, well, because you can't ask.
Better ask him because I can't ask her.
Green juice, guys. I got a lot of green juice. That's coming up in my future, I think. So
the problem is you got to stop everything else. You got to drink the juice and then not eat all the other stuff.
I will admit this, guys. I grilled. We cooked at home yesterday, and it was a bone-in ribeye for everybody in my family.
No fillets, man.
I know.
Fillets.
I know. It's
400 calories versus 1,500, Dom.
The marbling is so good, though, on some of those ribeyes.
You're right.
Anyway, guys, I'm done. I'm done.
All right, less than 90 minutes away from 300 pounds. Less than 90 pounds away from from the first Wall Street opening bell of 2000. No, I'm not 210.
I wouldn't think.
209.
No, you're not.
Oh, I am. Oh, yes, I am. What about you, Ed?
Oh, I thought you were
joining us, Ed? No.
What about you, Becky?
Joining us now, Ed Yardeni. I don't hide anything. Ed Yardeni, I'm right? It's the desserts, it's the...
Absolutely.
Right.
It's the dessert, it's the entree, it's the salad,
Is the market going to lose weight this year, or you still like it?
No, I still think the market's in good shape. I'm very optimistic on the earnings outlook because I'm optimistic on the outlook for the economy. I think we're going to continue to see better than expected productivity growth. And I'm actually using $285 a share for the S&P 500 this year.
How much?
Well, it's
Like
more than
15%?
Yeah, it's more than the other strategists. And as a result, I'm looking for the S&P 500 to go up along with earnings rather than valuation. And I think it can get to 7,000 by the end of the year. But it's not going to be a straight line. And I would think that in the next few weeks, things are going to be somewhat bumpy.
You like the economy because it's been going well? You like anything Trump's supposedly going to do? Are you worried about anything Trump's going to do?
Well, maybe I've been sticking with a bullish view for a while. You know, for the past 3 years, we've had the most widely anticipated recession of all times that didn't happen. And it made sense to a lot of people that if interest rates are going to go up, you get a recession. We argued that that wouldn't be the case. So the economy's proven to be remarkably resilient. And now the Fed's not raising interest rates. They're talking about how much they're going to lower interest rates. And the consumers are in great shape. I'm still working for a living, but a lot of my baby boom friends are retiring, and they're sitting on like $75 trillion of net worth is what the baby boomers have. So they're going to have a negative savings rate, and they're going to spend it no matter what. Actually, they love higher interest rates because they get better returns on their liquid assets.
AI factors into everything you're saying, I guess, too, right?
Well, I've been talking about the roaring 2020 since 2019, and of course I didn't know that AI was going to be the kind of hit that it's been so far. But AI does factor in, as does robotics, automation. And the whole idea is that, like the 1920s, we're seeing a productivity-led economic boom that increases standards of living.
Inflation? Slowing economy? Neither?
Well, you know,
what is this, Goldilocks? Everything's just right?
Well, you know, Goldilocks has kind of been there, done it, so I prefer roaring 2020s, and the idea is productivity. And productivity is like fairy dust. It makes everything better. You get better than expected growth.
Where's it coming from, Ed?
The productivity is, I think, a couple of things. One is there's a shortage of skilled labor, and there's no shortage of new technologies, software, hardware, that can augment the productivity of workers. And I think we're already seeing that. I mean, it's really not a forecast so much as just an extrapolation of what's been going on. Since 2015, productivity growth has increased from 0.5% at an annual rate to 2%, so it's quadrupled already. But 2% is kind of the historical average. We've been kind of doing lower than that. And I think we're going to do 3% over the next couple of years.
Why do you think we're going to have issues in the first few weeks of the year?
Well, you know, I think we always focus on the macro, on monetary and fiscal policies. And with monetary policy, you know, you kind of need a neck brace to deal with what they're signaling us. Maybe they should just stop talking and just do what you're going to do and leave it at that. But right now they've kind of semi-pivoted from very dovish, we're going to lower interest rates several times, to, well, you know, maybe we need a pause here. So I think there's a pause in monetary policy, so we're not going to feed the market more rate cuts right away. And then, of course, fiscal policy is very confusing. We've got issues of immigration, deportation. We've got issues of tariffs, which could be inflationary, could hurt the economy. Whenever I talk about the roaring 2020s, people remind me, yeah, but the 1920s ended really badly. And we're about to see what impact tariffs are going to have in the economy. So I'm not dismissing the possibility that things could go wrong, but I don't think this is going to be like the end of the 1920s. I think we'll get through this tariff mess in some form. But I think it's going to take a few weeks here, maybe several months, to get a clear view of fiscal policy. And we also have to get a clear view of, you know, whether this thin margin that the administration has in Congress is going to be enough to get their policies through.
We also got to figure out whether adding $1 trillion of debt, I forget what the length of time is, but it's happening right now.
Yeah.
And I don't know, do we ever get to the point where the government needs to pay higher interest rates to keep rolling everything over, and then the debt that we were already paying on, interest rates are higher, so our interest rate, all these things seem to.
Well, I think
none of that ever comes home to roost.
Well, I think in some ways it did. Last year for 3 months we had a debt crisis where the bond yield went from 4% to 5% in a very short period of time. I think that was sort of a glimpse of the possibility of a debt crisis, and I think we're seeing kind of a repeat of that right now with the bond yield having been at 3.65%.
But it never gets that serious to you.
Well, no, I think it's an issue, and I think it's a political issue that needs to be resolved in terms of.
But still 7,000 on the S&P.
Still 7,000 on. Look, I've been doing this for a while, and the Bears have always pointed out the deficit as a problem. One of these days it will be a problem. I've been saying I'll worry about the deficit when the bond market's worrying about it. So I have to admit, I'm worried somewhat. I did anticipate that the bond yield would go up as the Fed lowered rates, because I didn't understand why the Fed needed to lower rates, given the resilience of the economy.
All right, Ed. Thank you. I'm banking on it. 7,000. Doesn't really matter. We'll cover it either way. Sometimes it's better when it goes down for us.
Well, so we're waiting for an opportunity to buy too. I should say that. Thanks, Ed.
Thank you.
When we come back, we're going to talk geopolitics in 2025 with former ambassador to NATO, Kay Bailey Hutchison. The new year starting with some significant question marks surrounding Russia, Ukraine, China, and the Middle East. Stay tuned. Much more Squawk Box just ahead.
Our next guest joining us to weigh in on the slate of geopolitical challenges ahead for the incoming Trump administration, including conflicts in the Middle East, Ukraine, tensions with China. Let's welcome Kay Bailey Hutchison, former U.S. ambassador to NATO, the former senator of Texas. And it's good to see you, Madam Ambassador, Senator. You've been a longtime friend of the show, so We can go with the, swing with the way your titles are going. What do you prefer, ambassador, senator?
Oh, Joe, hey you is what I usually answer to.
Okay, yeah, obviously from Texas, everybody answers to that, I think.
We do.
You know what? When I said NATO, I immediately thought Ukraine. I immediately thought of everything that is happening there, and whether the new president really has a chance, in your view, of doing something with Ukraine and Russia that's lasting. Is it possible we could come up with something? Do you think?
Yes, I do. I respect General Kellogg. I think he has all of the right tools. I think it is important that we continue to support and work with Ukraine. They are a sovereign nation. President Putin from Russia has not acknowledged that, and I think we need to keep our word to Ukraine. We promised a long time ago that we would help Ukraine if they would give up their nuclear weapons. And we need to make good on that promise and allow Ukraine to function again.
Will Ukraine insist on being in NATO to come to some type of agreement? Would that ever be palatable to Putin?
Well, eventually, certainly Ukraine is on the cusp of going into NATO. Ukraine, at this point, I think we're talking about a security agreement that would assure that when there is a settlement, when there is peace, when there is a negotiation, that Ukraine will have a security umbrella that would be with a coalition of the willing. It would be many NATO countries, including us, of course, but others as well, so that we know that Putin can never again invade this sovereign nation.
That's probably not going to satisfy Putin at this point. He still wants something very specific, doesn't he? Like kind of a Belarus-style situation with Ukraine. He's expended a lot of money, a lot of casualties. I don't know whether he cares about political capital, but he's all in. And I don't know how he's gonna, if he doesn't accomplish what he wants, I don't know why he'd stop.
Well, he's certainly made the case before Trump comes into office that he wants everything that he has invaded to be his, and that is exactly where we have to draw the line. I think we have an example in Europe, Kosovo, where there is a multilateral coalition that is trying to keep the peace. It's a NATO mission, but it is a coalition of the willing. And I think you could have something in these areas that would stop the bloodletting and allow them to come together in a place where these Donbass and Crimea have some security neutrality, and that then the rest of Ukraine can begin to be rebuilt with Russian money, by the way.
I don't know what the answer or the situation in the Middle East, I don't know how you'd characterize it. And then there's Syria, and there's a piece in the Journal today that says that even though Mr. Trump, President Trump-elect Trump doesn't want to get involved, you do not want Syria to become a jihadist state where it could be a breeding ground for terrorists. Iran seems to be in a bit of a back on its heels with what's happened recently. How would you approach our relations in the Middle East? And obviously Israel probably is going to be emboldened by a Trump administration, I would think.
Well, I think that we have to really just say outright, this is Iran. Hezbollah, Hamas, the Houthis, they are Iranian proxies, and we have to deal with strength with Iran to try to settle much of the Middle East. I think the administration was on the right track, and I know that we would continue to work with Saudi Arabia to try to bring Israel into a normalization in the Middle East and to really take out the Iranian threat of missiles that would have nuclear capabilities.
And do you think in the near term, either the United States, Israel, or a combination, take some steps to neutralize that capability in Iran, nuclear capability?
I think that that's on the table for sure, because I think Iran has been violating the agreement that we made years ago, and they're violating their word to the Europeans who also signed on to the agreement. And I think that, yes, that should be on the table. I think certainly if some diplomacy can be opened with Iran, that would be great, but I'm hopeful, but not really thinking that's a possibility.
Just in closing, and overall, do you think that a Trump presidency is going to, we've seen his enemies say that he's so mercurial and impulsive that the world's a more dangerous place, that we've had his defenders say it was much safer during his last, there were not as many hot spots in his, his first 4 years as president. What do you think the future holds? Can you say?
Yes, I think he will make our world much safer. I think the administration is going to operate on peace through strength, the Reagan mantra, and I think that is I think already you're seeing the adversaries like Russia and China say, oh, well, we're going to rattle our sabers and we're going to be tough. Well, they know that they're going to deal with a new administration that is going to be tough and do what it says it's going to do. And I think that will come out as a safer place, because the world today is not safe.
Right. Ambassador, thanks for your time. Are you still gonna be active in this next administration, do you think, Madam?
No, I'm not going to be active in this administration, but I certainly am going to be hopeful and supportive of ways to keep America strong and to work with our adversaries in a way that they know we mean business and we are going to be a good ally and a feared enemy.
Great. All right, Happy New Year. Thank you, Madam Ambassador. We'll see you again soon. Senator.
Hey, thank you.
Okay, well.
Still to come this morning, the corporate C-suite shuffle, moves being made at major companies to start the new year, including Apple and Charles Schwab, and a board change at Morgan Stanley. We'll talk about what's ahead for these and other names. Stay tuned, you're watching Squawk Box right here on CNBC.
CNBC.
Coming up, our first economic data point of the new year, we're going to look at initial jobless claims, because it's a Thursday. It's not a Monday. After a break, stay tuned. You're watching Squawk Box on CNBC. The futures, as we approach the jobless claims data, you can see it's still strong. They were up a little bit more actually earlier. Standing by at the CME in Chicago. So far, so good now for pre-market. Rick Santelli, the numbers, please.
Yep. Yes, these are the first numbers of the year, as you pointed out. Initial jobless claims expected to be in the neighborhood of 221,000, comes in 10,000 light to expectations at 211,000, which makes it 9,000 below a slightly revised last week, which was 220,000. Continuing claims, which, by the way, last week crossed over 1.9 million for the first time since, going back to November of 21? Once again, for about the fourth time, gets revised away. Current week, 1,844,000, way on the light side, below expectations. And last week, as I said, originally 1,910,000, first since November 21, gets downgraded to a whisker under 1.9 million at 1,896,000. Now, all these numbers are going to have asterisks because holiday weeks, void of certain work days, are going to make these maybe appear a little different, usually a little bit lower. So we're going to have to wait a week or two really to get the GPS. But you can see that the trends are still in place. Maybe the most noteworthy news this morning is the dollar index. On a day where interest rates have been moving down, is making fresh highs going all the way back to November of 2022. Let's call it 26 months. And I do believe that the dollar will be a big factor in 2025 as we try to factor in all the various legislation that may come on the books with the new administration. As far as interest rates go, the 30-year bond, Joe, gave us a great signal last couple of trading days of last year when it hit a 481, which is a double top on the yield closing basis, and has reversed lower. It was the last maturity to give us such a signal. I really do think that some of the high yields, at least temporarily, maybe for a couple of weeks to maybe even the first quarter, may be in place. I wouldn't look for a big downgrade on yields on long maturities, but I do think the, almost getting to the mid 460s in a 10-year will be the kind of high watermark for a bit as we really try to look at some of the data points and see how much the economy may have lost. If you look towards some of the first fundamental economic releases throughout Europe, we continue to see quite a bit of weakness. Back to you.
Okay, thanks, Rick. We got a clean slate. Clean slate every year at this time. It doesn't last long. That would screw it up somehow.
By next week.
Yeah.
All right, let's pivot to the broader economy as we begin 2025. Lawmakers in Washington will be forced to tackle the debt ceiling this year. Also likely on the docket, a push by the incoming Trump administration to renew and perhaps expand its slate of tax cuts. Joining us right now to talk about these and other big economic issues that we're facing, Douglas Holtz-Aiken, who is president of the American Action Forum and a former director of the Congressional Budget Office, and David Wessel, a senior fellow in economic studies at the Brookings Institution. All right, Doug, let's start with you. Just in terms of what we can anticipate, what are going to be the most trying issues? Maybe the first thing we have to deal with is what happens to the debt ceiling this year and how quickly you think that can get resolved.
I think there are three big ones that are just sitting out there we know we have to get past. One's the debt ceiling. The second is funding the government for 2025. Still haven't done that. And the third will be what happens to the Tax Cuts and Jobs Act, which sunsets at the end of the year. So those are three very big legislative lifts. I think first in line will probably be the funding of the government. They can push the debt ceiling off until late spring, probably early summer, and they will. And they probably won't get the tax bill done very quickly. I think the early indicators is the speaker election on Friday. Can they manage that process in a way that quickly elects a speaker, or is it going to be a protracted issue? There's nothing about their attempts to do a continuing resolution in December that leads me to think that this White House, House, and Senate team is really up yet to the management of these three big issues. They have to figure out how to run the trains.
And you're saying that based on what we've already seen, I guess, just some of the unruly House Republicans as we were heading out the end of last year?
At the end of last year, you had a plan, and the plan was to sort of have this big omnibus bill, which I didn't like, and a lot of people didn't like, but that was the plan. Everyone had signed off on it. And then the incoming administration undercut it publicly and undercut the speaker publicly. And, chaos ensued. Now the president has supposedly endorsed Mike Johnson to return as speaker. I don't know what that endorsement means, given that he undercut him 3 weeks before that. So I want to see if this group can manage the process of getting these three big issues done, because they have to happen.
David, Doug's right to point out those three big issues, but you can lay on top of that issues like immigration, tariffs, and many others that are out there. So how are you kind of viewing this? What are you watching for?
Well, I think the first moves are not going to come from Congress. They're going to come from the White House. And the big questions I have are, what does President-elect Trump do on tariffs? What does he do on immigration? And then after that, what will they do about taxes? But as Doug points out, the tax debate will go on all year. My concern is that they'll do things that hurt the economy first, like tariffs and reducing immigration or throwing a lot of people out of the country or whatever, and that will hurt the economy before the effect of any tax cuts can show up in 2026. I also worry about the possibility, Doug referred to the uncertainty in the House. We seem to be in a period where we can expect a lot of twists and turns, and I don't think chaos and turmoil are good for business. So I'm worried that things will be unsettled for a while till we figure out what are Trump's bluffs and what does he really mean to do.
Well, Doug, that's a good point. The idea that the administration may have to go over the things that go after the things that they can actually do themselves through presidential actions without having Congress sign off on some of those things, and some of those might not be as beneficial. It may actually hurt the economy.
I think David makes a really good point, and I would say more broadly that the economy's in good shape. We're growing probably north of 3%. You saw claims continue to be low, labor market solid. So At this point, the economic risks are the downside. We're more likely to slow than grow faster, and all of the policy risks are to the downside. The Fed may have underestimated the durability of inflation. Tariffs are bad news. The immigration policies are bad news. So, I mean, there's a real chance you have a rocky start to 2025. And I just want to point out, I think the notion that these tax cuts are going to do much for growth is a bit misplaced. All they're doing is extending current policy. That's not going to change anything. The question is, what do they do on top of that? And do they have the discipline to do a real pro-growth tax reform? It remains to be seen.
You know, David, we had Ed Yardeni here just a little bit ago, and he was talking about how productivity is what he thinks will save the markets through all of this. We've had phenomenal productivity growth, he points out, since back to 2015. I know that's an issue you've been looking at as well.
That's right. I think that, I mean, Doug is right. The economy is in good shape now, surprisingly good shape, much better than a lot of us expected. I think the downside risks are that we have some geopolitical turmoil, or as we saw in New Orleans, some terrorism. But the upside risk is that productivity growth, the pace is quickening. We had a period of rather sluggish productivity growth. Then we had the ups and downs of the pandemic, which are really hard to read. But for the last 5 quarters, non-farm labor productivity has been growing at better than 1.5%, which is sort of had been the norm for the last several years. And that's really encouraging. I don't know if it's going to last. These things are not well measured quarter to quarter. We know there was a lot of reorganization of the economy after the pandemic. Maybe work from home and flexible work is producing some benefits. Maybe this is the early signs of AI. But if we are on the cusp of even a small increase in an annual rate of productivity growth, that's good news for living standards, it's good news for the federal budget, and it's good news for wages. So we can hope that nothing that the Congress or the president does disrupts that trend. And some of the deregulation that Trump is talking about could contribute to that, especially if it unleashes some new investment.
Doug, as the former head of the CBO, what do you worry about in terms of whether or not we can set a budget and stick to it and make sure that we can issue treasuries?
We don't have to set budgets, and we won't stick to it. And I'm quite pessimistic about the fiscal outlook for the next couple of years. There's no evidence from his first term in office that the president has any deep commitment to fiscal discipline. You know, they can control the outcome with the reconciliation bill, and all of that looks bad for deficit outlook. So I think that's a real problem. There's nothing heartening about the current situation. We hopefully can just get past the first 2 years, have a midterm election, and have some folks that are serious about controlling the outlook.
But your concern just in terms of the fiscal responsibility, how do you think that impacts the markets? Because that's been where we've watched rates climbing even as the Fed was cutting rates.
Right. Yeah, no, we're watching it in real time. You know, long rates are not coming down. They've gone up since the Fed started to cut. That's some combination of expectation of continued higher inflation than was originally expected, which is consistent with excessive fiscal deficits at full employment, which we've seen already, and there's no reason to be doing. It's bad for the outlook. So I think we're already seeing the early signs of that. And I don't see any real evidence among the newly elected House, Senate, White House of a commitment to changing course in any deep way. Some lip service now that we didn't see a couple years ago, but no real desire to take on the issues that have to be taken on to change the outlook.
David, I'd just ask you very quickly. Go ahead.
No, I agree with Doug said, and although yields have gone up a little bit, the bond vigilantes still seem to be sleeping. So there's no political pressure to do anything about the debt, and there's no pressure from the bond market, and so why do you expect Congress to do anything? That's the problem.
If inflation is higher than anticipated, if it actually is really stubborn or starts to pick up, that's going to be an issue for the Fed. And if we think the Fed is changing its tune right now, that will be the one issue that really sets everybody on edge.
I will raise rates, yes, but will Congress think, oh my God, now we have to do something about Medicare and Social Security and maybe raise taxes instead of lower them? I wouldn't bet on that.
David, Doug, gentlemen, thank you.
You're welcome.
Thank you.
Happy New Year.
You too.
All right. Before we go to break, you know, going back to our conversation about eating and gaining weight and all that stuff, I'm not going to ask you anything, but someone wrote in, nothing would be more tiresome than eating and drinking if God had not made them a pleasure as well as a necessity at the same time. And you know what that makes me think of? Ozempic. It takes away, and then all you're doing is maintaining your existence. That's why I'm never going to take it. The thrill of eating and drinking, I don't ever want to feel that way. Do you?
No, that's a really good point.
It is. Yeah. And he was brilliant, he or she, to have really PC, I don't know, I'm talking about God. Coming up, the C-suite shift that investors need to know as 2025 begins. We're going to talk about some changes at Apple and other firms, right?
Yeah.
I'm glad that it's not.
It's not a natural.
But what if all you were doing was maintaining your existence?
Which is what happens when you get sick.
Yeah, bad. Stay tuned. You're watching Squawk Box on CNBC.
CNBC. Welcome back to Squawk Box, everybody. The futures this morning sharply in the green. Right now, you're talking about the Dow futures up by 350 points to start the new year. S&P futures up by 55. The Nasdaq up by close to 250, and we are coming off of a 23% gain for the S&P 500 last year. That was the index's second consecutive gain of more than 20%, and that's only happened 3 other times. The most recent occurrence was in the late 90s.
We are tracking some leadership changes at top companies as 2025 kicks off. Among the highlights, excuse me, James Gorman becoming Disney chairman and Ted Pick succeeding Gorman as chairman of Morgan Stanley. He's already CEO. And then Gorman is leaving to become chairman of Disney to help find someone for Bob Iger. So it's very weird. Apple's getting a new CFO. Charles Schwab is changing its CEO. We had the guy in, Rick Worcester, and join us to talk about these moves as well as Amazon calling corporate workers back to the office for 5 days a week. Paul Argenti is professor of corporate communications at Dartmouth Tuck School of Business. Before we talk about the individual, and Professor, it's good to see you. Before we talk about the individual instances we talked about, what's the big trend going to be? 5 days? Oh, is it ever possible we go to 4 days? I'm asking for a friend.
I think so. I mean, I think that could happen. I can't imagine 5 days for everyone into the deep future. It just doesn't seem like that's possible anymore, especially the younger generations really value their time, and there seems to be, no loss in productivity. I don't understand some of the moves by companies like AT&T or Amazon to try to bring people back for 5 days. That seems like time gone by, really. It doesn't mean people aren't working. They're just working from home and trying to capture some time for themselves and work at their own pace, which is what most people want in life.
So it's the young people that are sort of trying to appreciate their time. That's all they have is time. Why the old people, the ones that don't have much time left, we don't care about working 5 days. And everybody's got to come back to work so we can all get bird flu and then all go back home again. I think, Paul. Doesn't that make sense?
Makes a lot of sense to me. I hope that doesn't happen, to tell you the truth.
I hope it doesn't either.
I think, it's interesting because even during COVID, I went to work every day. We had access to our office, and I just feel comfortable in my office working on a regular basis. But I think younger people have figured out a way to balance work and their home life, and with young children around, it makes a lot of sense to give people that freedom. And honestly, I don't see any loss in productivity in the companies that I've worked with and for. And they just ought to try to figure out a 3 or 4 day work week, and even 1 day at home seems to work for people very, very well. So
nice
that can't go back to 5.
Yeah, I got grief last week for complaining about getting up at 3:30. I would love another, just to sleep in is such a beautiful thing occasionally, Paul. So Ted Gorman, James Gorman leaves Morgan Stanley to become chairman of Disney just so he can help Disney find someone to replace Bob Iger.
Yeah, much needed, by the way. I think Bob Iger has well past his sell-by date, if you ask me. And Gorman, obviously is a great leader. He did an incredible job with the Smith-Barney deal and really turned that company around. And I trust his judgment a lot. That is a great choice for them, and an opportunity to really find the right person, which they have not been able to do before. And they're leaving Morgan Stanley in good hands with Pick. He's already the CEO, so it's not like there's going to be a huge loss there. But he's a really seasoned guy who I think can get the job done. And he's already on the board and everything there. That's a great choice.
Make a point about Apple that the new CFO, as he approaches 65, is Apple really going to start? 65 seems like so 1900. That's not the time when people leave anymore. That would mean Tim Cook's is going to need to have a successor eventually too. Is that happening?
It has to happen. I don't think Parek is the guy who's going to succeed him. I don't know that I would pick a CFO for that job. But yeah, he's getting long in the tooth too, right? He's been there for a very long time, and I'm sure they have a succession plan. If they don't, the board is not doing its job properly. But I don't see the CFO choice as the one that is going to be the next CEO. I could be wrong. I also, have for many years thought Apple has got to start a decline of some sort, but now you see, they have this whole thing in China going on, where they're having lower price points. They seem to be on a roll again globally. So at least from a CFO perspective, Parek is a good choice, solid guy, did the financial planning. But I don't see any movement on the CEO job right now. I could be wrong, but I don't see that.
Just back to Disney for a second, finally. Is any media company going to be easy to manage in 2025, 2026, 2027. I don't. It's like Speaker of the House. Mike Johnson's going to stay Speaker of the House because no one else wants it.
Yeah, media is a tough industry to be in. But I think they found that right balance. Particularly at Disney, with they still have theme parks, plus they have an incredible franchise with movies. They seem to have gotten it more right than most. Let's put it that way. And yeah, I think these media companies have kind of figured out a way around some of the problems that were true 10, 15 years ago. So I do see the balance coming in, particularly for Disney. They're in a great shape compared to some of the other companies with the balance of things that they have. I mean, you look at some of the other companies and wonder how they're going to succeed, but not Disney. And, you know, they just need the right CEO, which, you know, Iger, to me, is not the right guy. They need somebody new.
Okay. All right, Paul. Good to have you on this morning. Thank you.
Good to see you.
On this. Good to see you. You're on this. You're on this. You too. Happy New Year. You're on this tweet.
What is it? I didn't see it.
As Kate Moss famously said,
oh, I did see that.
Nothing tastes as good as skinny feels.
Probably right.
And I know someone who swears by that, and she tells me that all the time, but I don't listen. That's true, though, right?
Yeah. Been a while since I remember.
Oh,
yeah.
Contino says it's not true. Yeah, you're living it, Rob. You're right. Okay.
All right, when we come back, what to watch in big tech in 2025? Will this year be another big one for the mega caps? That conversation is next when Squawk Box returns.
Asset.com.
NVIDIA shares shot up more than 170% last year. That's just one highlight from the mega caps in 2024. For a look at what's ahead this year, we want to welcome Gene Munster, Deepwater Asset Management Managing Partner. And Gene, let's talk this through. Okay, so up incredible amounts for this year, biggest market cap out there. What is the anticipation for this coming year, for 2025? You think that this money is still going to be good? Is there still going to be the huge amount of demand? Can they continue to just rake in the cash that they've been able to do to this point?
I mean, specific to NVIDIA, yes, I think this is going to continue. I think that the growth rates are going to remain higher for longer. Specifically, the focus is on calendar 26, what that growth is going to be. The street's expecting low 20% growth. I think it's going to exceed 30% growth, and so this still trades at a reasonable multiple, 25x multiple, and kind of plays to what I think is going to be the chorus in 2025. Obviously, NVIDIA being at the center of the AI trade, I still think we have 2 solid years left of a strong tech trade here based on AI. And I just want to quickly fill in the point, Becky, that probably seems out of touch with reality, just given the 87% move we've seen in the NASDAQ over the past couple years. How is it possible that this can continue? And I come back to, for most people, the concept of AI is a buzzword. And I put in the context that if you look at ChatGPT, the daily users, it's only about 150 million. That compares to about 2.5 billion Google users. We're still early in this, and I think it's going to continue to pull the broader tech market and big tech higher in 25.
It does raise questions about what NVIDIA is going to do with all that cash that it's bringing in. What do you think the best answer would be?
I think I'd probably return it to shareholders, share buybacks. I mentioned that valuation at 25x. I think it's quite compelling. And so I think that that's probably the easiest way. They don't need to make any acquisitions at this point. So I think it's probably on the typical well-traveled path of share buybacks, dividends. We probably will see something along those lines we almost have to in calendar 25 for NVIDIA specifically.
Gene, I'm just looking through your disclosures. You don't own NVIDIA. Why not?
Personally, I don't own NVIDIA. Our firm does. Deepwater does own NVIDIA. And the reason why we own it is at the end of the day, I think that the obvious trade is still in play here. I think there's a lot of anticipation that this company's growth is going to slow dramatically. But some people even think it may even decline in calendar 26. But as I mentioned, I think that we're still early in the AI build-out phase, so that's why Deepwater owns it.
But you do personally own Apple and Tesla. Why not NVIDIA if you are if you have such a conviction on it?
I think if I was going to kind of force rank those three, I don't do, first of all, just the highest level. I have very few companies in my personal account, so I don't think it's necessarily an indictment against NVIDIA.
Sure.
It's more just related to my conviction around Apple and Tesla.
So Apple and Tesla are still your highest conviction stocks because those are the ones you own too.
Yeah, for the long term, and I have the benefit to own things for 5+ years, and I think it's worth mentioning. We'll get the Tesla numbers here momentarily. I do think Tesla is due for a pullback here. I mean, we've had some incredible, of course, $700 billion in gain over the last 3 months in the market cap. That's just not sustainable, but I think that what they're doing around AI is going to ultimately drive the market cap higher. And when it comes to Apple, I think the iPhone is going to grow closer to 8% for this coming cycle, and expectations are for 3%. So that's where my conviction comes from.
Gene Munster. Gene, Happy New Year, and thank you very much for being with us today.
Thank you. Happy New Year.
Okay, we'll see you soon. All right, folks, that does it for us today. Make sure you join us right back here tomorrow. Right now it's time for Squawk on the Street.
Happy New Year, everybody. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We are at post 9 of the New York Stock Exchange. Carl has the morning off. Let's give you a look at futures as we get ready to start the trading year, as we say. And as you can see, we are looking for a nicely higher open. And that's where our roadmap begins this morning. Markets are in rally mode to start the new year of trading. This after stocks did finish what is the best 2-year stretch we've seen since the late 90s, even despite couple of down days there to end the year. Also ahead, Wall Street awaiting Tesla's delivery numbers. They could come out. You never know with Tesla. They could come out as soon as today. We'll bring them to you, of course. And we're also going to stay on top of developments surrounding that deadly New Year's Day truck attack in New Orleans and the explosion of a Cybertruck as well outside a Trump hotel in Las Vegas. Let us, though, start with the markets again. After what was a very strong year last year, particularly for the S&P. And in many ways, Jim, I'm so happy to have you back. To see you, my friend. Happy New Year to you.
Happy New Year to you.
The diversion between the equal-weighted S&P and the S&P itself was significant once again. I know many hedge funds are happy to measure their performance this year equal-weighted, not the S&P index, because almost nobody could beat the 24 or so percent performance. There it is, 23.3% of the S&P. That doesn't include dividends, by the way.
Well,
What do you think? What do you think?
To own, well, first of all, Mag 7, 33.5% of the S&P at the end, 66.5. The rest, I think a lot of people got the Mag 7 wrong. I think it's possible, something I want to talk about tonight. Maybe we're going to be in an era where there are $4 and $5 trillion stocks because the numbers keep going. I like to sometimes think about what goes right versus what goes wrong. And the reinvention that I keep thinking about these companies, it's endless reinvention. So I just keep thinking people want to count them out, but they don't realize they work in an environment where there's no recession. They worked in an environment, by the way, there was going to be a recession when it looked like the mini banking crisis 2 years ago. But the stocks that really led were very hard. I mean, when you look at some of the stocks that led, say, in the S&P, Palantir just keeps showing up.
We all know, right? Over 350%, as I recall. Right. Although now we're starting from zero again this year.
Yes,
today, everything's zero.
But that's a retail stock that people like.
Yes.
Then Vistra. Once again, you've got this nuclear theme, which is way overdone.
Who would have thought a year ago, though, Jim, that we would get Vistra, Vernova, and Constellation Energy? I spoke about this on Tuesday with Mike as well, Mike Santoli, that they would be the great performers this year. I mean, there's always something that surprises us. Don't know what it's going to be this year.
You don't. I mean, because remember it was charging stations.
Right.
We also had, let's not forget, quantum computing, which is another one. This time may never come. I don't know. But Scott Strazer, who I think is the foremost executive when it comes to nuclear, CEO of GE Vernova, sat right there and told us, look, 2023, 2030,
2032, 2033.
10 years from now. No one listened. Everyone thinks there's going to be small form nuclear reactors.
Small modular
there's
reactors.
There's one in Canada and stuff. But I just don't want to encourage people to do these things. Not encourage people to do quantum. Don't want to encourage people to do nuclear. Stick with the facts.
So all right, sticking with the facts means what then? Encouraging people to do what as this year begins?
So let's look at let's look at the fifth best in the S&P, United Airlines. Okay, now these historically been in trades. The airlines typically do not have discipline. They never take out capacity. They did take out capacity. It was hard to add capacity because of problems with Boeing. So you get a stock that's up very big, and you say to yourself, it's only at 9 times earnings. That's what I'm looking at. I like that. Look, you can go find Texas Pacific Land, which is this bankrupt railroad from a long time ago, and it's got Permian oil. Targa, because they do have to pipe out of Permian from nat gas, because there's too much nat gas. But I come back and I say, you know what, let's just go with companies that are not overvalued, and I think we'll do fine.
Really? All right, well, speaking of one that perhaps some believe may be, is Tesla. It's had a great year as a stock, of course, not for much of the year, but towards the end, as we all know. We did get those numbers on deliveries. Let's get over to Phil LeBeau now. Find out what they were, Phil. I see the stock trending down a bit.
They're trending down because you have the first annual drop in deliveries ever for Tesla. We'll talk about that in a little bit. In the fourth quarter, these deliveries are shy of expectations. For the quarter, the company delivered 495,570 vehicles. The street was expecting deliveries.
Jim called 360.
770, and they needed to deliver at least 515,000 to have full year deliveries top what they were in 2023. Obviously, that is not going to happen. For the year, Tesla deliveries come in at 1.789 million vehicles. Remember, in 23, they were at 1.81 million vehicles. So there's your first year-over-year decline. Not a huge surprise that was going to happen, guys. The 515, almost everybody said it's going to be tough for them to get to that level. The question now becomes, what do we expect for 2025? Remember, Elon Musk, in some of the conference calls after financial results in 2024, indicated that, look, I think he thinks that sales could go up or deliveries could go up by as much as 20 to 30% in 2025 as they roll out lower priced models. They start to make advancements in terms of robo-taxi technology. But clearly, these numbers alone in the fourth quarter, shy of expectations.
I'm going to move this over here a little bit.
Expecting essentially 495
Justice
versus 504. And again, the first year-over-year decline in deliveries for Tesla since the company really started ramping up production back in the, what?
The computer is protected.
Yeah, you know, Phil, interesting to note as well, BYD reported its numbers. Now, it doesn't sell all EVs. The overall number was 4.3 million
Correct.
EVs and hybrids. I think EVs came in at about 1.76. I just mention it because, of course, it is such an important competitor when it comes to this market for Tesla.
Yep. Right. And you put up a great point there that the BYD numbers, the hybrid business is huge for BYD. And that's where they're making a lot of gains in terms of their deliveries and sales outside of China. In terms of the EV business, China is where they are red hot. And China is where Tesla is feeling pressure. There have been some reports that their registrations were up as much as 7.7% in the fourth quarter in China, which is an improvement. But the market's growing faster than that, David. And that is really going to be what we see a lot of focus on for electric vehicles, especially when it comes to China. How quickly is the market overall growing? And then what's BYD doing? What are other Chinese EV companies doing? And then what's Tesla doing?
Right. Of course, as you know better than anyone, I mean, Musk had said, if you want to own my stock, it's not about how many cars I sell, right? It's about full self-driving, robo-taxi, and robotics, is what he's been saying.
100%. 100%. It's all autonomous vehicle technology, the robo-taxi, the development of that vehicle as they start to roll that out. What does the fleet look like? What is the take rate when they actually start doing that? When do they start doing that, David? They've indicated it. 2025 is going to be a huge year for that. Let's be clear here. Waymo is already out with
Hey, fat boy, watch your mouth.
Numbers, but it's growing. And Tesla's not even out in the market yet. So that's going to be a primary focus in 25, in addition to the traditional business, the EV business, where lower priced models are the key. And we've said this time and again, guys, when it comes to electric vehicles, you've got to get that down lower than where they are right now. Even the Model 3 and the Model Y.
I'm back, Jake Paul, I'm back.
In order to entice buyers.
Yep. Phil, thank you. Phil LeBeau with those numbers from Tesla. As you see, the stock is off about 3%. After, of course, Jim, a great run, particularly after the election of Donald Trump.
I think it comes right back. I remember it's absolutely true. Waymo is local. But I think people are thinking, well, Tesla, we talked about it, they have better data in terms of full self-driving. They actually have data. They just aren't in the running. But what happens if President-elect Trump says, you know what, a federal interstate, we're now going to allow that. And the whole country folds, I think. So that's what people are betting on.
Yeah, well, and their full self-driving is making enormous leaps in terms of using generative AI in the way that they are.
The latency's too great, Waymo, versus what they have.
I mean, they have a different approach than Waymo.
Right. They have an approach to have a brain on the car and a brain.
And Musk is famous, of course, and fully admits, famous for making estimates in terms of when we'll get there for full self-driving if they haven't. But I think there is a lot of optimism around the advances they're making from, whatever it was, 12.3 to where they are now.
And I think there are a lot of people who just feel, look, he's got the ear of the president, so something will go well for him. There's no give without a get, so to speak. It comes right back. It comes right back.
A lot has gone well for
Palantir and Tesla are bulletproof. Because they have tremendous retail and retail.
But you would not. Would you really recommend owning Palantir at 50 years worth of revenues that it's generating right now?
There's a rule of 40 that we use to be able to figure out the actual value of an enterprise software company that really does emphasize growth versus free cash flow and growth.
Goodbye.
It's the best.
Goodbye. So Tesla's down. I did a video on Tesla if you want to go back and watch it. If you haven't watched it yet. I got a support channel that I called right in here. It's called the pivot point area of 390 to 397. And it's still in that channel with a low support right around 360. And they're going to make, I'm going to put myself in the bear's position. I watched this one guy said he you know, he's done a ton of money and he's holding no matter what. And I'm not like that. Once I get close to a resistance, I'm going to sell it and then buy the dip about every time, which was a double bottom right here, and run back up to almost, you know, to the top again. So this time I'm going to wait for it to hit that 360. We could probably get away with a scalp today, but with if I put my different pair of shoes on and I think like a bear, they're applauding because they hate Tesla. But years ago they hated it even more because they didn't want to see electric cars come out. They wanted them gas rumbling engines, you know, with that power. But these electric cars, they just got just as much power or more, get up and go. And people don't drag race like we used to back when I was in high school. I mean, we had Kearney Street, and it was known Route 66, and everybody fixed up their cars and they'd drag race. And, you know, that was the big thing to do on Friday night, Saturday night. But I never did get, I had a Tempest, I had a Pontiac Le Mans, and I had a GTO. But that Tempest I had, it looked like a Roadrunner. And the GTO, it wasn't souped up like all the other cars were, so I couldn't really challenge anybody in it. And I didn't like drag racing anyway, because I just didn't like it. Thought it was too dangerous. But we used to really have a ball doing that. But nowadays, I don't know, they drive these little putt-putt cars around and race them.
And Mr. 51st State President-elect,
right?
Where you have creative freedom. But there's
Right,
a lot of
51st
crazy
state
stuff.
is now Canada, not Puerto Rico. Didn't it used to be Puerto Rico?
Yeah, but you do have a president.
Snake breakout, pull back.
Not going for
Jim, real quick before we get to a
There's
break
probably
here,
people
back
stuck in this
to
trade
where we started
too.
our conversation. What about
It was
the
only
Max 7 then?
it's only 5,000 shy of the
Airlines
estimates.
into things that have single.
I mean, it's only 5,000 shy. They wanted 500,000, 500,000 in the fourth quarter, and we hit 495, 570, and I don't think that's too bad, actually. So it could probably bounce back up. But like I said, they're estimates. You can't, I don't think you can go off on, what is perceived and what is. But that's the way these guys work. And they don't like Tesla either. You heard them bitch about them for about 4 years straight. And even before that. The Biden regime was pretty hard on Elon. And he was a big-time liberal at one time. He just run them out. I don't know why. It didn't make no sense to me. But I was too once. But not a protester. I got our GTI on here. I'm gonna go get my coffee going here. And I'll go over the watch list. Our GTI's got some big volume on it right now. Tesla, NVIDIA. NVIDIA's up probably too much. No. What is that? STEM? Where'd that come from? Where the hell did STEM come from? What's STEM doing on there for? Does anybody know the bear ticker for Tesla? QSI is at a support, but I want to see if it pulls back to the 223 area. Let's go 235, 240. Get it there a little bit early. Actually, set another one right there at 264. It just seems too high. But that'll catch my attention. Got Nile, then you got FFIE. I should have bought this Friday. FFIE. Or, not Friday, but what, Tuesday? A moment of silence here for all the death that happened this weekend. That guy was in our military, and he was a good guy, but he just got bushwhacked with jihad, or whatever you want to call it, which makes no sense to me. But he wanted to go get one of them virgins. He's dead now. He probably wasn't getting laid that much. Take your life and we'll make sure that you get laid for the rest of your life. We'll give you 61 virgins. And they'll all be 14 and younger. Just sick. Sick, sick, sick. Yeah, I like this a lot better, man. I'm using this mouse. I can't tell you how many seconds I was delayed with a bad mouse. And I got a brand new keyboard. It's all clean. Don't have no food on it. Uh-oh, there's a piece of dirt on it. I gotta wipe that off. I gotta get me a feather duster. I'm gonna see how clean I can keep this. When was the last time I got one? Probably 4 years ago. I've probably gone through about every bit of 10 of them in the 20 years. I got 1, 2, 3, 4. I got 4 right now that I could use. One on my Apple. Haven't used my Apple in a long time. Thinking about that one. So I'm gonna go get my coffee made and eat a banana and take a did I take my vitamin this morning? Man, I don't remember. I better not. The 264 hit Tuesday on QSI. I'm going to go long in that stock. and hold it all year long. Take a trade with BlackRock and Kathy Wood. I'll be right back. Would you sacrifice your life for 61 virgins? Or how many you get? Let's see if the nitwits are back today. Santa Claus rally means for markets in 2025.
His second victory interrupted by Benjamin Harrison. So I would tend to say you sort of treat this as a first year. The market typically does well, up about a little more than 9% in the first year. Rising in price only about 2 out of every 3 times. It's not the best year. The third year is, as investors anticipate the stimulus for the president to hope to get reelected. So I would tend to say that focus more on earnings growth because we're not going to see PE multiple expansion, in my opinion.
I would like someone to answer the question, how does, they keep bringing up that immigration, how it's going to hurt the economy. And it's not legal. I don't see how, that makes a difference. Unless it's the government spending, that we're spending the money on these illegals to keep the inflation down, which I don't think that's the case. Because the more government spends, the higher the inflation will go. We're spending a lot more money on housing them than we are that they're making us money in tax money. So I just can't get the coalition or correlation between the two, and they keep, all these fat cats keep bringing it up. Illegal. I'm going to repeat, illegal.
You want to actually own last year's winners. That would
There's nothing legal about it.
Consumer discretionary and tech, because on average, since the 1990s, the 3 best performers from the prior year continue to outperform the market 75% of the time by about 300 basis points on average.
Okay. Sam, I love those stats. Sounds pretty solid calendar-wise. Not the best, but with the post-election or inauguration, rather, potential to, we got to come back and revisit basically to kind of see how we get out of the gate for that in terms of what it signals for the kind of administration political cycle. How about brass tacks, earnings, potential going forward from here? What do the numbers tell us about growth in profits this year?
Well, growth is expected to be pretty strong. 2025 estimates are about
this channel doesn't do it.
8% for the S&P 500. So
CNBC does.
15% advance. All sectors expected to post year-on-year increases with double-digit gains for communication services, healthcare, industrials, tech. So a lot of the cyclical sectors are expected to do well. And even the defensive groups, in particular, consumer staples, expected to see about a 5% gain. So basically, wherever you are invested, you're likely to see earnings improvements, but leadership will come more from the cyclical side of the equation.
That's pretty interesting. So for big tech, then, the kind of need for surprise somewhat to justify the valuations sounds real if you're telling me that the earnings growth is going to come from other places.
Yes, well, the tech growth expectation is about 20% versus sub 13% for the S&P 500. Okay. But you're also looking at valuations that are fairly pricey for technology. So, with that in mind, the PE on the
New Year, Gio.
sector is at 22 based on
Happy New Year, Mannequin.
2025 estimates. So still a bit pricey. So I would tend to expect surprises rather than PE multiple expansion to drive technology.
You've got a portfolio construction that maybe addresses both these points, the growth in tech, but also the valuation maybe not risk, but just kind of, concern. You look at the free lunch portfolio, staples and tech. Tell me how those two combine together. I kind of like that idea.
Sure. Well, what's interesting is when you think of, which sector is the poster child for growth and volatility, it's not surprisingly tech. But what's the poster child?
We definitely
for
pulled back to
stability?
support.
Well, it's consumer staples. When the going gets tough, the tough go eating, smoking, and drinking. And so,
And that's what I got here
they
too.
also have fairly low correlations.
588.90,
so
a little bit above it.
50 portfolio, 50%
And we hit it.
tech, 50%
Mine.
consumer staples since 1990. You would have received 94% of the return of tech alone, but with 40% lower volatility. So I call it a free lunch because you would have gotten something for nothing, a higher return with lower volatility, and the year-ending value was higher for this portfolio than for tech itself in 77% of the years since 1990. So a good way to be able to sleep at night.
We got 2 more minutes.
Worried about tech at this point.
Good stuff. Like that idea.
I think we got to wait and see.
A taste of 2 different charts. The XLP looking pretty weak, but the tech obviously has been the highlight. So the question is if we let the winners ride or splice in, some of the more downtrending stuff.
5 minutes.
Some decent earnings power behind it with staples. Sam, thanks a lot for the calendar, knowledge, and the earnings. Appreciate it very much.
My pleasure. Good to talk to you again.
Thank you, sir. Sam Stovall, CFRA, Chief Investment Strategist. 2 minutes till the bell. We'll be right back.
Yeah. My guess we're going to open up right around 590, 59.14.
It's easy to invest in ideas you believe in. Spot a trend in electric vehicles?
Right at the 200s, my guess.
For online gaming? Or want to explore the space economy?
And that's going to be our resistance to break right there at 59.20.
Identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes.
God darn, that's a fast 2 minutes. Well, I was right. Look at that.
Binge watch the market with the Schwab.
I was right on.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market.
Shut up. So now I can't see that, so I got to move that over. Apple. Resistance is going to be to break is going to be that 59.2186 for the SPX. Let me see how expensive they are. Yeah, they're freaking expensive, all right. God, I can't believe how high they are. The market's gone down. Okay, we're retesting that support level on that head and shoulders on the SPY. January 3rd. It's Tesla. Tesla has a double bottom. I think it'll be a wait and see. Tesla, Apple, Baidu, and DraftKings. They're all too high, but Baidu. Tesla's only down 17, 18 bucks. We got a 1, 2, 3 set up on Tesla right now. So it's going to make up its mind if it's going to come down and not hold support. How much then we got a Walmart was being pumped last week. Disney's talking about Bob Iger this morning, how shitty job he's doing. So we're going to see if Tesla holds here. FFIE is up. Okay. Zim's up. Now we got to hold this support here at 382.79. Tesla. Mister's up 11 bucks. Coin's up 6. Uber had mixed messages, I thought, this morning. JP Morgan downgraded them, and then they said, someone else said the target was 90 bucks this year on Uber. Then it bounces up, so JP Morgan Securities downgrades Uber to market perform, maintains price target of 95. Okay. The video's up a couple bucks. AMD's just hit a new low. Not low, but low. And Apple's taking a knife. Wow, Apple's taking a good knife here. We have to keep an eye on Apple. Apple's at support. Lowest support to hold is right here. A little bit below that, not much. Let's watch Apple. Tesla went below support. I gotta see who's anybody in the room in anything yet. Tesla dumped on numbers. Oh, dang. Did you sell FMA or were you swinging it? No, I wasn't in it. Oh, Jesse. So we got inverted hammer on the SPY. Let me see here. The 589s or the 590s. 178 for the 590s on the SPY. I'm going to wait. I'm going to give it a little bit more time to synchronize here. We got a double bottom here on this fat wick when them numbers came out, so we could easily touch that. Not wick, but body. And double bottom off that right there. 586.07. Randy. Was it 1 minute on Tesla? Fucking SPX is so high. I'll let it play out a little longer. Okay, we'll see what happens if it touches down here. That'll be our spot. Unless you start a position right now at 160, 159. Which ones are you looking at? 590s? Now, this is where I think we're going to reverse. $150. You got inverted hammer, kinda. That's a sign of upside right there. Chart looks bearish. Tesla just hit the 21 on the minute. No, I'm not in yet. I want to be in. This is really the determination here if we're going to hold or not. Apple's at 245. Watch Apple and the SPY together. BABA popped up a little bit. Pot stocks are up a little bit. Tilray, all the pot stocks are up some. There she goes. I should have jumped at 150. I had my trigger hand on it. 5 contracts. Says it's getting ready. Resistance will be 589.24, which was the old support. So we're undersold, oversold. Anybody anything on YouTube? Tomorrow, 10 a.m., ISM's coming out. 8:45 PMI. 11 a.m. oil inventory. We got divergence going on. You're in the SPX calls. I wasn't even looking at it. It's hard to pick on this one here. The 59.50s or the 59.40s. So we got a head and shoulders on the SPX. Damn. Missed it. That double bottom was pretty damn close. I was right on, within a couple of pennies. Tilray's about to hit 145. Double top on CGC. I can't see that. Microphone stand in my way. These calls ain't moving on the SPX like they should. So that's your support channel right in here, which is now resistance channel on the SPY. $58.96.33. And 59.03 was opening. So this will tell us if we're bullish or not if we break that 59.03.35. And we're at the pivot point on the support channel on the SPY, which is now resistance at 587.90. Damn. Things were at 450 just a second ago. Now they're at 550. Well, there that goes. Missed it. I'd be getting out of the trade right now. We just hit the VWAP on the SPY. Shit. That sucks. Tesla just hit the 51. Man, 226 on the SPY. Had a tweezer bottom. I didn't recognize that. Good call there on your SPX, mannequin. $5.90s would have paid good. 70 cents, 75. 550 to 650 on the 5940s. No, that horrible. Wall Street kicks off 2025 with upbeat mood, lifting U.S. equities futures. So there's resistance. I missed it. 450 to 9 or 880. Damn, that'd been $120 a contract on the SPY. God, stop it. Just keep pushing it up. We just now hit the 200 on the SPY. Damn it. I'm so mad. I thought we were going to pull back on that hammer there, but we didn't. We've had a pretty good sell-off last week, that's for sure. Apple reverse. I wasn't even watching Apple. Yeah, we did. I missed it big time. That'd been $700. We're pulled back to support here at 59.21. Tesla hit Microsoft hit the 200 on the 1 minute. Can't believe I watched this all go by. Oh, darn. If they want to run this up big time. Tuesday's high was right around 59.28.78. January 6th. How bad do they want it right now? A lot of volatility in this price action. Go to the 59.50s from here. We're getting a little bit closer to the 9 EMA. I can't believe I missed that. One, two, three, four, five, six, seven, 8. I'll be right back. I gotta walk away for a second. Damn. They just keep bringing it up. $59.50s. Right now we're at $6.50. And here we go with that inverted hammer again. This is on the 5-minute. Gravestone Doji. We had 3 white soldiers, so it could come back to the top of this second soldier on the 5-minute. That's the SPX. The tape still looks good. We'll see if it retests that old resistance and then jump in at 59.50s. Or jump in now, but I'm going to wait. We've got tweezer tops up here, 3 of them. 59.50s at 5.50. Yeah, I can't trade. They're not lining up very well. Shit. Oh, hell. AVGO just had a new high.
That. Nice assessment of the market there, and a good conversation too about the power of big tech keeping things together this morning and throughout the year. Jeff Pierce joins us for a look at Apple, which is down this morning, and one that might have sort of the most relevant seasonality coming, given that January oftentimes is a bit soft for Apple, and the expectations run high around the sales. Happy New Year, Jeff Pierce.
Hey, Happy New Year, and you're right. I mean, we've got a company here that's really been betting on a hardware upgrade cycle, especially as these new AI features come out. And we've got, analysts weighing in as some numbers and data comes out along the way. UBS, which kept a neutral rating on the shares and a $236 price target, recently cut estimates below consensus based on some iPhone data. The analyst says that following another month of soft iPhone sell-through, the firm lowered their iPhone unit and revenue estimates that were already below consensus, saying given that October and November typically account for about 66% of iPhone sell-through in the December quarter, an 8% year-over-year decline in November sell-through, according to Counterpoint, has led them to lower their iPhone unit and revenue estimates to 74 million and 67.2 million respectively. That's down from 77 and 69.7 million. The firm also updated their iPhone December revenue forecast, calling for a 4% year-over-year decline. That's versus the consensus.
Well, that's not good.
About a 2% growth expectation. Now, it's not all bad news. Slightly offsetting this negative iPhone revision, they did raise their forecast for Apple services by about 1%, saying they're seeing a traction in the App Store. But the firm made about a 2% negative revision on their December quarter revenue estimate to about 120.8 billion. So some negative data here. I'm sure investors are still hopeful that we're going to see a good cycle come out of the holiday period, but some analysts are getting a little bit nervous.
All right. The chart definitely requires.
You sound like a robot.
The forward valuation of mid.
UBS is downgrading a lot of shit.
In Apple's history, and given that there's been a lot of sort of perception around the stock in the past as a safety trade, a security.
I want to catch this down here at this 59.2258.
It seems to mean that the valuation is kind of a counterpoint to that, but boy, has it been solid. I've been really surprised at just how consistent it's been. There hasn't really been a lot of news flow around it. It's just been kind of grinding, and to see some of these estimates get cut, I can get why the stock's down, but it's only down 1%. So it's just, again, it seems like it's going to take a lot really for the stock to break.
Yeah, I mean, we've certainly seen some pullback since that 260 we saw a little while back. But, I mean, investors, I think, have largely stayed positive on the, position that Apple has and the direction that they're going. Now, we know, again, as we look at these new iPhone sales, as we look at the kind of the AI release, which has gone rather slowly, that's what investors are really weighing on. And then, of course, looking at China and the competitive nature they've got there in China.
I'm about to make me a burrito and come back and redo it.
Out there and trying to release their AI,
Have my lunch early.
In China as well. So there's certainly some headwinds. I think investors are well aware of them. I think they're watching.
This is a bullish indicator. These three white soldiers, but I'd like to see it pull back and hit that third one. But I don't think it's going to do it.
Kind of rally that's been going on for a while. Keep going.
That'll save me about $120, 150.
The $226 price target doesn't exactly inspire confidence, so kind of a negative note.
Yeah. You got that right,
yeah,
brah.
I agree. I mean, I think it is a negative note. Now they're coming in below consensus. We're going to see if other analysts.
AMD, Meta at 604.
And the revenue. But right now, yeah, this is not a positive outlook coming from UBS, and I think certainly while we're only down about 1% or so, I think investors, if they continue to see more of this from analysts, we could start to see more of reaction in the shares.
Yeah. All right. Thanks, Jeff. Good look at the note there and the narrative around iPhone sales. Let's trade it with Joe Teagate, portfolio manager of the Rational Equity Armor Fund. Joe, kick us off with the trade in 2025, sir. Good to see you.
Yeah, good to see you. Happy New Year to you and everybody.
There we go.
Yeah, they say the start of the year is going to be how the year is going to go, and I think it's a good start, obviously, for the market so far. Great to see tech leading the way. Great to see small caps leading the way. It's like a double risk on trade. You got Bitcoin higher, so hopefully this is a good sign for the year. And the other thing I'll add to that is we saw some volatility this morning already, kind of like a reversal, then the reversal. So maybe two things we'll see this year is a good market and higher volatility.
All right. So Apple down $3.30 presents perhaps an opportunity then?
Yeah, off of its lows also. Doing nicely, nice trading action, I think, from Apple. Got some events next week.
Right about now.
Broadly is going to move on the jobs number on Friday. So that should be interesting. Also interesting, we got the day off. It's like 3 straight weeks of a midweek break. So we have the Carter Remembrance, the 9th, the day before the jobs report. So that's going to be really important for the market. I want to see the market higher through that week. Obviously, good jobs data will go a long way for that. And I'm cautiously optimistic the market will do well. But like I said, we're going to see some volatility. Apple should be leading one of the most volatile names. You brought up some good points earlier. Higher valuation. It's supposed to be a stable stock. Big dependence on China. They're talking about lowering the prices for their phones in China. That's not a great sign. Maybe
it's 480.
Maybe it's going to be a huge success for them. We know China is slowing down in general, so that just might be a China story, less so an Apple story. So we'll see how that plays. But I want to see Apple rebound here. I want to see Apple higher by next Friday. I'd rather own it in options than in the stock. So I'm looking stock replacement by the next week, Friday, 245 call. This morning it was $3.50 for me to get into that trade.
Okay, I got one.
That's a better way for
450.
me to own Apple. I'm only risking 350 rather than 245 here. 1.5% is my downside risk. I was down more than that on the open this morning, so it could lose a lot more than that if it does go negative. But if it does go positive, it could be back near close to all-time highs.
Not terribly expensive for an in-the-money call. this morning when we were trading Tesla after the sell-off, Tom was selling call spreads. This is kind of the opposite for the other stock that's down. So Tesla chart looked like maybe it broke, so he was selling call spreads with the first strike pretty close to where we are. And whereas Apple, you're buying the in-the-money call, which is basically hoping that this is it, essentially, that we start grinding higher ASAP.
Yeah, two different companies. Tesla historically has had a lot more volatility than Apple. Certainly the news around Tesla is driving up that volatility around that. Apple, they were down on the news. Their volatility is higher, of course, but not nearly as high for me. Got an in-the-money call. I'd be happy to sell a call if we do bounce higher throughout today and tomorrow, maybe even Monday or Tuesday, sell a call against that ahead of the expiration next Friday.
All right. Like it. Buying the in-the-money call, spending $350, right, for upside Apple exposure. A little maybe leftover Christmas cash put to use to start the new year. Buying the dip. Thanks, Joe.
Thanks for having me.
All right. Appreciate it, Joe TK, portfolio manager of the Rational Equity Armor Fund. Let's talk about the rational trade in bonds going into this year. I'm excited for the next conversation, catching up with Harley Bassman from Simplify, which has got a new fund in the last month that offers another way to play inflation. The Russell right now is up big. NASDAQ holding on. We've got a strong start for equities in 2025 and a decent start for treasuries too. Right now, the 10-year future is up about 1/4%. Even though the dollar is higher too, yields obviously
we're at the 21 right
in the
now.
second half of 2024. We'll talk about it next with the team at Simplify.
Damn.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Stocks are starting off the year strong. Bonds are too. The Treasury market's catching a bid this morning, helping ease a little bit of pain for bond bulls that got shredded in the second half of the year. Joining us from Simplify Asset Management.
We got four crows here with a hammer.
Simplify, home of the PFIX ETF, which was part of our solution for inflation from 2022 to 23. Harley, good to see you again. Thanks for being here this morning.
Happy New Year. Good morning.
Appreciate that. So we talked a lot about your guys' fund PFIX that kind of addressed the sticky inflation situation, but you guys last month, right, December, launched RFix, which, correct me if I'm wrong, kind of looks like the mirror image.
Exactly. It's a 7-year option, call option on the 10-year treasury, basically. PIFX was the a similar option, but the other way, a put option. So it gives you extraordinary duration, extraordinary power to earn if rates go down. And 10's back at 450, 460. Probably top end, maybe a little higher, but it's a great way to make that investment, get exposure to lower rates. It's 2.5 times as powerful as the 30-year treasury, and it also carries a positive yield. So it's just the power of optionality.
Okay. So
you can't get this any other way. Like ordinary options on the exchange are 1, 2, 3, 6 months. This is a 7-year option, so its payoff profile is rather dramatic.
Okay, let's talk the structure, but just to get out of the way, the impetus for the launch, is it reflecting any change of yours from a macro perspective? Because I know you're pounding the table pretty hard, at least in the last, 2022, 23.
Apple dropped more.
The kind of sticky inflation, transitory team got it wrong? Or is this just because your clients, there's some out there who disagree and go, hey, give me another option?
A little of both. I mean, I'm still higher for longer. I believe that we'll have inflation that kind of hovers higher than people think. But you know what? I could be wrong. That's why you have a market. And this product allows people to go and get access to, that kind of insurance policy, or they can structure a portfolio in a better way. Remember, there's 2 reasons you own bonds. One is for income, or for just, an anchor. And the other is an offset to market disturbances. Rates usually go down when you have stocks going south. So rates going down. So bonds going up, this is a way you can go and do it. It's a very cheap insurance policy, actually.
And to your point about using options, I come back to the structure of it, because it seems like the argument is also that, hey, if you just want exposure in either direction, you can pack more punch using these funds than if you just got like a pure duration exposure. It kind of amplifies it up a little bit, right?
Very amplified on both these products.
So who then, is it just for those with strong conviction views? Either way, now they've got 2 ways to do it. If you've got a strong conviction view, you want to be long duration, you want to be bullish bonds, you go with RFix. If you've got strong conviction, you go the other way with PFix.
The most clever way for this product is, instead of just buying the AG, which is like, 5 and change yield and 6 and change duration, is you go and you buy a little bit, like 10-15% of RFix, and combine that with a
so we're back at opening price.
Or a closed-end fund product, and that portfolio, that package, can give you 100 to 200 basis point higher yield and give you a little longer duration. So you get both. This feels like the 151 run of duration.
Okay, and is there any product in there that introduces any credit risk whatsoever?
Zero credit risk on this.
Got it, okay. And you guys are building it out, it seems like with a customer in mind that's going to fit it into a broader bond portfolio.
It requires a little bit of thought to go and structure this thing. It's not just a straight buy the index. But if you're interested in doing a little homework and thinking about it, what you could do with this product is rather amazing, just because of the profile and what it does. Usually other products to get duration or bond exposure, rate exposure, require a lot of cash to go to work. This requires much less, a third of the cash to go and get the same exposure to the index as something else.
And that's just because it's going to swing a little bit more, right?
That's going to swing 2.5 times as much as a 30-year treasury.
Okay.
Much more than TLT, for instance. Like TLT, why are you buying that? It's a great product, I get, if you want to get that kind of duration, but you're much better off buying RFix, which is the core duration, the core price movement. You buy a little of that, and then you buy something else with it. So it's a portfolio construction product. And basically, truth be told, if you were to go run TLT versus RFix with, a third of the duration, you get a better price performance both ways. And that's because of the convexity. Remember, an option is, if you buy an option, most you can lose what you pay for it, unlimited gain. RFix is just a 7-year option, expires in 2032. And because of that, it is massive convexity. It goes up much more than it goes down.
Yeah.
So when you add that to a portfolio, you really improve the total profile of your portfolio.
It's also, I might offer a fun option for the individual who may have a strong macro inflation view, but it's complicated to figure out the best way to express that. I mean, if you had a strong view that inflation was going to be a problem and you bought PFIX in 22, you made upwards of 130% at the highs. Same story for 23. So, I mean, I know you're thinking about it in terms of an institutional client, but there's a lot of folks that want to have a view on rates, but you don't get as much volatility in the swings that we kind of need for the little guy. So it's an option too there.
Well, I'll tell you, I came out of retirement to go work for Simplify because what we're doing is offering professional products to civilians, retail investors, even high net worth investors. And this is one of them. You cannot get a 7-year option unless you're a Wall Street professional or a large hedge fund or a large pension fund. And this is how you get access to it with this. And this is how the big boys make money, is they don't waste their money on inefficient investments.
There's the 200 right there, so this is where I'm going to get in.
The core exposure and then build on that.
All right. I'm sold. I wish that I had done my own trading a little bit more simply when I had inflationary views in 22, 23, because trying to get smart, the way it basically was just to kind of get a little bit more leverage to the bond market that you're offering here. So directionally, though, Harley, give me a thought on generally what to expect, you think, this year in your gut, because I'm looking at $1 at 109 right now, which to me kind of screams that yields should probably be higher. And yields have been going higher since the Fed started cutting. What do you make of it? And give me 60 seconds on what to look for this year.
I think the long-term profile for the 10-year rate is
125.
You get that by looking at the Fed's terminal rate, what they think, and then adding on 150 basis points, which is the long-term spread of Fed funds to 10 years. Could we go 5%? Easy. Can we go back to 350? Sure, why don't we move around? But in general, I think we're going to stay a relatively tight range for this year, unless we get some sort of surprise, and the surprise, of course, is political. Are we going to go and deport people? Are we going to go and have a massive tariff? Those things that you can't predict. I kind of think it's more, talk than action, but if we get something like that, you certainly could see a large market movement, and buying RFIX or PFIX is a great way to go and buy insurance on that.
Well, to your point, too, that's the inflation discussion, but also if stocks, just for whatever reason, get hit and, you kind of have a hard landing in the stock market, even if it's not tied to the economy, then bonds might catch a bid because equities are having a little trouble this morning and bonds are holding their bid. Harley, thanks a lot. Appreciate the explanation of the funds.
Thank you.
Yeah, good conversation. Great mind to pry there. Open on the bond stuff for this year. Harley Bass, managing partner at Simplify. RFIX, if you're looking for duration exposure, and PFIX if you're looking to fade bonds. Market having a little bit of trouble here. The 10-year yield is down on the day at 4.5, but Tesla's still getting walloped down $25, and the bid has evaporated again from stocks, which are now a little changed with the S&P 500 up just 10 points now, as you've got the dollar ripping to almost 109. So some interesting start to the year here. Investors are trying to figure out what to do. We got some charts with a couple companies on the analyst front this morning.
Got a little bit too far out of the money.
Look at when we come back with the chart master.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Break it. We got to break the 9, stay bullish.
You'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
technical difficulties.
Schwab.
Schwab, a modern approach to wealth management.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
It's not going too good right now. Damn, come on.
Welcome back to Morning Trade Live. We've got some analyst calls to look at Meta, McDonald's, and Norwegian Cruise Line. KG's on the charts. Alex Coffey's on the numbers with
MCD, huh?
Let's start with Meta, Alex, as the market's really struggling to stay up. Meta is higher, though, probably the strongest, it looks like to me, of the Mag 7 this morning, maybe?
Yeah, real strong 2025 so far for Meta. It's up 2%, so it's easy to find the year to date. I'm just kind of
Heck yeah.
Let's look at an analyst call here today, raising the price target. Not an upgrade because they already had outperform on it. This JMP Securities updating their price target from 660 to 750. So quite a substantial hike in the price target, and that implied quite a bit of upside as well. Another $150 is going to be about 25% on the stock. So obviously a pretty bullish call here. JMP Securities views 2025 as a year of technology inflection for multiple major new technologies as generative artificial intelligence operationalizes and autonomous vehicles become more widespread. Their top internet picks are Meta, DoorDash, and Oddity. So Meta obviously standing a little bit different than the other two, just given its kind of mega.
Now we're coming up to a resistance here.
They're also looking to bring, this is their commentary on this, but Meta's reportedly looking to bring Ray-Ban Meta glasses with display in the second half of this year, and they think that this is going to give investors are going to be a little bit more optimistic maybe on this release than some of the other ones like the Oculus and stuff when it comes to their virtual reality movement and investment. So right now it's $1 billion in losses, or billions of dollars in losses in terms of the investment there, but if this sort of turns the page a little bit more positively, that could be another tailwind for the stock. JMP believes Meta's AI can sustain advertising revenue growth in 2025 as it becomes more and more integrated. I don't know how much more they can integrate it. It already seems like it knows so much. Meta's been cutting edge on this.
They've been really, by the way, good. I'm impressed. Like, I think that they have, I don't know, we'll see what user numbers say, but like Facebook kind of became like sort of the dead social media a little bit. Kind of like the old phone book, you keep it there, flip through every now and then, but the way they're trying to link all of their apps together, because I use WhatsApp a lot as a...
That's a recent thing in the last few weeks, it feels like. But I've said this for a while. I think Facebook is more of a dashboard. If you're a business, maybe you operate off of there, but how many times do you log into a new app and you're like, hey, I'll just use my Facebook or my app or my Gmail?
Exactly. You can't get rid of it.
It's more of a dashboard, I think, than an actual user, experience. Unless you're maybe in a little bit older generation, I think it's still pretty popular amongst consumers.
Yeah, definitely. But their AI is pretty impressive. The stuff that they generate, and now you can search on their website. Chart-wise, KG, one of the better ones still.
Yeah, it's been pretty good here if you're actually looking at it over the last year, Oliver. We had that nice little spike to the upside and really kind of kick off last year. And then we had a little bit of a consolidation range. The trend was still to the upside, but you did see around a 30-point range or up to the upside and downside before we actually did see a little bit of a breakout. And what we actually did see in October was kind of a megaphone pattern, a bearish one that actually took place here. That just means that the trend was either consolidating or to the downside here, but we should also expect volatility, and that's exactly what we saw. We actually saw a nice little breakout of that upper resistance on that megaphone pattern back in early December, hit up to $638, but now we're coming back into that pattern. So keep that one on your radar. I also have an anchor VWAP, that actual, that purple line there, going back to September 11th. That's really where we kind of started seeing the solidification that TikTok may not be able to operate here in the United States, and that's where you kind of started seeing a little bit more optimism.
Still a little bearish.
For the stock. Now, if we did see a breakdown,
we break out of this flag. drag.
It's going to be your first area of support. Next one's going to be that $200 200-week moving average sitting at around $530 and some change.
It's just Solar America 220.
It actually is making lower highs, so that's just something to be mindful of, even though the stock is trying to make a higher high for right now. And the MACD is actually crossed 12 EMA below the 26 and about to approach that zero line. This kind of points towards maybe a little bit of the consolidation. You want bulls kind of collect themselves, try to push the stock up a little bit higher. Maybe it's a little bit stretched, but the overall trend is obviously still positive.
Okay. Good reminder on the TikTok stuff too. Almost forgot about that. Big thing for them potentially as well. All right, so some stability in the chart despite some second order softening of the momentum seems like the main takeaway. And a lot of them look like that. I mean, NVIDIA looks like that too, basically, where you're just kind of
we're still a little bearish here. We need to break.
A bit of a screamer. All these stocks at some point in the Mag 7.
2 years in a row, though, it kind of had that, that middle kind of second half of the year was just sideways and explodes.
Yeah.
So don't rule it out.
For sure.
Very similar too.
They rest and then they rip. So
which is really the overall market does that too. Most of the time we kind of go sideways. It's big days really move the market.
How about Norwegian? Because they went crazy in the second half. Let's go there. I think that was one of the most fun stories of 2024 was the travel trade and the comeback of the cruises.
Yeah, what a story. I mean, this is more of a catch-up, I think, to some of its peers, too, this outperformance you've seen lately. But one of the strongest parts of the market, I never would have seen this coming. So what an impressive turnaround story for so many of these companies, surviving what was so existential for them
So we touched twice now at the 200, 3 times.
Goldman, though, adding Norwegian to the firm's U.S. conviction list as part of its monthly update. They love the setup for 2025.
It's not looking too good now.
Some of their kind of proprietary or outsourced second nature kind of alternative data, second measure data. They see accelerating that purchase intent and significant cost savings still to be realized. So perhaps some of that is still left to be priced in as well, based off of their position.
Looked pretty bullish this morning.
Following a management shuffle that took place in 2023. Buy rating, $35 price target.
Okay, that's pretty bullish. Norwegian 26 right now. It's 35. Look like it could be. I mean, I think I gotta drag my y-axis to to recalibrate KG to get 35 on my 1-year chart.
Yeah, definitely. But it does appear like it's
NCLH.
I hate to sound like the bearer about bad news. Obviously, the stock has been consolidating. We did see a nice little breakout happening in October. We had a trend line of the 20-period moving average acting as the area of support, and then we had the upper trend line acting as the area of resistance. But now you can see we were in this bearish flag pattern, and that flag pattern actually broke down at around
Apple double bottom.
$0.60. Now we're kind of maybe utilizing that 20-day moving average, which was prior support, as an area of resistance. So that's going to be the first area to look at, $26.45. If we do see a breakdown, next area of support, $24.50. And any further breakdown there, you kind of look at that previous channel that we saw pretty much all of last year until around October here. Could it break higher? Yeah, definitely. You're starting to see the volume profile trying to get a little bit more activity at these levels, but I kind of get a little bit concerned about that gap to the downside before you actually start seeing some more volume taking place here. So consolidation, potentially a flag, but it is starting to break down.
It's still not really showing any strength.
On the name. You also have the MACD 12 below the 26 EMA. If that does cross with that 12 EMA above the 26, you can go back on this chart. That does indicate that maybe some further upside movement is going to take place, but I don't think that you probably should take that shot.
Hold on a little bit longer and see.
RSI is obviously in a bearish formation right now. So consolidation for now, be cautious, but until you see that 12 EMA
not looking too good.
I think this kind of says maybe a little
Now we're under the 200. I don't like that.
Ooh, you sunk my cruise ship, KG. All right, but I see what you mean. It does kind of look like it looks different than the Meta one pretty clearly because you could see Meta getting to that type of RSI and the stochastics like if it continued to worsen. This one kind of looks like the other chart with more weakening. It's actually got some lower lows, lower highs, which, I mean, here's the thing though, Norwegian's always the weakest of the group, so, I don't know, Royal pulled back too though, yeah. Carnival looks okay, I guess, but yeah, they all softened up a bit. How about some McD's? Should we talk some McDonald's? Alex, have basically been stuck under $300 since earnings.
Tesla's down double bottom.
You coli breakout, which was noted here in this Wells Fargo note. They added to the firm's 2025 quarter one tactical ideas list. They talked about the stock being in the penalty box post the E. coli breakout, doing what you described, which is the shares basically trending range bound between 290 and 300 since October. They see McDonald's breaking out as a catch-up, or they use catch-up in quotes.
Did they really?
Kicks off,
They made that joke? That's bad.
in Q1, driven by share gains accelerating on the back of the new McValue platform launch. They think falling gas prices is going to lift the low end of the consumers from a trend standpoint as well. And they think a pivotal Q4 2024 earnings update, basically setting aside the E. coli fears and rewarding McDonald's U.S.-focused development efforts in recent years. Overweight, price target 350.
Damn.
Come on, guys. Wells Fargo analysts.
Break it.
With the catch-up trade, come on, guys. Like, are we really gonna start the year off with that? That's bad. Even by like sell-side pun standards, you know, even I wouldn't go for that one.
Yeah, it's getting.
What's up, KJ?
Come on, man.
Speechless.
Let's start off the year on a positive note here.
Yeah.
They tried. Look, when you're looking at the stock, you could actually make a case that it did have a nice little consolidation over the last couple of months here, and we are seeing a little bit of an inverse head and shoulders pattern. What you do not want to see is a breakdown below that $280 level, going to test that 200-week or 200-day moving average, which is sitting at around $279.94. But if we are getting a little bit of a coiling of the stock, and we do get a breakout, you'd like to see a breakout above 302, and that's where you could go back to those highs at $317.90.
I think about
RSI
go ahead.
also consolidating here, not really picking a direction to the upside or downside. MACD
It ain't doing no good.
EMA below the 26 EMA, but once again, 200-day moving average going to be a key area of support. You kind of look
Hate
at
to
it
sell
and
them
say,
here.
the primary trend is still to the upside. You got an inverse head and shoulders after a consolidation right now. Could you take a shot? A lot of volume that's sitting here right now. The volume point of control is literally sitting at $290.
Start my first trade of the year with a loss.
It's kind of a coin flip here, Oliver. But if you're looking at the technicals, I think it's a little bit more bullish than bearish when it comes to McDonald's.
Like that volume profile. A nice little nugget there, KG. All right, I've done my part. Appreciate it. Here's the thing. They also say the tactical, McDonald's and tactical don't go together for me.
It does, though, when you look at kind of, I think the definition of that being like this may be a short-term narrative-driven thing, and they're saying, hey, the stock's been held back from this risk that isn't a risk.
For sure. I just don't really think about tactical's like fast movement. That's never really. I'm not after McDonald's. I'm not doing a lot of fast movement. All right. Thanks Kevin Green for the charts. Thanks Alex Coffey. Thanks Wells Fargo for the bad puns. When we come back, what market meetup? Going to walk through the session so far, which is
Kind of got a falling wedge
so far in 2025. A little volatile as equities started off real strong, then faded, then caught a bid, then faded back down. We're going into our discussion with the NASDAQ almost flat, S&P's little over 6 points higher.
Break it. We got the 21 and the 63, so that's going to be the hard one to break. Come on, Santa. I need 262.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
If we can stay above the 63, we're going to have it made.
Stocks moving around a good bit this morning. Was just caught a bid during that break there. Diane King Hall and Mike McCurr joined me for a check-in on the session. Diane's senior markets correspondent in New York. Mike's director of Schwab Advisor Services. We've been bouncing around all morning, Diane. It seems like the market can't figure out what to do, but mostly catching bids.
Yeah, it seems to be a head scratcher so far at the beginning of 2025. It looked like out the gate that bullish sentiment was returning to the market, especially when you think about the final days of 2024 and some flagging, although obviously 2024 was a strong year for stocks, a banner year in fact, especially when you think about the S&P 500's performance, nearly a mirror of 2023, which no one called at the beginning of 2024. And so far this year, it just really seems to be kind of a tug of war, but you see some of the old leadership and old themes returning, especially when you look at the Mag 7. You've got NVIDIA posting gains, still develop the ball. Who knows how much longer that happens. You have Meta posting some gains. You have Amazon, but you do still have some stocks that are flagging within the Mag 7. So right now, it seems to be all over the place.
Yeah.
VIX has dropped pretty strong right there. We're at a head and shoulders on the VIX.
We've got a couple specific stocks weighing. What's interesting to me, Mike, from the macro side is the dollar is jamming here. And oftentimes that higher dollar correlates with higher yields, but today it's not. Bonds are actually bid a little bit. What do you see on the macro?
I'll end up selling this sucker too early. I know I will.
I think you're nailing a couple really important points.
Keep going.
As much as NVIDIA might be up today, up 2%, leading to the
59.2186.
You look at sort of the sector and factorial performance today. It seems very mean revision-y, for lack of a legitimate word there. You've got energy, utilities, value, all leading the way.
You got to break this resistance line off this flag.
Which is sort of that theme that we saw into the end of the year.
How do we get out now?
Apple lower. You got some of the other ones lower too. Netflix. So I think still the market is struggling to figure out which way it wants to go. So if we pull up the S&P,
it's going to do that until Trump's elected.
We're in this tug of war, like Diane mentioned, between the bulls and the bears. From a short-term and medium-term perspective, the technicals are negative. We got that double major distribution day on December 18th. You had the McClellan oscillator, the bottom panel indicator there, below negative 100. Breadth momentum, that's the top panel indicator.
That sucked.
Way into that blowout capitulation levels of breadth momentum. And right now, the market is above key resistance levels, so the 50 and 20-day moving averages in purple and in green, right around 59.45 on the 50-day and then 6,000 on the 20-day. Those are clear, definable resistance levels. If we get back above there, I would say the trend, short and medium term, might be changing in bulls' favor. On the downside, clear support at the 100-day moving average at 5,800 on the S&P. For right now, I think it's a volatile ping-pongy type session. Volatility with the amount of movement we've had intraday, volatility at 17 seems a little bit low to me on the VIX. But until we break those levels, I would say that it will continue to be volatile and really, directionless, so to speak.
Yeah. 4.6 on the 10 years, so 4.56 rather, getting a little bit of pushback to some of the treasury buying from early. Bitcoin was up a little bit more. That kind of cooled off a little bit. Getting our bearings, Diane, feels like kind of the theme here, because the bonds and the dollar don't quite match. The stock market's kind of jumbled up a little bit, going both ways, and to Mike's point, VIX maybe a little bit sleepy. So, hey, we got to get started somehow.
Yeah, I mean, I think in terms of the movement that we've seen in terms of yields, you saw some of that
The Bears ain't helping.
jobless claims data, which came in a little weaker than expected. I mean, but it's still, you know, there's to be fair, there's still.
Let's be fair and cut you off right now. So I've had so many chances to get out of this trade with profit. I didn't like that candle, that's for sure. VIX dropped down to 1713 again. It looks kind of bullish. We had that fallen wedge. We got another flag forming here with a high steep. I think we're going to break, but I'm not sure. The 9 crossed the 21 and we're above the 63. More we wait.
On the Schwab Network.
Ameritrade is now part of Schwab.
Damn it.
Bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Good morning. We're 9 minutes into the trading day. Welcome to Trading 360. Happy New Year. We're all excited to be back here. I'm Nicole Petalides, live on the floor of the New York Stock Exchange here with you today. Coming up on today's show, our 360 Spotlight would take a look at some of the investing themes for 2025. Our disruptor,
10 o'clock, 11 o'clock.
Double upgrading the stock to a buy from a sell. And in our 360 round, we'll dive into which sectors you should be watching in the new year, which ones you shouldn't. All right, let's take a look at the numbers. Obviously, another incredible year that we had last year, back-to-back, more than 20% gains on the S&P. Today, right now, we're kicking off with a gain of about 1/3 of 1%. We're sitting at 5,900 off the recent highs. The Nasdaq is up 1/3 of 1%. The Dow is up right now about 1/4 of 1%, and the Russell also gaining. Oil and gold are both higher today. 73.35 the barrel for oil, so that's been creeping higher, right? Gold 26.67 the barrel. I'm sorry, a troy ounce, that's up $26. The VIX is at 17.25. The dollar is a big piece of news because that got up to 109. It's at 108.96 right now, and Bitcoin 97,225, up over 3%. We're also having a developing story today. Everybody's following shares of Tesla. And in fact, they're falling to start this year. The company reported its deliveries for the fourth quarter, all of 2024 as well. And the EV leader delivered a record total of 495,570 deliveries in the quarter. But total deliveries fell for the first time year over year to 1.78 million, down from 1.81 million 2023. Now, Wedbush's Dan Ives in a note expressed confidence that Tesla can accelerate delivery growth in 2025, particularly as investors look for the launch of a lower-priced EV in the early part of 2025. That would spur growth for the vehicle.
Now, what's the difference between that one and this one?
Shares of Tesla are currently on pace to be
that's the
down
difference.
for the 5th consecutive day, which would be its worst losing streak since early
Yeah,
November.
there it goes.
When shares fell for 6 straight days. All right, let's get some insights of the news shaping the markets. For that, we welcome in Ted Weisberg is here, founder, president, Seaport Securities. Another year, here we are, Ted Weisberg. Look, year after year, we keep showing up, and the last couple of years have been pretty great. I mean, what did you think of 2024?
Well, I think, first of all, 2024 was a great year if we could have ended it at the end of November. I think December, for a lot of folks, was a little problematical, but on balance, December aside, yes, it was a very good year. The big question is going forward to next year is can we repeat what we've seen in 24 and in 23? Anything is possible. Perhaps it happens, perhaps it doesn't. But I think in general we have to assume that stocks in general are extended, pretty extended, especially these big mega cap names.
Right, and that's the whole thing. I mean, we saw at the end of last week, a lot of those tech names got hit, right, going into the weekend. So of recent, they've been a little bit out of favor. Your thoughts going forward?
Well, first of all, you can't really, bless you, you can't really use December as a guide because December is a very squirrely month. People tend to the weak stocks tend to get weaker, and we can talk briefly about that in a second. People tend to take losses, offset the losses with profits, or vice versa. Quite frankly,
3 white black crows.
What you really want to do is take the profits in January of the new year, in this case 2025, because you don't have to really deal with the taxes on those profits till the spring of 2026. So you get to play with the money for almost a year and a half. But December is always a funny month. So you have profit taking, and it's clearly a lot of profits in the big techs. The weak stocks, which we'll talk about, tend to get weaker, which I think creates some interesting buying opportunities. But going forward, I think it's going to be all about interest rates again. I don't see anything dramatically changing in 2025. The focus is going to be growth and earnings, as it should be, and the earnings and the growth continue to be in the tech sector. It's just a matter of getting the right rabbits.
Understood. So what are you going to be buying? I mean, look, it's better to say you're more positive than worried about stuff, right? I mean, you're not really worried that the market's selling off this year, are you?
Au contraire, I'm always worried. Basically, Nicole, and I've said this to you before, what's the first thing you do when you walk into a dark movie theater? it's not look for a seat. The first thing you're supposed to do when you walk into a dark theater is look for the exits. And the first thing you do when you enter into the stock market is look for the exits. Always keep an eye on where the exits are. So the bottom line is, I'm always worried.
He's
I
always
stay
worried.
scared. On the other hand,
Okay.
we're long a lot of stocks, and we're going to stay long. The problem for everybody is, what do you buy now with new money? And then it becomes a little difficult. I mean, do you still chase the big tech names? Perhaps. I don't know. It's not kind of where I want to be. Yes, I still like Meta, and I think Meta's a cheap stock. But
Still like Meta. You've liked that one since the beginning.
Well, that's 10 years of liking Meta.
Yes.
But that's not going to last forever either, by the way. But for the
No.
moment, you know, in the tech sector, that's someplace where I'd like to be. Perhaps Oracle. But right now, I'm actually more focused on lumps of coal from December of 2020.
So yesterday's dogs, today's winners, or something? What do you got? What are some names that
Well, some of the names I need. Now, by the way, these are stocks all making new lows. Have consistently been on the new lows list for a good 4 or 5 weeks.
Yeah.
It is. I'm not making a fundamental.
AVGO came
buy,
down
sell,
pretty
and
good.
Here, I'm just buying what I think are good companies that, for one reason or another, the stocks are way out of favor. And some of the names, Nestle's, Dow Chemical,
right,
Schlumberger, Intel, and CVS. Now, you can make a great negative case for each one of those names, but I find them all relatively attractive, and over the 50 some odd years that I've been doing this year-end shopping list, you know, and also, by the way, with Wall Street, every time there's a fire sale on Wall Street, nobody comes. And they don't come because they're all scared to death. Yeah, they should,
I mean,
but they're all
should,
scared to death.
because if you liked it at 100 or something, you should like it at 90. I mean,
Well,
right? If there's a
yeah,
stock or something.
I mean,
that was always the saying, right?
Exactly. There's a little more to it than that, but at the end of the day, it is a bit of a guessing game.
Yeah.
But out of these lumps of coal, it's amazing how many diamonds you can find. You just have to be a little patient.
How many lumps of
But
coal, how many diamonds you can
freaking-
find?
to fundamentally try to find companies that are good companies with good solid balance sheets.
Apple has new
Hopefully they're
lows.
Paying a dividend so you can get paid while you wait. But because the stocks are out of favor, and if you can think like a contrarian, therein lies, I think, some interesting opportunities.
So it's interesting. You had Nestle, Dow Chemical, Intel, CVS. Did I miss one?
Slob, SLB, Schlumberger.
Yeah, Schlumberger. You know, in the energy space. So, you know, and you have a variety here.
Apple's
right?
at the 9 on the weekly.
Dow Chemical, you have, CVS and Health, right?
Right,
And
I mean,
Schlumberger.
and all out of
variety,
favor.
a variety.
Right,
Yeah.
and all out of favor.
Apple can hit the
All decent
63.
companies. You know, in many years, it would be very low price stocks that I would look at. This year is a bit unusual because these are relatively not low price stocks, but you know, Dow at 40 is well down from its highs. Nestle's in the low 80s is down from over 100.
Yeah.
So on a relative basis, they look attractive. On the other hand, if I'm wrong, there's plenty of room for more downside in them. But hopefully I won't be wrong.
What happened to your Chubb?
Oh, well,
Chubb was a great pick on your part. You did great with Chubb here. You kept picking that.
Well,
What's the latest?
I would-
haven't looked at it
I
lately.
would
Yeah, this ain't
absolutely
looking too
buy
good.
some, But I would buy a lot of insurance stocks because insurance and reinsurance, in my opinion, perhaps are the best businesses in the world.
Yeah, I
Insurance
remember you even had sorry.
No, what I was going to say, insurance companies know how to coin money. And over the longer term, these are great stocks to own. Now, there are many stocks in those two sectors of insurance and reinsurance. Obviously, you got to do your homework.
Remember you were talking about maybe even Warren Buffett wanting to collaborate or buy Chubb.
Well, I mean, that's just a
It was fun. It was a fun sort of potential possibility or something,
Well,
right?
I still think it is a possibility because my thinking is that Berkshire Hathaway already is the 800-pound gorilla in the insurance world, and therefore, why would they want to make a passive investment in yet another insurance company? In this case, Chubb. So, you know, I'm taking 1 and 1 and coming up with 6, and I'm just fantasizing, if you will, that Buffett basically will go after Chubb, not because he wants another insurance company, but what he really wants are the folks running Chubb to come into Berkshire and help him run Berkshire.
What about, that's interesting, because that would be a great team, right? What about some of the other things, like Bitcoin?
30 minutes got a triple bottom.
Interested in any of that?
Well, Bitcoin, you got the wrong guy, because...
you don't touch it.
Well,
not your thing.
if I wanted to play Bitcoin, for me, simplistically, it would be a stock like Coinbase, which I don't own, because it's an exchange, and you can benefit from the strength or weakness of, as it might be in Bitcoin. As far as direct investment in Bitcoin, I have no. To be polite, I have no opinion.
Oh, so you're staying away. Are you worried about the strength of the U.S. dollar getting up to 109? I mean, and watching bond yields right now. What do we have? 4.57 on the 10-year.
Well, I think strength in the U.S. dollar is a negative in the sense that it negatively impacts big U.S. multi-country U.S. companies that do a lot of business offshore. On the other hand, it does benefit offshore companies that do business in the U.S. So to that degree, I think it's important.
Yeah.
But to get back to gold, because my interest in gold started right here on the floor of the New York Stock Exchange back in the mid-'80s, because there used to be some folks down here that used to sell gold eagles, and I would buy one a month, and I still have them.
Oh, that's cool.
I still have them. They were about $400, give or take $20 or $30 back in the mid-'80s. So I've got a whole,
The 590s
these gold eagles. I have no
for
idea what to do with them,
tomorrow.
except that I paid around $400, and now they're worth about $2,600.
Yeah.
So,
yeah.
but it's been.
That's pretty cool.
Well, it's been a long
I
time.
always wanted to do that for my kids.
At 125.
Put away gold coin. I never did that, but it's a good thing. I mean, for the grandchildren.
Right,
and stuff,
and-
right. That's cool.
And they look just like Godiva chocolates.
Oh.
You know how that.
Wow. That's smart of you. Don't eat them.
Don't eat them though. Yeah, break
Ted
your teeth.
Weisberg,
Anyway.
wonderful to see you. Happy, healthy.
Yeah, come on, Vix.
And
Drop.
to all your viewers.
Thanks. Okay, good to see Teddy again in the new year. Ted Weisberg, Seaport Securities. Thanks for being here. Coming up, plenty more to come here on Trading 360. Up next, the big three stocks, three charts, three trades. Kevin Green go through the technicals. Alan Nuckman will take us through the trades for Coterra Energy, Birkenstock, silver. Next here on Trading 360 on Schwab Network.
Probably scared a lot of bulls out of the trade now. $125 to $133 on the 590s. Sounds like the Apple news is not too good.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalides. We're live. We're back. It's a new year. We're glad you're with us. So it's time for the ever popular Big Three. People love to look at this. 3 stocks, 3 charts, 3 trades. Kevin Green will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to see you both. Happy New Year. So before we start looking at the specific names, Alan, how are you feeling as we kick off a new month and a new year?
Bit of a pause in December, as Teddy had talked about, but there's going to be some great opportunities. It's definitely going to be a stock pickers market with a new administration this year, so it should be a lot of excitement. And again, the key is having the discipline to take advantage of it, because there are going to be a lot of, how should we say politely, separation, I would think, in the individual stocks versus the macro market, as we've had just mainly the macro market move in the last couple of years.
Understood. So where did you come up with Coterra?
Do you understand?
Why is this one on your radar today?
Well, I still think, and I've been disappointed over and over, but I'm a limited risk options trader in these energy stocks. So I'm starting to see some life in crude, and especially natural gas broke out to the upside last week. And natural gas has a lot of room to move. In crude oil, we can get above the $73, and then we can get to 75 rather quickly, and then that's the midpoint of the action for the last couple of years. So there's a lot of potential there.
580 for the SPY.
This used to be Cabot Oil. This is a stock that's been trading between 20 and 30 for years, between 23 and 29 here for the year. So we're at the 26 midpoint, which is important. But what I follow, every week we talk about this, is the money flow. There's leverage long accumulation in options in this stock. So someone's building a position here. So that's a very positive, smart money sign. And it's a stock that's got a PE of 15, so it's an undervalued stock. The way I'm looking to play it here is...
My lowest support was 586, and I see you're 585.
3 months of time, it's $3 in the money. And if we get up to that 29 level, which is the top of the range again, then this option will gain nearly 100%.
Okay, and the money flow is key. Let's see what Kevin has to say. Happy New Year, Kevin Green. Good to see you.
Happy New Year. Yeah, if you're kind of looking at the stock setup, I mean, earlier last year, around April, we did see a consolidation pattern, or this bearish descending channel pattern taking place here. And we did see a break of that happening at around August of this year, of last year now, where it did actually create and develop this inverse head and shoulders pattern. That's where we actually see the head of
damn, I didn't want that.
Inverse head and shoulders sitting at around $22.30 back in early September, came back, tried to retest, and then we broke out higher. Now, if we actually extend that channel that I was talking about earlier in April, you can continue to move it over here. This is where we actually saw an area of resistance. In November, we saw the stock hit around $27.60, backed off, and now we actually saw a break lower of that 200-day moving average. But today, it's above the 200-day, trying to hold it for right now. And what you'd like to see is actually some follow-through, a breakout to the upside, getting above that $27.30 level. And that's probably where you could see, once again, kind of getting towards $28.50, $29 here. If you do see a breakdown, you would see that point of control on the volume profile sitting at around $24.30 as your area of support. RSI, for the most part, is making higher lows.
The fuck did I do here?
Trend, but that MACD is really what I'm keeping my eye out on, and I'm sure Alan is doing the same thing. When you see that MACD cross the 12 EMA above the 26 EMA, Nicole, it also does usually coincide with prices moving higher, and we actually did just see that cross around 2 trading sessions ago. So for the most part, this is actually a bullish setup, but it does have to get...
Man, I've screwed my account up somehow. Fuck. What have I done? I've put reset. I don't know what that means. Oh shit. How am I going to fix this? do? I've never pushed reset time. I know I screwed it up somehow. Damn it. What have I done? I don't know what I've done here. Unexpected error happened. Unexpected error happened. If problem persists, please contact the support center. Shit. Man, this sucks. I have no idea what I just did. I'm definitely not getting all my account things back in here. Okay. I have no clue what I've done here. Oh, here we go. Wow, that's strange. There we go. Message. I don't see message on here.
Silver, though, Kevin is 100% right. As guy, when people hate it, that's when you want to be loving it.
Right, okay. Okay, gentlemen, great to see you both for the big three today. A nice look there at three great names. Thank you very much. And Alan Nuckman of BullseyeOption.com and Kevin Green there. Happy New Year and our first big three of 2025. Many more to come. Coming up next, we're going to spotlight some investing themes for this new year, 2025. And Caleb Silver will be joining us from Investo.
Freak out.
What people are watching, what's on the radar, what are they looking up, how are they feeling? Trading 360, we'll be right back.
I don't know what I did wrong there, that's for sure. On demand.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you
got a megaphone with an inverse head and shoulders. Do.
With
I'd
Schwab
like to know what I did.
It's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes, 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3
There it
p.m.
kind of
Eastern.
comes down.
Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. time to spotlight some of the top investing themes for 2025. What is on people's radars? What have they been looking up? Where's the interest? Caleb Silver, editor-in-chief at Investopedia, is with us. Before we look ahead, Caleb, how about a little look back at 2024? Maybe some themes or things that stood out.
Yeah, there was a lot of them. I mean, there's a lot of superlatives that go with last year. Let me just hit a couple of numbers because they're fascinating.
Sure.
Retail investor flow. That's you, me, a lot of your viewers here. $265 billion in inflows into the capital markets, into stocks in 2024. Sounds like a lot. Actually, $25 billion less than the 3-year average. We hit a high mark in 2020, but there's still a lot of retail investor enthusiasm. And guess what they love? High beta stocks. You know the ones. They're the top performers in 2024. High beta rules the roost right now. Second straight year, retail investors beat the S&P 500 just by picking individual stocks. When you look at where the flows went, right. You bet on the big ones, you beat the market. That's the second straight year in a row that happens. That's very rare. First year, Nicole, that investors actually beat the
Very
Nasdaq
rare.
right by picking the big winners, the big names, the giant stocks. They did super well. And in 2024, second year, one single stock, and it was NVIDIA, had more flows than any of the biggest ETFs. So that shows you what kind of momentum there is, but it's momentum for big names, big stocks, and if you were invested in those in 2024, you had a fabulous year. If you were an index investor, you also had a fabulous year, but it was a year of really big stocks, and guess what their favorite stocks are? NVIDIA, Tesla, Palantir, right? You know these names, the top performers.
Yeah, I was looking. Palantir was up. I was taking some notes on the 31st to try and get some year-end numbers. 340%.
Yeah, how you doing?
I mean,
Not different.
wow.
It's more than that even.
Right? I mean, I know NVIDIA had the most in the flows that you're saying. Also, a great
They can't get that
performer,
percentage right for some reason on PLTR for the yearly high.
NVIDIA was 171, I saw. Any other names that really, I mean, even Netflix and Amazon. Netflix was 83%. 65%.
One said 50, they say 300. It's more like 5.
5%. There were some great performances.
Right. Big stocks got bigger, and anything that was in the AI
1566 to 84.
Bitcoin and anything around the Bitcoin universe did very well. Just look at MicroStrategy for an example. So you saw a lot of flows into the big stocks, into some new names as well. Now, Palantir didn't just get here. This is a well-established company that has some very big contracts with the government and some of the biggest firms on the planet.
It's 500%. I don't get it.
25 as well, if you read a lot of the research reports. And the chip makers, especially the ones that are around the AI universe, did extremely well. Is 2025 going to be the year that all of that investment into AI and AI chip making pays off in terms of expanding margins, right? We're going to keep this profit growth going so that this multiple doesn't seem so crazy.
Why is it not tradable?
Yeah, I know, it's amazing. I will add, folks, though, I did find some outliers, not in the high beta section, but like just the good old Goldman Sachs. That was up 48%. Berkshire Hathaway was up nearly 30%. Last but not least, the one that really made me rub my eyes, UAL.
You rub my eyes.
35%.
Right.
So incredible. So now, what are some of the themes going forward?
Yeah, well,
you know, now what are people saying? Are they going to continue with the momentum? Are they going to pick the dogs?
Yeah, I think retail investors like to herd together into the biggest stocks, into the biggest index funds and ETFs, and I don't expect that to change. It's very hard for us to defer from our strategy when the strategy's paid off so well. And if you're thinking, oh, I think I'll go for value now just because it hasn't had a good couple of years, you're probably going to get lost because investors are just flocking to the bigger names. Institutional investors are doing it, retail investors are doing it, and we have a very hard time changing our habits. So AI, you build out the super scalers was the story in 2023.
Well, there's a message center right there.
Look at NVIDIA, look at Broadcom. This is the year, 2025, of quantum AI. You've already seen some of those stocks just rip higher, thousands of % higher. I'm talking about the Rigettis, the Quantum Corps, the Quantum Computing Corps. This is where the momentum is and the excitement. Does this translate into profit growth? We want to see the AI investment actually translate into expanding margins for the companies that are putting it to work. And those companies are the biggest companies in the world. The Metas, the Alphabets, the Amazons, and the Apples. We're going to need a lot more power, Nicole, and we're going to get a lot more power, right? So oil and gas sector should do very well, especially under this administration, but we're also going to need nuclear. We're going to need hydrothermal. We're going to need other sources of power to power all of these warehouses that have the AI supercomputers in them.
Oh, yeah, I think that's going to be a huge theme. So the retail investors, the favorite stocks, we went over some of those. We hit most, but not all on the list. You had NVIDIA, Tesla, Palantir, Indy, Uber, Broadcom.
Yeah, this is where the money was flowing.
What's RGTI?
This is Rigetti. This is one of these quantum corps. That stock was up a couple $1,000%. How you doing last year?
I gotta make sure.
Was a teeny cap. Now you could call it a small cap growing into a mid cap.
And the themes for 2025, we talked about quantum
Well, I
AI.
have to sell these if they don't start
And
bouncing.
As you talk about power, you have the oil and gas, but also
Back to even again.
right?
We're going to need other sources of power, but sources of power that the Trump
Would have added on if I didn't mess that computer
The
up.
Trump administration, that administration wants to see happen, will happen. You can pretty much bet on that. But we also have, what do we have? A crypto czar. We have a very friendly nominee for Treasury Secretary and Commerce Secretary that has said Bitcoin is here to stay. Expect that to expand as well into other areas. Bitcoin everywhere in 2025. Is this the year they finally let it into 401k plans? That could be a complete game changer. And then, do interest rates matter? Look, stocks defied expectations last year amid very high interest rates, a lot of economic uncertainty. Does the terminal rate actually matter to investors if it's 4 or 5%? Because they're just buying stocks, the biggest stocks on the market and risky assets, and then sports betting and stock trading. This is the year I think they finally really converged. We saw last year that the prop betting and betting on the election was very big. I think you can bet on everything right now, so if you can bet on it, you can securitize it. I see these two themes really meshing in 2025.
It's very interesting because interest rates still relatively high here, haven't come down despite the cuts. But one thing that has slowed is definitely housing. I mean, we are seasonality. December's not a hot housing month.
No.
I mean, but rates have been high. There haven't been the mortgage apps, and the question is when will people start biting again when it comes to housing? But to your point, I mean, they're investing.
Yeah.
And we saw the spending over holiday season. That was better than expected, I believe, right? Wasn't it 4% over instead of the 3 or 3.5%?
It's always better than expected. You keep spending and confidence is high.
Yeah, people get out and they spend. So what's the final thought here now? Are there folks that are nervous about 2025? Most of the people I'm talking with still think, 8%, 10%, maybe not 20%, but they still seem positive.
Yeah, I think individual investors, by and large, depending on which survey you're looking at, whether it's ours, whether it's AAII, whether it's Bank of America's fund manager survey, everybody's bullish, which should get you a little bit scared when everybody's on one side of the boat. But if you spent time worrying about that last year, you missed out on an incredible stock market run, and the year before. I think momentum's in favor right now. Regulation's going to be a
Had
lot
this all set up, now I reset it up.
What will be the thing that ultimately gets people nervous? Will it be a debt ceiling issue? I don't know if it's going to come to that. Will it be persistently high yields and inflation that's stuck at 2.5%, 3%? That hasn't stopped us yet, so you got to feel like momentum is in favor of investors right now and in favor of big stocks, especially tech. This next leg of AI could drive it a little bit higher, but anything can happen. I'm staying invested. I'm staying long. I just think you can't get out of the way of momentum.
Yeah, and I think the sports betting, there's so much to bet on, right? I mean, it's endless. And now with more legalized gambling and more, availability of everything.
Yeah.
Right? Final thought on that.
Yeah, look at sports betting. And look
USI
at
bounced. Missed that one.
That have really revolutionized stock trading.
I really like this stock.
We're going to see stock trading and sports betting, I think, get a lot closer together since you can bet on anything and you can securitize anything. This is a space I'm going to watch very closely because we like to be promiscuous with our
5 cents off that one.
People can watch some of the games with
SPX is bouncing.
I don't have that. I have Spectrum, so we
that
watch the
upsets
games.
Knicks fans and Ranger fans. We want to see our
Where are we here?
Until they can figure out the deals.
Yeah.
Right? The fees are too high or whatever.
I got time to mess around with this shit.
By the throat, waiting. It's not fair to the folks.
No, it's not at all. But people want their sports, and it's the only live programming that we have to sit down and watch, especially if you're a sports bettor.
Sure. I mean, that's the one thing I don't love about what's going on. It's so fragmented now. You got to watch football on Thursday nights on Amazon. It's just, I don't know.
You need a dozen apps to watch your favorite teams.
It sort of really seems like a lot and not necessarily fair. Okay. Caleb Silver, wonderful.
The video says it's bearish.
This year, next year. Okay, Caleb. Thank you.
So we're about to the top of the megaphone on the SPX.
Coming up next, the disruptors, and George Silas is standing by. He's going to take a look at Cloudflare. On the move higher today, Goldman Sachs double upgrading the shares to a buy rating from a sell. So he'll give us all the details. He'll also have an example trade ready for us. That's next here at Trading 360. We'll be right back.
We got a head and shoulders, but we'd have to break this megaphone. Tempting to get out of them because I've had a hard time in this trade today. Fuck. I can't get that over there.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360.
QQQ's at the 200.
It's time now for the disruption.
SPY hit the 200.
Correspondent here with today's company, looking at Cloudflare. Goldman Sachs double upgrading the stock to a buy from a sell rating. So it's good to see you and happy New Year.
I'm gonna turn the heat up.
George, what's behind the call? What stood out to you?
Yeah, I mean, good to see you too, Nicole. Happy New Year as well. I think if you look at Cloudflare, you have to consider some of the secular catalysts that are associated with edge cloud computing. I mean, this is a company that essentially is routing all of the data center, infrastructure, the inference, if you will, results from data center computations to the end user's computer.
There's a message center way over here.
It's all about load balancing and web optimization and edge cloud computing, where a lot of the low level computations will actually be made. And I think, if you look at Cloudflare and the other CDM providers out there like Akamai and Fastly, which is one of the providers for TikTok, these are businesses which are part of this whole vertical of artificial intelligence integration with technologies, especially at the end user level. So I think if you look at the upgrade from Goldman Sachs, they seem to be a little bit behind, but if you look at Cloudflare over the last year, the stock is higher by over 30%. Now, they did double upgrade the stock today, Goldman did. They increased their price target on the name to 140 from 77. They actually moved the stock to a buy rating from a sell, and they're actually talking about the enhanced productivities associated with edge cloud computing. Also, the sales growth integration with edge cloud computing going forward into 2025. And I think this is also tied into what we're actually seeing in the periphery of players in artificial intelligence. You look at the network gear providers. These are companies like Hewlett Packard Enterprises, also Cisco Systems. These are legacy network companies. Their stocks are doing very well. And basically, Cloudflare is essentially one of the leaders in edge cloud computing, where a lot of the computations you actually see done on your PC are done offline to other web hosting companies like Cloudflare on the edge cloud. So I think this is an interesting play on this whole horizontal market that's essentially manifesting into growth with artificial intelligence. And I think this is essentially why we're seeing the stock actually reaching or getting close to those 52-week highs, but in a nice upward trend as well.
I see. Okay. So how would you go? I mean, this chart went from 66 to 119 in a pretty short time, right? And so nice run up this has had 42% in 3 months, let's say. So how would you go about an example trade?
Yeah, so I mean, even though it's run up, ideally speaking, it certainly can move higher from here. It's like you said, made a nice 3-month run because, like I said, I think this is sort of these periphery technologies that are going to start manifesting to better returns going forward because everyone was really focused on the core hardware like NVIDIA and Micron versus the periphery infrastructure names. But with that said, I think the stock may continue to the upside. But one of the things about this company is that it doesn't have a lot of liquidity and volume on an intraday basis. So you do see some incremental moves. So with that said, I'm actually going to go out to March with about 78 days to expiration. I'm going to put on a bull call spread. I'm going to buy the 110 call, and then I'm going to sell the 115 call against that. Now, earlier today, you could have placed this trade for about $2.50 a share or $250 a contract. So in essence, what we need to see is, 112.50. That's your break even because you're outlaying 250, but the stock doesn't have to make too much of a move to potentially double the money or the risk outlay, which is $2.50 to make 250. So it's basically a 1-to-1 return on risk trade. Max profit of $2.50 will be achieved if the stock hits $115 by expiration, but you have 78 days for that to happen.
I see. All right, George Sillis, great to see you. Thank you for all the details on Cloudflare today, the double upgrade, and the example trade as well for our disruptor every single day here on Trading 360. Coming up next, our 360 round, and we'll be diving more into the big picture for 2025. We're kicking off a new year. How about we look at the sectors? Which sectors could be the outperformers for this year ahead? Trading 360, we'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
Break it.
Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime,
I'm back at resistance again.
For free. Schwab Network.
Believe me, when it comes to investing,
And get out with a big buzz. We're at 140. Entry 135.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
No can do.
Look it out here.
Where are you going?
Schwab.
I'm having technical difficulties. That's what I had today.
Approach to wealth management.
That's a panic, man. You push a button, you don't know what the heck it means.
From every click to every tick.
There's no fear of missing out on next-gen investment.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network.
Can we break the megaphone? We got a 1, 2, 3 and a head and shoulders.
1 p.m. Eastern.
That showed a little bit of strength, but I don't know. I can't trust nothing today. I'm at 150 from 135. We're at resistance. I don't know to sell this or not. It's really too early. It's 10:50. Nothing's breaking resistance right now. If we break it, it'd be nice. I don't know what I did wrong, though. That's for sure. Can't remember what I pushed, and I don't want to push it again. I pushed on demand. What's that mean? Now my little help ain't showing. You have questions of Schwab acquisition? Help used to be able to go down there and break it. So I used to be able to hit help and then it'd bring up that cleanup thing. And I think I pushed that there, that on demand. I don't know what that means. I'm afraid to push it again. I know it screwed everything up big time. Everything's all screwed up. So how do I get out of it? That's my question. I don't want that. I'm in a trade right now, so I really can't fuck with it. But I don't want this. So when I go to my help, it doesn't have that cleanup thing. Screwing me up today, that's for sure. we sure want.
In seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free.
Apple agrees to pay $95 million to settle class action lawsuit over recording tied to Siri. And these fines are huge. $95 million? Who's that go to?
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Traders, and welcome to Fast Market.
Neurospace SP.
We got a great lineup for you today. Let's kick it off here. We're gonna have some option strategies, talk markets. We'll take a look at Alphabet, which rallied 35% last year, but was downgraded today. And Uber, which struggled in the last quarter of 2024 and was also downgraded this morning. And like Folio, we'll have consumer sentiment data in Meta Platforms, which spiked 65% last year, hit all-time highs just last month. Now let's take a look at the major indices, which are a bit choppy today. Maybe some thin trading here to kick off 2025. The S&P 500 up about 0.3%. The Dow up about 58 points. NASDAQ 100 up 0.5%, and leading to the upside, the small caps
which lagged last year by rising only 10% in 2024, up nearly 1% on the day. To help me break down all the market action today, let's bring in my co-host. That's Kevin Hanks. Kevin, give me your take here. Just second year in a row that the S&P 500 was up over 20%.
But down 2.5 in December.
December was weak, of course. Santa Claus rally
Didn't show.
Didn't show, but we still got today and tomorrow to make
why
up
is
some.
that?
I know it's the last 5 trading days of December, and then the first 2 of January.
Did you ever count it like that?
No,
No,
I just looked
never.
at it.
Yeah, it's 2024, 2025.
Yeah.
But Santa Claus got you got till 3 o'clock on New Year's Eve.
Yeah, and you know, we did a lot of VOD stuff on the last couple of days, the 30th and 31st here for the network. We weren't on air live, but the choppiness where they sold every rally, it was pretty prevalent. We've seen that today already.
And they did it. They've already done it today.
$85 range for the S&P 500 futures today, so it might be choppy over the next couple of days, right?
This market has a lot to work through. All right, a dollar that won't go down.
Yeah.
Yields that are firm, up around 4.5%, creeping towards 4.6%. There's just a lot going on as we get, looking at the last 2 years. Here's what I know for sure, Tom, and we don't get to promise or guarantee anything. Whatever the consensus is for where people think the market is going to be, that is where it's not going to be.
That's right.
Was a year ago?
Wasn't it like 4,500?
4,800.
4,800, okay.
Yeah, so they missed by 1,000 points.
Right.
On what they thought. Remember the rate cuts? 6 or 7.
Right.
Right?
Yep.
So
They were wrong about that.
for something other than what all the prognosticators are saying.
Yeah.
Because I'm sure that is not what's going to happen.
Yeah, it seems like lagged a little bit. S&P 500 up 53% from 2 years ago, so pretty good run. But now you're starting to run into high valuations along those lines, and new administration coming in. Let's expand this conversation. Bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, give me your take here, because as Kevin mentioned, the dollar is hitting over 2-year highs today, not causing that much headway for equities at this point, but do you expect a little bit more volatility heading into 2025 with the levels and the gains that we've seen over the last couple of years?
Yeah, I think certainly, and Happy New Year's, guys, by the way. It was a good year for the S&P 500, and I think that as we kind of flip the calendar and come into this month, it is a, we have to appreciate just how far we've come, how much we've pulled forward, and I think we got.
Why does everybody say that after I do?
In less than 2 weeks here, and it could be that we just trade sideways and consolidate between now and wait on those earnings reports, and then we're just going to have to see.
That's what I said.
For the goods, looking for 12% EPS growth for Q4, and that is. One of the pillars with a forward PE of 22 that's going to need to come to fruition. And then, looking at the VIX, December was not a great month. We saw, over the past 5 days, technology and comm services are the worst performing sectors. We saw maybe a little game theory as some of the profit taking happened prior to the commencement of 2025. And VIX is at 17. We are in contango, meaning if you look out to the next 3-4 months, we're creeping up towards 19, which tells you, I think, that there is a little bit of tentativeness in this current environment. And January is no stranger to getting some volatility. So, look at the technicals. We've stopped making new highs. The S&P is basically where it's at prior to the election
breaking the 200
that it got, the election rally that it got. It's below its 50-day simple moving average. Look at the Dow Jones transports sitting at the 200-day simple moving average. Dow Jones sitting at the
lot of negativity.
Simple moving average. Russell is rolled over. It's seeing some outperformance today, but those yields are definitely going to be something to watch. If you look at the 10-year, there 4.7 is really the 52-week high. We spent basically the month of last April between 4.6 and 4.7. If we start to creep above 4.7, yeah, I would suspect that's only going to introduce more volatility.
Yeah, I'm pretty shocked at the dollar move here. I think that's going to become a concern when it gets to these levels that we haven't seen. I think for a lot of these multinationals, Nathan mentioned, you know, going into January, typically we see some chop, right? Some added volatility, but earnings season kicks off in a couple weeks here, Kev, and that might be, you know, where the rubber meets the road here as far as you know, acceptance of these valuations that we have right now.
Our data keeps coming in strong, and international data keeps coming in weak.
Yeah.
And there's your dollar rally right there. You saw it in China PMIs overnight. Another miss on that. So that, I think, is where this whole thing is happening. And I'm not as concerned about the dollar as I am about yields.
Yeah.
And I think if I have to pick one A and one B, it's yields first, then the dollar. Because the dollar's indicative of our economy.
Right.
And our economy being strong isn't the worst thing in the world for U.S. stocks. Now, yields, that's different. I think that's the most important number for 2025. Because yields, even if they're quiet, it's good for stocks, Tom. We just don't want yields, like Nate said, 4.7 and above. If they get, you know, if they break out around 4.7 and start heading towards 5%, all bets are off on this market.
Yep, and they turned around today.
Yeah.
The 10-year was at 4.517 earlier today, 4.518, and it's reversed higher now. Nate, when you take a look at this, the concentration that we saw in 2024, where, you know, the top 10 stocks in the S&P 500 make up nearly 40% of the moves that we're seeing in that index, the equal weight index for the S&P 500
I think
hit
we're
an
weak.
all-time high just a couple months ago, but it was down nearly 7% last month. Russell underperformed when that hit all-time highs. So there was some pressure and a little rotation out of that, and everybody pushed back into Mag 7 and some of these top tech names. Do you expect that to continue? Because I think that's one of the concerns right now is that, you know, we're getting led by a few stocks.
Yeah, we're back. Yeah, back to the common playbook, right? You know, go after where the growth is and where those established mega caps, you know, tend to be in terms of being a relatively safe place to put your money in. You know, Tom, if I had to sum it up, you know, what happened with all this talk around the Fed and being on our side and the economy doing great and we're having our cake and eating it too? It was yields that came back into the equation. I think that really, you know, hit the Russell again. You know, it's been hard for the Russell did set a new all-time high technically, I think back in November, but it's you know, been rolling over since then. Market breadth has rolled over during the month of December there, and so yeah, we're back to this common playbook where you're seeing a lot of that money flow going back into mega cap tech. And you know, that's where the growth is, and the rates, you know, they don't have to worry about, you know, the borrowing costs or anything like that. So I think that's another reason why money tends to find its way there. Cyclicals, generally speaking, I mean, financials had a really good year last year. There's a lot of expectations around there. So some of those cyclical type industries are going to likely benefit provided the economy remains strong. And, you know, you look at the Atlanta Fed GDP, we got 3.1%. They might downtick that. We had weak construction spending today, and so I think that might, you know, tick us down to 3%, but that's still very healthy in terms of our GDP expectations. So, you know, look, it's one of those markets where you've got to just respect where the money flow is going, where that relative strength is going towards. And yeah, I think there is something to going after those underperforming sectors. Energy has been doing really well.
Go get some water.
Oil prices have been ticking up there. So I think that there is some room to go look for some of those dogs of the Dow, so to speak, some of those sectors that have underperformed, and at the same time, just kind of respecting where mega cap tech stands in the global economy. And I think the dollar, to Kevin's point, I agree, the dollar definitely is second to yields. If you're a multinational and you're getting, you know, Oracle hinted at, you know, getting hit by the dollar in their December earnings when they reported last month. But that's not a bad reason. If you're just having an exchange rate issue and it's not fundamentally hitting the companies, I think that's acceptable for the most part to investors. I think we better not get up to like 113. I think that was our 2021 high. So we got to keep an eye on it.
Within reason, of course. Within reason.
Yes, within reason.
Two things jumping off the page at me, Tom.
Right.
Number one, look at Apple.
Well, they're cutting prices starting January 4th on some all the iPhone models in China by up to, I think it's about $68, $70 per phone.
Apple, that we've been talking about for weeks on this show, the valuation and how the bar is set high. And then, Tom, here's a little trivia. NVIDIA hit $140 on June 2nd. Think about that. 6 months of nothing.
And it was up for NVIDIA. It was up over 170% in 2024.
Yeah, so I mean, there's the two things that I'm watching this market going, wow, look at that.
Yeah, well, and take a look at some other names in there. Tesla's getting hit today on the back of their delivery numbers that came in lighter than expectations. There's the chart on NVIDIA. Yeah, it's been a dead in the water trade.
Yeah.
Yeah, and watch NVIDIA January 6th on Monday. Jensen Huang gives the keynote at the CES conference there. He's usually pretty upbeat and optimistic, and probably maybe
things like insane. Demand is insane.
Yeah, supporting his company like he should, as a good CEO does. I think that's going to be key. But Nate, when you take a look at maybe the euphoria around Tesla, let's get into that a little bit. Up about 62% last year, fallen today on the back of these delivery numbers. So I guess auto sales do matter for Tesla, but I'm surprised it's not down even more just because of the run that we had the last 2 months of the year.
Yeah, exactly. And I think it might be a little bit of an excuse. I know it's a big headline to say, hey, this is the first year since the company's inception that they've had year-over-year decline in deliveries. And I do think competition is a concern within that segment of the business, but this stock really trades on, all the secondary and tertiary plays that it potentially has in its relationship with the White House, so to speak. That I think that, it's just a classic momentum play here. And
IWM's got a triple top break.
A little bit of that speculative fervor going back
QQQ
to
had a triple top
rally. We definitely saw it in Tesla. It essentially doubled in a couple of months. We saw it in the likes of Bitcoin
or wedge, still triple top.
MicroStrategy has rolled over, down below its 50-day.
Can we break the megaphone? This is number 4, so we got to break number 4.
If you're a trader and
looking for these suckers now.
Of where does that risk sentiment kind of stand? As long as Bitcoin's above,
I don't want to sell them now, though.
Likely okay, but we had just gotten, I think, a little bit too over our heels.
God,
the optimism about this.
A lot of negativity.
And just how far we can push stocks, and I think that December
I agree.
Conveyed some of that buyer's exhaustion within the speculative realm that we've seen that's coming out of Tesla and coming out of those other names.
Not with Tesla
that have been doing so well.
Yeah, when you take a look at this, I mentioned earlier that the breadth of the rally had kind of stalled with the downturn in the Russell, the downturn in the S&P 500 equal weight index. But the number of companies, and I always go back to this when I see extremes, where the S&P 500 is doing well today, right? But then you look at companies within the S&P 500, there's 500 components.
RGTI.
The number of
I love this company.
50-day moving average, and I know, Nate, that you talk a lot about technicals. You start looking at technicals when you see stretches, but only 21% of the companies are above their 50-day moving average.
Things are looking halfway normal again.
The SPX basically about 2% below its all-time highs. That divergence is really becoming glaring at this point, Kev.
3 white soldiers off the 200.
The other companies are going to play catch-up, or they're going to rotate out of those big tech winners and into some of the maybe value materials, industrials.
It tells me that there's the mother of all rotations is coming.
Right.
Or
that's a leading indicator that the Mag 7 needs to come back in.
Or, the fact that so few are above their 50-day moving average sounds bullish, actually.
I mean, it doesn't sound not bullish. That's kind of that was my question.
I mean, the counterintuitive take on that is so few above that sounds bullish to me, like the others can catch up.
Right. Yeah, and that would lend some support, Nate, when you look at that. And I always look at it, it's just a tracking type of thing to watch, but it's pretty glaring right now compared to the overall benchmark index, right?
It is, and I think that the reason we
I missed
pay
my
so
chance
much
to start
attention
loading
to
on
it
that
is
one.
we pull out the historical playbooks and we look at, what are the characteristics of a pro-cyclical economy, or if we're in one of these pro-business cycles and a bull market. The characteristics are that you see that broadening, you see that participation. Because the economy is healthy, all industries are participating, all industries are moving up. So I recognize that historically that has been our tell, and at the same time, I also want to give credit to the digitization of the economy and what is going on within mega cap tech. You have these conglomerates that are, their ecosystem just overlays the globe, and they have the capital and the resources and, quite frankly, regulation that moves faster than regulation could keep up with. That I think that is one of the primary reasons why we see this narrowing of the rally. Is it something that we're going to have to get used to? It might be. As a bull, would it be nicer to see more broadening of the breadth? I mean, yeah, I think we all like to see that.
Yeah, as I mentioned before, the top or 40% of the market cap within the S&P 500 is 10 names within the S&P 500. So maybe that's part of the reason also. All right, guys, let's take a quick break. We come back, we're going to take a look at Alphabet. The Google parent stock rallied over 35% last year, but was downgraded today. I don't think the stock cares that much because the stock's actually positive by about 0.5%. We're talking Google Alphabet when we come back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice.
Okay. NVIDIA, and then my famous RGIT, Tesla down $20. Man, this thing just, I love this stock. I missed my chance to get long on it. SPX dropping more, big knife. It's going to come all the way back down to the bottom of the megaphone. Get ready. You can drop more. The 5920s. It's 12:23 a.m. I ain't trading much today. Just not feeling it. Not at all.
Hit to their moat, so to speak. Look, you got a company here with a forward PE of 23. You got a PEG ratio of 1.1. They do pay a dividend. The technicals look great now. Yes, keep an eye on those court cases and the developments in the coming months and/or years. I don't think that they're going to trial until maybe April. I think is what
I ain't seen so many court cases on these companies.
Feels like the stock is still.
So many long time.
And that's evidenced by today it being up in today's downgrade.
Nate, take 30 seconds and educate our listeners about the PEG ratio and what is high, what is low, what is attractive.
Sure, yeah, PEG ratio.
83 all the way up to 200
ratio. So
in 3 years.
Price to earnings ratio of your stock XYZ, and let's say that it's 20. So you would take its annual earnings and to get a sense of what the price of the stock divided by over the last 12 months, you can either do trailing or forward to get its price to earnings ratio. Then you take their anticipated growth growth estimates based on what the analysts are saying. And let's say the analysts expect this company to grow 20% in the next year. That PEG ratio would be a 1.0. 20 price to earnings ratio divided to 20% growth rate gives you a 1.0 PEG ratio. It depends on the industry, but generally speaking, a PEG ratio of 1 is very healthy. Alphabet is at 1.1. When you get up to around a 2.0 PEG ratio, oftentimes that is said as, it's kind of fully valued around there. So the closer you are to 1 or below 1 even, ideally you can say, if the analysts are right about the growth rate, then this looks like a compelling entry point.
Yeah, and then we've been talking about that, the actual valuation.
It's just good to go over those. Things like that.
Great description there for us, Nate. You got an example trade for us. They report earnings on the 4th of February.
IWM's at a head and shoulder, hit the right shoulder the second time.
Yeah, example trade on a downgrade day.
SPY, double bottom.
There you go.
We got the right shoulder here on the SPX.
Take that, analyst.
Yes.
So look, the company is reporting on February 4th. They had a phenomenal quarter last October. If you expect that to be echoed in this upcoming Q4 earnings results on February 4th, one way you could position yourself bullishly is I've got a long call calendar here, and I'm going just out of the money to the 195 strike, and I'm buying that.
Okay, get ready for the SPX.
195 call, and simultaneously selling the January 17th 195 call against that. And the debit around there is around $4.10 or so last I checked. And the reason that I am using this example is just to look at when we talk about, theta, time decay, and options. When you're going for the around the money options and you're looking at 30 days to expiration, the at the money options or around the money options tend to lose their value. That's where the most.
Okay, we're about ready to hit the bottom of this megaphone. They came in strong and sold it off. So the 5900s, there's 20,000 contracts at 560. Let's spy. Spy. The 5, no, I don't want to do the 590s now. Man, that's a pretty nasty sell-off right there. $5,900s. They jumped out of the money pretty fast too. Fuck, I hate to go up higher. 59, well, I'm gonna go with 5900s. At $3. $285. Okay, I'm gonna give this a shot. I don't know if it's right or not. Thing in the news. We're at the bottom of that. Well, we're at the bottom of another trend line. God, look at that. Get lower than Tuesday's low. We got a long leg hammer. Tight stop. Anybody see anything in the news? The dollar, they were talking about the dollar. Well, that's going to fuck up too. Come on. Apple sold off. That could be a part of the reason. Why does it show up on that chart, not this one? So it's a Head and Shoulders. Three black crows, 4 of them, on the 5-minute. Might as well just keep on dropping. I was going to buy the 590 calls, but not no more. I ain't buying shit. Down $80 on this one. I'm not seeing nothing in the news.
Quality company. It's a little bit rich on valuation, but you're paying a premium for, I think, what
really good reason, and that's to increase the amount of user and to decrease
That was an easy loss. What? There's no way for a rebound today. Anybody see anything in the news? Google just took a big old crash. Apple held up. Look at that sell-off. I'd sell them $5,900 is at an $80 loss. Not a good way to start it. They're too afraid to put anything in their news. Big ugly candle.
$6.25 debit is what we got on here. Kevin mentioned it's down about 0.5%. By the way, the market's off 1% from when we started the show of the futures, but we'll get into that in a bit.
Get into it now.
Debit, that's your risk, 625. The debit you pay is going to be your risk on this. Your break even's about 645 on the upside, maybe 598 on the downside. For this one, Kevin, you avoid earnings on this also. It's long Vega trade. You're taking advantage of time decay. As you get closer to January 10th, weekly expiration, you can roll that short call and hopefully collect credits, which reduces your risk on this trade and your break evens. But a call.
Yeah, that's nasty.
You're more bearish on a name like this, and as Kevin mentioned, maybe do something to the downside. You know, maybe the 570 put if you think this stock's going to maybe go down, or do something at the money if you think it's just going to be or consolidating type trade. All right, good look at the call calendar there in Meta Platforms. Let's take another break. When we come back, we're going to take a look at Uber. This stock was downgraded also. It had a rough fourth quarter for the rideshare company. That stock's off over 28% from its all-time highs just a couple months ago. Stick around.
Downgrade and it popped. Nothing makes sense anymore.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Uber, let's get that market update because stocks have sold off since we started the show by over 1% from when we started. We were S&P 500 was up over 0.3%, now down nearly 0.7%. Dow Industrial is now up 280 points. The Nasdaq down about 0.8%. The Russell 2000 fractionally higher.
God, what a...
It's just negative. Futures are negative for the Russell, but the index up 0.1%. So yeah, big sell-off here. Dollar maybe rising to record levels. Actually, that's kind of consolidated, but yields, the 10-year are now up to 4.58%. So yeah, I'm looking
crude oil.
Yeah, look at crude oil above $73 a barrel. So that's at I believe over 2-month highs there for crude oil at this point. So yeah, big sell-off here. Now let's get into this discussion about Uber. It was downgraded today, but then somebody else came out and said, "Hey, we like it." Goldman Sachs added it to its U.S. conviction list as part of its monthly update. It's bringing George Tillis, senior markets contributor here. George, this stock's been taking some pain, off 28% from those 52-week highs, and that was an all-time high just a couple months ago. What's going on here in Uber, George?
Well, I think obviously it's about expectations. I think if you look at Tesla and even Google and the progress that these companies have made in terms of the autonomous vehicle technologies, I think that's presenting perhaps some challenges or the expectations of challenges for Uber. But kind of a mixed bag. And you're right. If you look at the stock performance since late October, early November, it's been down pretty significantly.
Okay, we got a double bottom.
You have to consider, autonomous driving, the challenges that will present to a company like Uber, but also some of the longer-run benefits to their underlying business. Kind of a mixed also bag of analyst calls today. JMP basically downrated the stock, admitting of a price target, but basically to a hold rating. And they actually see 2025 as sort of this transition year towards autonomous driving, where at the same time, if you look at Goldman Sachs, they actually added the stock to their conviction buy list with a $96 price target, which is actually a pretty meaningful increase target by the end of the year relative to the $62 it's trading at right now. And I think if you look at the calls, first off, Goldman Sachs is looking at the opportunities that Uber has because it is the leader in rideshare, and they also see scalable end markets or cross-selling of different markets, which includes the Uber platform, the delivery of items, in other words, other types of items, whether it's core staples or even hardware from companies like Home Depot. They actually see improving
go to the yearly,
metrics,
it's weekly.
And that might be based upon the fact that there's so many drivers now that their take of the rideshare percent is actually quite low. And like I said, this wheeling effect that they denoted from Goldman cross-selling, which may include things like advertising on their vehicles as well. But I think the bigger issue on why the stock has been down has been competition expectations with Tesla higher and Google higher. And the reason that is a problem for Uber is right now, if you just think about this contextually, the vehicle fleet is borne by the driver in terms of the expense. And so the driver needs to pay for the car, the maintenance. They're the ones that have to deal with the repairs. Autonomous driving is good as a great technology. That'll eventually potentially displace workers or the need for drivers, but that also means that Uber has to secure their own fleet of vehicles. So there's sort of a give and take going on right now where, Uber will benefit in the very long run towards autonomous driving, but they also might be borne having to bear the expense of the capital. And that includes the new technology and new vehicles with this new technology. So, maybe there's a little bit of an overshoot to the downside, I suggest in this case, because, transitions in technology, even though JMP says or has declared that they think it's going to start in 2025, these things can take longer than you expect, particularly when you're dealing with safety issues and autonomous driving in an urban environment.
George, thank you for talking about what I've been talking about for 3 years, which means no drivers means someone else has got to buy the car, right? And that's a big problem for these companies because right now Uber has an asset-light model. For them, what's going to keep them in this game is the database, the urban database of people moving, and the software, the app, right, is going to connect riders to some car. That might be where Uber's long-term play is. It's in the app and the software and their database. Now, autonomous driving is going to cause issues, but that doesn't mean Uber's going to be a big loser. And I think that is what's still not for sure. But Drew, you're right, George. There's a problem with who owns the car if there's no driver.
So, yeah, that's the thing, and that's where I think there might be a little bit of a market disconnect here. I could be wrong, but, you have to consider technology. We're leaping into different technologies, but it's not going to happen overnight. And you also have to consider the existing stock of vehicles aren't autonomous ready, so there has to be a new secular change in the fleet of vehicles across the board. I think at the end of the day, and you bring up a good point, I'll just add to it quickly, but Uber may benefit from
the daily. We got a double bottom on the SPX.
When they're not using their vehicles, lease them out to companies like Uber to, of course, for transportation of passengers and goods. So I think this is something you have to consider, but perhaps there's been a little bit of an overshoot to the downside of the name, particularly with the expectations that autonomous driving will happen sooner rather than later. It'll eventually happen, but maybe not necessarily this year.
Yeah, and last quarter they had gross bookings increased 16 to 20% year-over-year growth. I mean, it was a pretty good quarter, but that's why the stock hit all-time highs, but has pulled back. All right, great stuff. Thanks to
these options are still high on the SPX, even where we sit now.
So stock's having a nice day today on this. I think more on the Goldman side of the note than the clearly. And Lyft, its competitor, up about 4% on rumors out of the information that they might buy.
Where's the money? 14. I mean, this don't make any sense.
That's just speculation. It was out there though. On the news wires, and that's why Lyft was getting a bid. But let's look at an example trade here in Uber. If you think the stock is going to rebound over the next maybe month and a half, 2 months or so. So I looked at something a little bit longer term. Went out to the February monthly cycle. So 50 days to expiration. You got time on this one. Buy the 62.5 strike call and then sell the 72.5 strike call. $10 wide bullish call vertical. You're paying roughly about a $3 debit for that. That's going to be your risk. $300 per spread on that. Kevin, it takes your break even up to $65.50. Anything above that's going to be profitability on this one. But I think the key is giving yourself duration. So you've got time. You're going to capture an earnings event also.
Remember, Goldman's price target is what, in the 90s?
96.
Right, so you're talking about 62.72 with a chance to turn around $3 into $10. Right. Now, doesn't mean you're going to stay until $10, but you got a chance for a good double or triple on this if it starts to move. The premise is you got to be bullish on Uber. Going in, like Goldman is, you got to be bullish on them, but Uber has, it was just $87. You only need to go to get at or near 72.5.
Yep, and if you take a look at the chart on it, it seems to have bottomed out around the $60 level. It's kind of come off of that. Now we're back up to over $62.5 a share. But I think the key with this type of trade is it's directional. The debit you pay is your risk, $300 per spread. As Kevin mentioned, it can expand to $10 if it goes above 72.5. But you got duration on in this one, and the flexibility of a long directional vertical like this with some duration is that, hey, if you get a pop in the stock and it goes up to 65, 67 before expiration, if you do multiple contracts, you can start parsing that down or close the whole thing before expiration if the price of the vertical expands as the stock moves higher. So that's the way that you can look at it. Good look at a bullish call vertical there in Uber. All right, that's going to wrap it up for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
My timing's just not right on this today.
Schwab Bank Investor Checking. The checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks,
5875s,
funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
$58.75's at $5.90.
Bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Damn. I was up about 70, 80 points right there. Like, I'm gonna get swapped out again.
Good afternoon, happy Thursday, happy New Year. Welcome to Next Trade Investing. I'm Alex Coffey. No Jenny Ford today, but joining me for the hour live from the New York Stock Exchange is Diane King Hall. Diane, happy New Year to you as well. Thanks
Shit,
for,
this is the worst day of my life.
here with me. A back and forth session so far, though. Depending on when you look, you're gonna get a different story. It's pretty red right now.
No shit.
It is. I mean, it's really been an up and down kind of seesaw session where
No seesaw, baby.
Tug of war between the bears and the bulls, and it's like the market started off in the pre-market. You saw indications that we would open higher, which we did, but then you started to see some flagging across the board. You're seeing small caps hold on to a gain, but that is a very slim gain at the moment. You're looking at the Russell 2000 up just shy of 0.2%, but all the other major benchmarks have turned lower. The S&P 500 off by 0.5%, Dow off by 0.5%, NASDAQ 100 also flagging. Despite we've seen some early moves within the Mag 7, Nvidia still holding on to a gain, Meta still holding on to a gain, Amazon just barely above the flat line. But of course, you have shares of Tesla, which is its own separate situation right now in terms of the delivery numbers coming out, but that is putting pressure on Tesla. And you really have this push-pull. There was some wonder or questions as we headed into today because we had 2 days left to achieve the so-called Santa Claus rally, and so far that seems to be that lump of coal that we saw at the end of last year. Seems like it's turning the page in 2025. We'll see. We still have a little bit of time left in the trading day, Alex.
Yeah, a little bit of time. You know, Kevin Hinks and I were talking off air, and he kind of said, hey, look, I think trading kind of begins for 2025 on Monday. There's just a lot of noise these, like, last few days of a year, first few days of a new year. So looking forward to a full week next week, and at least a good start to a full week. Not starting on a Thursday. It's all thrown off. I keep thinking yesterday
I'll
was
be right
Sunday,
back.
there was football on. Yeah, and so getting back in the swing of things here, we'll have to monitor the situation as it rolls on. We'll have one eye on the market. We'll update any significant movement. All in all, though, 25%. 12-month performance for the S&P 500 is still a really, really impressive year. So despite maybe some disappointment to close things out, maybe our standards have just gotten a little bit too high for what we expect. Nonetheless, though,
that's a great point.
Yeah, nonetheless, though, we have a lot to get through on a stock-specific front here, though, Diane. So quick preview of what's to come. We're going to go back to the stock of the last few years, which is NVIDIA. That'll be our subject for FOMO. The AI boom is still very much upon us. NVIDIA, a critical player in that. We'll look back at the year that was. We'll talk some of the big winners of the S&P 500 as well as some of the ones that were more laggards for the year. Topgolf, Callaway for under 30. And then, of course, as always, upvote, downvote to kick things off here. Not a lot of a theme necessarily between these names. A lot of analyst moves, Diane, but as always, not endorsements, not recommendations. Let's begin with Cloudflare. For those who are unfamiliar with this one, this is stock ticker NET or NET, and it got an upgrade from Goldman Sachs.
Yeah, it did. It got a double upgrade essentially over there because they'd originally had a sell rating on Cloudflare. Feels like a little bit of catch-up, although overall the Goldman recommendations, because I know we're going to touch on a few of them today, some of them seem to be, a future point of view. But Cloudflare, they've double upgraded it to a buy. They had it as a sell. Their new price target is $140 per share. So a lot of room to run from where it is now, but their previous price target, to put it in perspective, was $77 a share. So they made a huge move in terms of their outlook now when it comes to Cloudflare. They said what was behind that original sell rating was they had expected slower revenue growth in this post-COVID world, and they thought that they would suffer in that respect. But since then, it has risen and far exceeded what the expectation that Goldman had seen with regard to Cloudflare. They also talked about their progress with regard to network security and
Nike down 2%. Tesla's down 7%. Remember back in the day when Tesla got down to 7%, it was a buy, but not at these high levels, I don't think. Definitely went way below support. I got 360.64 that I did in my video. Now AMD, I haven't looked at it. I'm long on this one. Shares. I'm still okay, but we're at my support level. But I have to do it to sell this one too, just to save grace. I want to keep it above that trend line, because if not, we hit the 200, and that's about a $5 dip. I have 100 shares of it. Down 180 on this one. I'm going to hold on to it and see if we can break this. Go get my coffee. Give me $500, please. Could have one heck of a rebound too, you know. We're at $5 now. I got $5.90. I didn't add nothing. Double bottom, higher low, out of a snake. I didn't see that coming. Not at all.
When it comes to the cruise liners is both they're in this post-pandemic world, the experience has become more normalized and consumers still want that experience, whether it's the airliners, because we certainly saw strength in the airliners last year, especially United. But again, across the board,
Man,
the
it's
cruise
cold
lines
in here.
become more habitual, and consumers are carving out that.
Put on a sweater.
Wow. Once upon a time,
I got it at 73 degrees. It must be freezing outside.
I had the same kind of outlook as you while I was someone, but I've had the chance to interview Jason Liberty, the CEO of Royal Caribbean, before, and I've been on one of their cruises for that Docks cruise. So I saw what the pull is. There's a lot. It's an experience on board. And so consumers are more used to that. So I think that is what is behind the story there when it comes to the cruise liners, or if we were to widen out to the airliners, just travel in general. It's part of
Check my blood pressure.
what's expected now when it comes to consumers.
No doubt, and I understand the appeal too of, hey, they're planning everything for you, meals are figured out, entertainment's provided, you're gonna see some cool things, relatively affordable as well, especially when you're talking about a vacation maybe for the entire family, trying to find different age groups, things to do. totally makes sense to me why there is an appeal there. Just doesn't actually appeal to me, at least at this point in my life. Always possible for that to change, but I can tell you what, the stocks certainly have my attention when you look at the performance of some of these names. That's going to be one of our upvotes, though. Norwegian, it's going to be joined by SoFi. We'll look at two of these names that had pretty nice 2024s, and we'll see if they can continue that success into 2025. We're going to take our first short break. We'll be right back.
SoFi is pulling back some. Not really impressive, just fourth quarter last month. So I don't know. I can't vouch for that. Doo-doo-doo. Get ready for the next leg down on the SPX. Yeah, my blood pressure's up. Just one more time. Get stopped out again here if it does. Do do do.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage. 3 p.m. Eastern, it's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access.
Yeah, it's not looking too good health-wise.
Email and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond.
You got that right, Gio.
Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Pedalides, host of Trading 360 and the
Magnificent.
Watchlist, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
I'm brave, all right. I'm getting a little bit too far out of the money now. Got to do something here. It'll be the first red day I've had in a while. I feel like giving up today. I don't feel like giving it that long shot. We'll just hold this one here for now and see. This will be my long shot.
Welcome back to Next Gen Investing. Time now for the chart master. For that, I want to bring in Kevin Green, senior markets correspondent here on the Schwab Network. And of course, I'm side by side with Alex Coffey, the co-host of Next Gen Investing, keeping the seat warm for Jenny. All right, let's start out with a look at SoFi. And KG, I know you've been paying attention to the chart for this stock getting hit today off the back of a downgrade. What are you paying attention to? What levels are you paying attention to when it comes to the chart?
I want to see if his name's spelled
I
coffee.
mean, if you look at the chart over the last year, we did see a nice basing formation pretty much for up until October of last year, and then we started seeing a little bit of a bounce higher, breaking above that 200-day moving average, coming back, retesting it, and we've been actually to the upside ever since here. But now we are flagging out a little bit, and we're getting pretty close to breaking that flag. This bull flag that's taking place here. This could be a consolidation pattern. This could also be the start of maybe a deeper pullback in the market here. We see that 20-period moving average, which was an area of support on the way up, has now acted as an area of resistance. That would be the first area that you would like to
COFFEY.
Sitting around $15.75. And if we do get a little bit more of a break. The first area is going to be the gap that I have highlighted there, around $13.30 down to $13. And then the next gap is going to be between $11.50 down to around $11 there. And then looking at that 200-period moving average from there. Now, when you're looking at the RSI, it's once again kind of following the price trend. The consolidation, the pullback, we are making lower highs as well as lower lows. And the MACD actually did have a pretty decent cross, 12 EMA below the 26. We're still above the zero line, but if we get below the zero line in the same type of trend, that probably will coincide with prices moving to the downside here. So overall, it's had a really nice run, maybe a small little pullback, maybe a little bit of a correction here before it tries to regain some steam and push higher.
All right, Alex, let's have you take away what an example trade, what's the setup for this for SoFi?
Yeah, a name that generally seems to have, kind of optimism despite this analyst's more downbeat forecast for it. So I looked at a neutral to bullish strategy for SoFi, looking at selling a risk-defined vertical spread below the market, using some of the levels that have been significant recently to kind of set up our strikes. Going out to the end of the month, the reason I chose a weekly for this particular stock here is because it gave us a little bit more strike availability than going out a little bit further in time to, let's say, the February monthly. So Jan 31st expiration, end of the month, 13.5, 12.5 put vertical. It's only a $1 wide put vertical, but when you're talking about a $13, $14 stock, $1 is a pretty significant percentage of the overall stock's value. So with that in mind, it's a little bit wider than it maybe looks on the surface. Looking for a 33-cent credit thereabouts, 30 cents, 35 cents, sort of in that wheelhouse of 1/3 the width of the strike. So assuming a 33-cent credit, your max profit would be $33 and your max risk would be 67. You realize that max profit if these options expire worthless. That's most likely to happen if the stock is above 13.5 at expiration. Risk down through that break, or from that break even below, which is 12.17. Simply subtract that credit from the short strike, 13.17 rather. And then when you get down through 12.5, that's where the risk is capped off at 67.
Go, baby.
So $1 wide spread, net of the credit, you're left with 67 cents, or in this case, what would be a max loss of $67. Neutral to bullish strategy, looking for SoFi to maintain that 13.5 level that it's creeping up towards right now.
All right, so that's SoFi, an example trade for SoFi there. Let's pivot over to
back to 450.
another one that we're taking a look at the chart for. Norwegian Cruise Line looks like it's navigating some choppy water. Sorry, I had to throw the pun in there. Despite being added to Goldman's conviction list, but it had a strong year last year. So what does the chart tell us, Kevin?
It had a strong year, starting in October. It actually was range bound, sitting in around a $6 range to the upside and downside for the better part of last year. But we did get a nice little breakout in October, came back, retested the upper channel line, sitting at around $21.30. And that's when we
set to 63.
We have the 20-period moving average as the area of support in this channel, and then we have the higher highs. If you connect that, that makes a trend line for resistance. But we have seen a consolidation and actually a little bit of a breakdown where we are starting to see actually relatively new lower lows on this uptrend. And that's not really a good sign, Diane. We are trying to test and regain the 20-period moving average is sitting at around $26.40. But if we do see a breakdown, the first area of support, you want to see a bounce coming in is at around $24.50. And if we break that, then we have some areas to really retesting that.
So I'm going to go over my watch list right now. I'm in the SPX, but I don't think it's going to be any good either. Should probably sold it there and hit 440. We'll hold on. So, put up the 20-day 1 hour. That'd probably be my best judge. Tesla, I've got 360.64. to see if that holds. Boeing had that incident in South Korea with that plane, so we're at support right now off the wicks. That's got to hold. Better we dive down a lot more, but that's definitely a solid support. 170.05. 170.05. Apple seems like it's getting bad news, and usually when Apple's down, the market goes down. So I had 246, and I got a support at 239.77. That's probably off the weekly or the daily, so we'll pull up the daily. That's yearly. It ain't that one. It's got to be the weekly. It ain't that one either. So I don't know what that support is. We got a symmetrical flag out of the snake with not a 1, 2, 3 yet on the SPX. Nike getting close to a double bottom. $70.75. Where it can go lower. DraftKings, I don't trade this, so I'm going to take this off my watch list. Lulu's down $9. It's had a pretty good run off the bottom. Have to wait on it. WBA got very low volume. Walgreens. Not in good shape. And Baidu down at support. 80.24. Down a couple more bucks and it's a quad bottom. Actually right around $80. Would be a good little spot. Then we got the Donald down 51. Cost. Down at my third support today for cost. SMCI is back down to 30. Where'd it go? Or UAVS. That's just a shit show, so I'm going to take that one off and put that on my penny stock list. UAVS. So that's on my penny watch list. Get that one off of here. Morgan Stanley down $1.02. It's had a huge run, up over 100% in a matter of a month or a year. Then we got CCL, which is probably overbought. They'll trade this quite a bit, but not right now. Cisco. What happened to Disney? Where'd Disney go? That's probably going to drop more. Chipotle, and you got Cisco up there. Chipotle used to be a great one until it got the split. I got Cisco still up at the highs. And Oracle. Look at Intel. You got a gap right there on Oracle. $164.91 to hold. If it doesn't, then it'll go and drop. Love couldn't break the pivot point. Southwest Airlines. SPY's at the 21. Could have a green day tomorrow. Here's SPX. Adobe's at a double bottom. It was at 638, and now it's at 441. Hewlett Packard's overbought. Needs to get back to 2011. That's a pivot point. $20. I'm yawning. Yeah, I'm dead. This is the worst day I've had trading in a long time. Can't get nothing. Okay, we're back down at the bottom again. Boom, there's your answer. Bye-bye. So, didn't hold much support, didn't hold magnificence. And let me see on the weekly. oh man, what, 57.84.35, and then all the way down to another $300 sell off to the 200 on the daily at 5555 5555. Five, 7, 8, 4, 3, 5. 5784, so that's another 5784. That's $50. Not today, but maybe tomorrow. $5,859. Is that on the daily, Parge? Walmart's had a good run. 250%. Real good run this year.
Started the company at a Denny's. It seems that he would still.
Denny's. Home Depot. Can go down to the 50 on Home Depot. Oh, this don't have my 200. I ain't looking at my 200. Yeah, I really screwed up my platform today. I have no idea how to get it back. I got to change all these charts around. I can't believe I pushed that button. So what happens if I push on demand now? Anybody know? I got in here and I pushed this button and it switched everything around. Lost half my charts. So I went back in here to try to find my setup I just saved the other day and it wouldn't come back. I'll practice with it tonight, but I can't mess with it now. It's causing me to lose about $800 today. And it popped 35%. God, I'm still in mine. I'm just down $300. I have those 80 58 75s. And I'll probably end up losing it. This just you can't beat the trend today. AVGO down $1 now. It's got a fallen wedge. Actually, well, a little fallen wedge. $12.40, 1:40 Eastern. I don't think nobody saw this one coming. Not the way that broke out today. I thought we were going to have a good next couple of days, but it might be next week now.
Horn, who has the day off here today. First day of the year. You think maybe she'd want to be here. Just kidding. All jokes aside, let's talk 2024, though. We're not closing the book just yet on 2024. Let's look back at some of the winners, some of the laggards on the year. Where do you want to start? You want to start good or you want to start bad?
Good, of course. We'll finish on the laggards, but like winners, I wasn't surprised when I saw the, kind of ranking of the winners of the year that Palantir topped the list. I knew that would immediately be the case, and of course, obviously we talked ad nauseum about NVIDIA, but Palantir, what a banner year it had. I mean, the stock finished up more than 300% for 2024.
They keep saying 300%.
If you had a crystal ball to predict that at the beginning of the
It's
year,
not 300%.
Even with the crystal ball, it would have been hard to predict that as the lead winner. I mean, of course, it had its positioning within the defense and U.S. contracts, but then gaining steam within commercial and gaining more commercial customers really helped that stock in 2024, Alex.
3 of the 4 names we got up on the screen, I think you could really tie the AI boom to. You got Vistra, which was sort of this nuclear energy play. It was sort of that second order of thinking about the build out for AI and the fact that this needs a lot of power as well. NVIDIA story, we just went through it. We spent a whole segment on it. You just talked Palantir. This is sort of the real embodiment of these breakthroughs in the software. But the one on the list that has my eyes, the one we haven't mentioned yet, which is the fourth one of the four on the screen, United Airlines. Now that, you could have given me probably 500 guesses, and I would have maybe never guessed United Airlines.
Yeah, I wouldn't have either, because I do agree with you that there is largely a theme when you look at the top of the list overall, and it's really an AI story, even the Vista story, because that's about the demand and the power needed to fuel this AI boom. But the United story is a completely different story. I mean, that is about both the demand and the experience.
VIX hitting 1892.
No one expected that to hold up in this year, because that originally the post-pandemic, or even during the latter part of the pandemic, there was this, that revenge spending trend. And that was expected to just be a trend. And what's happened is that has become a habit for travelers, consumers, whether you're talking about Americans or international travelers. And United has been one of the big beneficiaries of that, arguably the biggest. When you look at their the share price, they've also increased routes. They've asked to increase routes. They've had the green light to increase routes. So that stock just outperformed the S&P 500 last year, rising more than 100% for the year. It was, again, to your point about the crystal ball, yes, you could predict.
Okay, we're breaking out of the channel.
Maybe not the level, but you could predict them being as winners. But United Airlines to be in the top 5, I agree with you. I don't think anyone could have called that.
Yeah, and just missing this bunch, Broadcom, I think, would have been one that would have been high on, kind of guest lists. Also, kind of with that nuclear build-out, Constellation Energy, I think.
Them 6 notches out of the money.
But then there's also just
I'll be right back. I got pee.
I think to me as well, when you think about GoDaddy or Netflix, that would be kind of in that top 10, 12 names. But let's talk laggards. There were some, even though it was a really strong year for the market, there was actually some pretty massive drawdowns in some of these names. Now, one of them's clear. Everyone knows Intel was going to be on this list. It was very public in its disappointment. So no surprise there. I don't think Moderna is a huge surprise either. The world kind of moving on from COVID a little bit, and it being its only product. But Walgreens just can't get out of its own way at all. Really is a disappointing, and you wouldn't have to go that much further down this list to find CVS either.
Yeah, it's true. I was going to mention that CVS also on the list as well, though not as bad performance-wise as Walgreens. But Walgreens has just really had a difficult time ever since it tried to do that, that merger, and it just has had too much debt on its books, too many stores. They've tried to remember when they were the first to start doing the reducing prices and complaining about consumers. But it's not just about consumer demand there. It's just corporate structure has really been challenged there. So Walgreens had a really tough year, and they're at the top of the list of laggards, even ahead of Intel.
Yeah, and it's also not really been a one-year story for either of those companies. You could extend this out, and the story doesn't get much better, particularly when you look at Intel, down 60% over the last 3 years. Walgreens down 82% over the last 3 years. So it's not like these were names that were outperforming that decided to give back some of those gains, like maybe a name like Tesla has done in recent weeks. These are names that have struggled and continue to struggle, almost seeing a fever pitch in the case of Intel around that earnings event where you saw the stock go from like 30 to 20. Final thoughts on either the winners or the losers before we move on to top golf after the break.
A couple of the losers that would have been surprising earlier in the year, but not surprising to us in hindsight, the Dollar Generals, the Dollar Trees of the world. They had a difficult year, but at the beginning of the year, we expected, with consumers pulling back and the whole language we heard about choosy consumers, that they would benefit from that, and that was not the case for those companies at all. And they really talked about the difficulties of the consumers, and they weren't able to play that well, unlike Walmart, for instance, which, although Walmart is not as high on the leaders, it was certainly in the top 20, 25 leaders of 2024.
Great call out. When genius fails, when you think you got all the answers, hey, consumers are struggling, they're cutting back on budgets. Naturally, a discount retailer like a dollar store should outperform, right? But you would have been wrong. Stocks down 45-ish%, both of them. So really tough years for both those companies. So again, when genius fails, you think you got the answers. It's not that easy. Oftentimes the market finds its way to hurt the most investors that it can. Let's take a short break though. We'll come back. We'll talk.
See red arrows. They're not major, but significant enough. About 2/3% declines, a little bit more for the NASDAQ, a little less for the Russells. And rates could be a culprit here. 457, so we've seen some upward pressure after those strong jobless claims this morning. Let's check on Apple as well, because in terms of barometers, this stock is having a pretty rough start to the year. It's down 3% and is on track for its worst day since early August. No particular news event. We also mentioned Tesla down 7%. That was on the delivery.
Yeah, there is, honey.
For the rest of the Mag 7, it's kind of a mixed bag to start the year. Nvidia is positive by about 1.4%. Meta up 1.3%. Alphabet, Amazon fractionally lower. Microsoft down about 1.25%. Clearer bright spot can be found today in Top Golf Callaway, up 11% after Jefferies upgraded the name to buy with a price target of 13.
You got a lawsuit that they had to pay back, $95 million. They're discounting the 16.
Coming up, we'll take one last look at our mystery chart. Our analyst.
And there's something else. China sales ain't helping. Discounts and weak China sales aren't helping. So there's all kinds of news in there, honey. Warnings to protect children from hazards of battery ingestion. What? Man, I'm afraid to trade this anymore. Every time I get in it, it dips on me. It's usually not the case. I'll buy it right now. I'll put in a fake sell and then buy it. We've been going sideways for a long time, but lower lows and lower highs. Now I'm too far out of the money to even think about buying at 58.75s. I was up there close. See, if I bought them at 2, they're at 175 now. There was a lot of news on Apple. What is she saying? No relative news. Assessing Apple's performance against competitors, storage and amp. So I got 239 for some reason. I can't figure out why. It's got the 4 hour. Mm-mm. 4 hour tells me nothing. Think about it, it's only 20 bucks. Tesla. We're at 150 now on him. Penny stocks are doing good. Might be the year of the pennies. It took such a big hit. What about sound? SOUN. I traded sound a while back, but I didn't run it up to 2,500%. 500% in 3 months, 4 months, 3.5. 500. Oh. Hmm. In the back, in the call center part. This is Jim. This is in the back in the call center part? Yeah, I thought they had the week off this week. No, that was last week. Oh! Okay. You've been back since Monday? Oh, shit. Okay. Yeah, I got my weeks mixed up. I've been in there every day and I just kind of walk past it. Well, I got my weeks mixed up. Yeah, I'm okay. I'll be in there tonight for sure. I walked up the front and checked Rick's desk. He'd been gone. No one else. And I just kind of walked around, but I just kind of the last couple of days, I just got my weeks mixed up, I guess. Yeah, no worries. Okay. I'll see you tonight or tomorrow. Bye. That's a trip. Are we going to get the big rebound yet? I'm not sure where to start to take this trade. I've been tricked out so many times today. We got a fallen. See if I jumped in it again at $2. I got to make back $800. It's a wide wedge. Boy, that's a trip. Yep, see if I'd done it again, I'd have been burned. We got 2 more hours left. We got a triple quad top right here. I just got to wait until we break this here resistance. And that'll probably be up a couple $100 by then. This could be it. This is one of the hardest sell-offs I've ever seen. I feel like a dumb butt for not walking back in there. I walked throughout the rest of the building. Looked like nobody was there. Been there every day, but yesterday. Boom, there she goes. Wish me luck here. I got 290 and a 590. Would I give too much information? Always clean. I did get Rick's. Jesus. I'm done. I'm done for the day. I can't believe I can't take a winning trade today. I hope the whole year ain't like this, but I have one of them days. God. Jim, don't get complacent. Nancy, give me some vodka.
The big stories today that's being overlooked is this double top in 30-year bonds, right around a closing yield of 4.81%, which, by the way, was the intraday high today in 30-year bonds. Now, granted, if you're a technician, you're looking primarily at closing yields, but it definitely had an effect today. And finally, you know, the euro dollar is roughly what? 57.6% of the dollar index. So this is kind of a funny chart. Of course, they're the mirror image, but it really drives the point home. The euro currency and the dollar
I was even.
both at extremes going back for 26 months. If there's a big story today, it's that the dollar jumps into 2025. Kelly, Brian, and by the way, it's great to see you on the show, Brian. Welcome back.
Yes, I love Brian.
Thank you, Rick. Really appreciate that. Double top potentially in the 30-year. Again, do people trade bonds? Probably not.
Let's hope it's a double top and not whatever you'd call something that's about to break out.
Double bottom.
Double bottom?
Listen, again, the pressure on yields in 2025 is probably roughly the same as the pressure on yields in 2024, with the added uncertainty surrounding tariffs. I will add, I've made the case on the network numerous times, I don't think tariffs are as detrimental as many other people. I think there are offsetting factors that can be applied that are not considered. That includes strength in the currency. That includes any additional pressure that might occur on oil prices, particularly if the incoming administration puts some pressure on the Middle East, particularly the Saudis, to increase output. So there are complicating factors here that make it more difficult to simply say tariffs are coming and, oh, by the way, inflation is going to spike. And
Congress might have something to say about all of this.
Congress has something to say about
Presidential candidates can say what they'd like. And they do. They say a lot of things. What actually occurs is often up to the 535 women, or minus a couple, in D.C., women and men.
Except Congress has spent the better part of the last 30 years ceding their authority on tariffs to the executive branch.
Or
that you have
presidents have taken the last 20 years and taken that power.
With little
right, using executive orders and executive actions that necessarily were not written into what we, well, not you, because you're much younger, but what we learned.
Much younger.
And Barry, by the way, his happy birthday, Barry. He's emailing me already about this. You're coming on soon. About constitutional power, but I think that's a different issue.
Listen, we're morphing into the political show, but like that's Congress's issue that for 30 years they have ceded that power or allowed the executive to take that power. They can take it back anytime they want. But that said, there's little to stop through IEEPA or Section 301 or 2, whatever the type of tariff the incoming administration wants to apply. There is little at this moment that Congress seems willing to do to stop that. So we have to assume that much of that, if not all of that, is going to come to bear on the market.
Did you have an IEEPA reference in this show? I have no idea.
I'm going to leave it to the viewer to Google IEEPA and find out for themselves.
Or Bing it. Don't promote any companies here. Bing it. Yahoo it.
Most search is being done now on Amazon, so you never know.
Well said, Lycos.
I think the
Lycos.
Amazon thing is
Web crawler it.
years ago. I Gemini now. Okay, they told me that I said, what was the performance of some stock in 2024? They said, sorry, we don't have access to stock prices yet.
They got to make a deal with CNBC, and it's going to cost them.
That's right.
All right, on deck. Thank you very much. All right, on deck here on the new Power Lunch. Why Ukraine is saying yet to Putin's natural gas, at least for now.
I got to give a guy a message here. I like that Brian on first time I could say that and Kelly on CNBC. And that guy right there, they sound like they knew what they were talking about. But I like Brian though. I traded along with him for many, many, many years.
Asset.com.
Too bad he's not here full time. I got to listen at Sorts.
Hope you're having a great start to your trading 2025. Let's talk energy. Natural gas prices, they spiked to a 52-week high earlier this week following reports of a colder than usual temperature forecast for January. That is what we call an understatement. We're supposed to get what's called the polar vortex. Oh, I know. It's going to get really cold.
Please no.
Could have 2 feet of snow in parts of Virginia and maybe North Carolina.
Wow.
Ooh.
Great with snow down there.
Can't handle it.
In the meantime,
No wonder I've been a little nippy today.
Natural gas from Russia to several European nations on Wednesday. That brings an end.
Go to the 200.
60.
That's all I ask.
Run of natural gas, 60 years through the same pipeline through Ukraine. The question is, where does it go from here, and what does it mean for us? Joining us now to talk about all of this, including his outlook for global energy prices this year, Jonathan Maxwell. He is the founder and CEO of Sustainable Development Capital. Jonathan, good to have you back on. Natural gas here in the United States. I mean, God, Europe would love to have our spike. They're paying $50. We're paying $3.50. That said, do you think this spike that we're having here is short-term based on this weather forecast?
So, very probably not. So, one of the things that I find amazing about this story of Ukraine's 5-year transit deal not being renewed. So as of yesterday, there's no gas flowing through that pipeline through Ukraine into Europe. One of the things I find amazing, actually, is that we've now got more dependence on the United States in Europe. than ever before. In fact, about 40% of Europe's LNG comes from the US. There's huge pressure growing on gas prices here in Europe. They're up about 70% in 24 versus over 20% in America. And I think that there is a very substantial risk that that's going to continue. I think we're even looking potentially at futures trading higher for the summer this year. We've got substantial gas reserves, but surely there's a risk here that the sheer weight of demand kind of coming from Europe against supply constraints is going to drive prices globally.
Jonathan, I look, U.S. prices are still incredibly low, sort of relatively, like $3.60. We were up at $9, during the peaks of 2022. We're nowhere near that. And yes, even though there's going to be, look, we first U.S. exports of LNG 2016. By 2023, we were the biggest exporter on the planet, and our gas prices in 2023 and 2024 went nowhere. They basically were around $3, about where they are now. You'd think if we were sending all of this gas and there's this huge, and so even if we ramp up, to meet that demand that's coming, this big demand spike, we're supposed to bring online 70% more capacity in the next couple of years to the U.S. Isn't that likely to keep a lid on prices from spiking much more from here?
Nope.
I think European prices, though, have always been much, much higher than in America. And the point that you're making is really since 2019.
Because we have inflation, baby.
The largest oil and gas producer in the world. Europe isn't. I mean, Europe is an importer. Its energy dependency has gone up, not down. The UK, where I'm sitting, energy dependence has gone up, not down. The government here talks about energy independence, but we import 76% of our energy. I think America's in an incredibly powerful position. Having said that, there are risks on the price side, and you are going to see very substantial demand coming from Europe, in particular into the United States, for imports of LNG, and that's going to have an impact. Now, there is a very positive side to this from a financial perspective. The incoming Trump administration looking to relax export permits on US LNG projects. There was, by the way, a perhaps last-ditch piece of news. It's unconfirmed today that the Biden administration is looking to permanently ban drilling for oil and gas in targeted areas of US waters before the end of the administration.
Yeah, I don't think it's going to happen.
I mean, the judge halted the last attempt that they had.
It's the White House's attempt at the end to send up a signal flare. Jonathan, this should not be new news to any CNBC audience. I mean, we've been covering this year.
He's shaking his head no.
For going on.
Don't interrupt me, he says.
Years. Is there a way to look back and say what was the main mistake or mistakes that Europe and its leaders made? Because Europe and the UK is in really bad shape.
Well, look, for sure. I mean, we have had relatively little investment in baseload generation in the UK and Europe. There has been relatively little investment in storage in the UK and Europe. There are enormous investments happening, which I'm delighted about, running a sustainability company in renewables. But at the same time, the energy system needs to sort itself out. The biggest piece of it, though, the biggest piece that I would refer to is as follows. Europe extraordinarily wastes enormous amounts of its energy, and I'm afraid the US does too, but it matters even more in the US, in Europe. Roughly 2/3 of the European energy system, when it comes to making electricity, for example, roughly 2/3 of the energy used to make electricity is lost through basically through generation, through natural gas systems, through transmission and distribution, let alone at the point of end use. The biggest mistake that Europe has made is not being efficient as importer with the application of the energy that it has to buy from overseas. America has...
Jonathan, that's fair enough, but I would say the biggest mistake that they've made, Germany made a decision to rely its manufacturing economy on piped-in gas from Russia. So the waste be what it may.
She's got it right.
The prices that they've had to pay the past couple of years subsequent to that, I mean, it's been a complete disaster. Same in the UK for their power prices. So yeah, they have to figure out a way to, take care of the emissions or what have you, but they also have to get the fuel in the first place.
Yeah, but we can't fantasize about how we can produce fuel. So Europe is an importer, so is the UK. These are the brutal facts. Now, the question is what you do about it. Now,
Go, baby,
one of the
go.
disasters that Europe has faced is that it started to make massive investments in areas which are so to be celebrated, but make relatively little difference compared, for example,
There's some good traders out there today.
We've poured billions,
There's a
hundreds
triple
of billions
top.
into renewable power, which I'm delighted about, but it hasn't been balanced with an improvement in efficiency. The US has a much larger supply case. By the way, if America made itself more efficient, it would also save hundreds of billions, indeed trillions. The Department of Government Efficiency is going to focus on.
Oh, low blow.
Desperately.
If America, well, the past 4 years,
Ukraine through Crimea, the
war on energy.
Commissioner for Energy said for every unit of gas we don't use, there's 2.5 we don't buy from Russia. The reason it's such a big difference is because of the level of waste. It's the wake-up call. It's the massive.
Go, baby, go, baby, go.
Because we can't do what America does. We cannot generate energy to this degree.
You
we have to
could,
stop.
if it was nuclear, but Germany decided to shut that. Unfortunately, decided to shut that off.
Correct.
Yeah.
Correct. And also at this point, it will take a decade, maybe more. And that's just electricity. Electricity, remember, is only 20% of the energy system.
Well said. Jonathan, we'll get you back on because this is a bigger conversation. It is not one that is going away. Jonathan Maxwell is the founder of Sustainable Development Capital and CEO as well. And Jonathan, thank you very quick. I just want to add this, that this is the negotiation. It is possible that Ukraine comes around and says, you know what, okay, we'll allow more Russian gas to flow for more money.
Oh, sure, fine, and be that as it may, but you can't tell me it's a bad thing that Europe now has built all of these import LNG terminals, Germany and all the rest of it, to get gas from the US, maybe Australia. I mean, that's a much better partner in the long run, I have to think, than Russia at this point.
I've stood on something, and I hope so. And by the way, the first load of US LNG from Venture Global, it went.
Well, I just heard.
So you can't go right from here to Ukraine because it kind of looks.
I thought I heard that Germany's not going to get Russia energy anymore just this week.
There's a lot of interesting stuff happening.
And there absolutely is.
Europe's a mess. Some guy got a Elon's all over Europe today. I'll show you what I'm talking about. Nope, that ain't what I'm talking about. So I blocked this guy. I'm gonna have to unblock him if Elon likes him. British police capture and arrest an elderly man because some of his social media posts caused someone anxiety.
What did it need to come to? Tell us why you escalated it to this level, because I don't understand. I posted something that he posted, you come to arrest me, you don't arrest him. Why has it come to this? Why am I in cuffs? Because of something he said I should. Someone has been caused, obviously, anxiety based upon.
So there's the man they arrested. Oh well, it says here, thank God there's constitutional right for freedom of speech in America. This video is over 2 years old. This video is over 2 years old. Well, the UK police are somewhere to be in the... That elderly was so dangerous in comparison to the mob attacks. Where are we here? I'm at $3. I'm not going to get $4 out of that. Still give it a little bit more time, but I think that's, what time is it? 1:29. AVGO's back in the green.
Maybe the fact that there is no Santa Claus Valley this time around, but also it's been 2 banner years, right, for the stock market in a row, so that's good. But will it be a three-peat? Our next guest is bullish on equities in the coming year, but says that it's time to get back to basics, the fundamentals when it comes to actual stock picking. So joining us now is David Miller, the co-founder and chief investment officer over at Catalyst Funds. David, when we say back to basics and we say fundamentals, we are talking about many different metrics, but which basics and fundamentals are you talking about with regard to stock picking in 2025?
Yeah, the basics I'm really focused on are the things that drive the quality of the business. What does their revenue growth look like? What does their earnings growth look like? What's their return on equity, their return on capital? What type of current and forward P are you paying? And that's really what I'm looking at.
Okay, so if that's the case, they always say that the bottom line is the most important. The profits are the most important for the company. Ultimately, it's about a company trying to make money for its shareholders and everybody else in the ecosystem. Where exactly is the profit story in 2025, and what types of companies get you there?
Yeah, well, the thing about the stock market or the S&P in general is that, you know, historically, if you go back 20 years, P's were around 20. Now, today they're in the mid 27-ish type range, maybe 25 on a forward basis. But ironically, I think they're actually a lot cheaper than they used to be. Not meaning that, you know, that P is lower than the other P.
How can you say that?
The types of companies and what they're really worth. If you look at the economy 20 years ago and you look at, you know, 2005, the largest companies in the S&P 500 were large, very capital intensive, relatively cyclical businesses. They were, you know, banks like Bank of America, Citi, JP Morgan. They were General Electric, General Motors, Ford, firms of that nature that both required a lot of capital, had relatively tight margins, would also be relatively cyclical.
Intel,
companies that are dominating the S&P,
IBM.
and it's completely different. They're powerful monopolies that are growing rapidly with very high free cash flow, very high margins. You had net margins back in 2005 around 7% versus 12% today. And when you think about a company like a Google or an NVIDIA or a Meta, these companies' margins are much more like almost printing money compared to what it used to be a couple decades ago, which is why I think we're still in store for a pretty powerful year ahead, because those companies' businesses are still firing on all cylinders, and I think their valuations are very reasonable.
Hello, this is the FBI. May I help you?
About the minting money, the aspect of who can kind of make it, how they can do it. What's the top pick that you have for 2025?
Yeah, so, you know, amongst, like, you look at the Magnificent Seven, and I think there's a good reason they call them the Magnificent Seven. These really are wonderful businesses. But you look at Google in particular, they're the cheapest of the bunch. They're probably 22 times forward earnings. They're likely to grow top line and bottom line revenue about 12% over the upcoming year. You got about 4% earnings yield on the company. I think they're very well positioned and very reasonably priced relative to the growth that you see that they've been able to put up in the cloud, and even their core search business is still growing at a pretty healthy rate, but, you know, close to 30% on the cloud.
All right, David, the top pick is Google. Thank you very much. And
do some trickery.
Prosperous 2025.
Yes. Thank you, appreciate it.
You know, Brian,
glad to be here.
You know, it's interesting.
You know Dom.
Yes, I do know. And I know you. Yeah. the Alphabet story is interesting. Remember today earlier we had a downgrade, right? An analyst downgrade on the shares, but the stock was still up. it remains to be seen what the sentiment is like for many of these mega cap stocks in 2020.
We got to go to Kelly. Here's my question, though. Everybody loves Google, but here's what I'll say. Number one is, Kelly said earlier, I use Gemini. Okay, fair enough. That's Google.
I'm here.
But you do wonder, will
I'm here, Jake Paul.
damage or help Alphabet's Google's business model?
I don't know. I'm a Copilot user, so I'm in the minority, I guess, right now, but I'm just trying to diversify our
How did you get Copilot? I don't have Copilot.
What am I in?
It's coming to our Outlook.
Bing right now, if you go to
I'm in the 5875s.
Microsoft is going to jam. I mean, it's going to help us.
We can't wait.
I'm going to send it over to you guys.
I'm going to send it back to you.
Thank you very much, guys. After the break, the latest on the recent attacks here in the U.S., both physical, the digital front as well. We'll lay out all the details when Power Lunch returns.
I took a loss on my 50s. That was a bad trade. I don't know if I got a chance on these either. Might be just one of them kind of days. Well, at least I'll get this bad one out of the way and the rest will be green. I just got stuck in that first trade and I just know, man, it's just the way we took off today. Then buying that dip right at open screwed me. That's where I first got in that trade, and then it just kept going down. Then just depreciating. These are $1 now. I don't know. It'd be a $1,200 a day loss, I think, by the end of the day. Oh well, I've had a lot of good $2,000 or $4,000 days for day after day after day after day. Can't be perfect all the time, I guess.
Business.
I got tired of listening to Schwab today, and that's unusual.
Dealing with the aftermaths of attacks.
But now that I got these on here, I love these people.
The first is Chinese hackers stealing treasury documents in what's been called a major incident. Then, of course, the terrorist attack in New Orleans, claiming the lives of 15.
Damn.
There are also growing suspicions around that Cybertruck explosion.
Man, that'd be tough.
Trump Hotel in Las Vegas. We do have full team coverage of these stories this afternoon. Let's begin with Megan Casella with the latest on the treasury hack. Megan?
That's so sad.
Kelly, still more questions than answers, I would say,
That,
on this.
anybody around here from New Orleans, or if they ever lived there? I got a lot of friends, musician friends that lived there, and that have moved out and went to other, like Nashville, and one went to Australia. There's still a bunch of them live there, though. An electric truck, you don't hear it coming, for one, especially if you're drunk. That's why I just can't live in a big city anymore. When I retire, I got 30 acres up north. That's where I'm staying.
Few others, China's now stopping all exports to these companies effective immediately of all products that have dual civilian and military uses.
China, what?
All of these developments, guys, underscoring really rising tensions between the U.S. and China, all of that taking place before any tariffs have yet to take effect. Guys.
They're not going to take effect.
We appreciate it for now. Thanks, Megan Casella in Washington.
Don't count on it, honey.
And they are terror attacks down in New Orleans. NBC's Jay Gray joining us now. Jay.
Hey, Brian Kelly, and yeah, the FBI saying this morning that they are 100% inspired by ISIS, that these were, in fact, terror attacks carried out by a lone wolf suspect. A lot unfolding in this investigation. The latest is the reopening of Bourbon Street. The city has reopened the street to pedestrians after that terror attack that killed 14, wounded at least 35. The gunman, or the driver of the truck and gunman at one point, also died in a shootout with police. Let's tell you what we've learned from investigators as they've updated the information they're providing for us. First of all, the suspect in this case, Shamsuddin Jabbar, 42 years old, an Army veteran, apparently posted videos as he was driving his rented pickup from Houston here to New Orleans. He initially, in these videos, said that he planned to harm family and friends, but that he didn't think that would make a big enough splash, according to the FBI, in the media. And so he, and these are their words, quoting from his video, wanted to make sure that everyone knew about the war between believers and non-believers. He proclaimed his allegiance to ISIS in another video, and in one of the 5 also provided what they call a last will and testament. Now, they've opened Bourbon Street, but before that happened, they moved in heavy-duty barricades to line this street, something that wasn't there the night of the attack, as that truck just darted around police cruisers that were in place and sped up and into the large crowd on Bourbon Street. We also know that later today there will be the kickoff of the Sugar Bowl, part of the college football playoffs. That game was supposed to be last night, postponed until this afternoon. The governor today telling us that he feels very confident about the safety and security of not only the French Quarter, but the Superdome where that game will be played this afternoon, saying that they wouldn't have opened this area if they weren't sure that it was safe. He says that they have a new security perimeter around the Superdome, the field where that game's going to take place, that they've added personnel, federal, local, and state police. They have more bomb-sniffing dogs. They continue to search and comb the Superdome and will continue to do that until this game is over. So they feel confident about what's going forward right now, Kelly. But again, everyone cautious and watching and waiting to learn more about what's happened in this tragedy.
Jay, we appreciate you joining us with that report. Jay Gray, NBC. Over to Pippa Stevens now for the rest of our CNBC News Update. Pippa.
Hey, Kelly. Authorities say they believe an active duty Army Green Beret was inside the Cybertruck that exploded yesterday outside of the Trump Hotel in Las Vegas. They have identified the man as Matthew Livelsberger, but say they are still waiting for DNA confirmation to say without a doubt he was in the truck when it went up in flames. The coroner's office confirmed the man suffered a gunshot wound to the head before the explosion. Authorities say Livelsberger was on leave in Colorado Springs when he rented the Cybertruck in Denver and drove it to Las Vegas. Terraform Labs co-founder Do Kwon pleaded not guilty today to fraud charges in U.S. federal court. He has denied wrongdoing in the $40 billion collapse of 2 of his company's cryptocurrencies in 2022. Kwon was extradited to the U.S. earlier this week from Montenegro to face the charges. And an appeals court ruled today the Federal Communications Commission did not have the legal authority to reinstate net neutrality rules. Last April, the agency reversed its own 2017 repeal of the rules, which took place when Donald Trump was in the White House. The FCC did not immediately comment on today's decision. Kelly?
All right, Pippa,
They go after him, they need to go after Hawk too.
Drug maker Numora are plunging after its depression drug failed a key trial. They're down 81%. It's less than a $2 stock right now. We'll get the full story on this one next.
That 200 keeps coming on down, so I'll probably break even if I get up. Or just get out and call it quits today. Definitely going to get out of this house here when I get done. Yummy. I had a crush on her, Johnny. Let's do it. Well, every time I want to buy this thing, it's going to dip on me. What do I need? Woo! 800. If I'd have had there, see, now it's back to 105. So this is the spot if I wanted to do it at the 63. If I'd have bought them, it'd have been goodbye, Charlie. Yeah, I can't win today. My confidence is down.
Inside Wealth.
Welcome back. Check out today's biotech blowup. Numora Therapeutics losing nearly all of its value after its drug has failed a trial, a depression drug. Angelica Peoples joins us now with those details. Angelica?
Hey Kelly, that's right. Numora's experimental depression drug failed to show it was any better than placebo in a phase 3 trial. Now, this is one of 3 late-stage studies that Numora is running, but RBC is calling this the worst-case scenario. And that's because Numora's drug showed the exact same effect on depression symptoms as placebo, not even a little bit better. And depression is a really tough space for drug developers. The placebo effect can make a treatment look less effective than it is. But RBC analyst Brian Abrahams in a note today saying that there's no obvious explanation here for this failure other than an insufficient drug effect. I checked him a few weeks ago ahead of this readout, and he was estimating this to be at least a $2 billion drug. And so this is obviously a huge disappointment for investors. Like you said, that stock down about 82% today. And it's also another setback for the field. Numora is going after a new way to treat depression. And again, there are more studies underway, so this could always change. And we're also expecting some data from Johnson & Johnson. They have a similar drug. And
give me some of that drug there, baby. I need to help my depression out. How much? mRNA? Oh, God. What? Wow, mRNA. Wow. That looks like a reversal this coming year. Depression drug flops, stock sinks. $330, come on, baby. There's your exit idea. Oh, yeah.
Collecting Wall Street analysts' top pick stocks for the year takes a lot of time, but we do it for you, loyal viewer and listener, with the idea that then we can not only show you which stocks Wall Street really likes for the year, but also what stocks maybe just did not perform to the way that they thought they would perform. These are all names on 3 or more top picks lists. Let us jump right in with the stock number 1. Kelly, I'm going to blow your mind.
I got it.
Huge secret.
Big surprise.
NVIDIA.
Wow.
Yeah, I know.
Didn't see
I know, you're shocked. NVIDIA was one of the names on a top picks list more than 3 times. Let's go through 3 names here to help us trade all of them. Ari Wald, he is managing director and head of technical analysis at Oppenheimer. Ari, thanks for joining us. NVIDIA, no shocker, but what's it going to do in 2025?
Hey, good to see you on the show, Brian. Happy New Year. I think for NVIDIA, it comes down to
340.
trend following 101. It's a stock that's been trading above its 200-day moving average, not only since the start of last year, but the start of 2023 as well. And nothing has really changed in our work through that. We are advocates for letting winners run. So I think as much as NVIDIA has been established as leadership, there's really no cracks in the trend either. Raise stops to 118. That's the 200-day average. I think it's positive above there, as the stock more recently has been consolidating around its June high at 141. I think you ultimately get the breakout.
With a break. All right. Ari, let's move then from one extreme to the other, because one of the worst performers was Boeing, but it also appeared on several top 3 lists. Despite
that helped a little bit.
Its worst year since 2020. It was down 32%. What do you do with it now?
Kelly, Happy New Year to you as well. Well, we like relative strength. We don't like relative weakness. You stay away from this one. Here's a stock that's getting above its 200-day average for the first time in a year. But consider, this is the 3rd year of a bull cycle. What does this stock look like when the cycle tops out? I think that there's relative risk and relative weakness is coming off a multi-decade low versus the S&P 500. So if you like it fundamentally, use that 200-day moving average as a stop at 171. For us, if it starts to fall back below that 200-day at 171, we'd be looking to start shorting it again.
Wow. below 171, which is, you know, right around where we are right now.
On what?
There were
Boeing?
36 stocks that were on 3 or more top picks lists. 36 stocks. We don't have time to go through all 36. But the name that maybe was the most surprising, Kelly and Ari, to me, was a company called Howmet Aerospace. It was on 4 top picks lists. It's a company not a lot of people, Ari, ever talk about. Guess what? It basically doubled this year. Wall Street got this one right. What do you see?
And we spoke about it in a couple of our reports in May and October, highlighted as a top idea within the aerospace and defense industry. Now, the industry didn't really take off, but the stock has continued to work, and we still like it. So it's got a bullish trend. It ranks high in our momentum work. And so for these reasons, we recommend buying this minor pullback in the stock. See good support at $105.
We're at the 200 right now.
November 6th gap in the 100-day move.
So he's at the 200 right now on Boeing. As long as you stay above it, we're bullish.
No matter what, Ari. So we appreciate your time joining us. And to close out this very special edition of 3 Stock Lunch.
Thank you.
Go.
Take care.
We'll be right back.
We hit the 200. Well, well, well. I'm still down for the day on that first trade. That dropped $2 there within 3 candles. Go get some more water. I don't know, I just ain't got it in me today. Snake's very slow.
Venue.
All right, if you're a fan of the New York Knicks or the New York Rangers and you have Optimum Cable, guess what? You're screwed. I don't know what else to say. Michael Ozanian is here to talk about another cable fight, which is literally leaving fans in the dark.
Yeah, you've seen a lot of these over the last few years. TV viewers are shifting from watching cable TV to streaming, and so this is just the latest episode in cord cutting. And if you're a New York Knicks fan right now, you're really ticked off.
But you have options. How is the parent company pushing them to, are they pushing them to some of the streaming options to kind of gain leverage?
Yeah, with Sphere, which owns MSG Networks, they have Gotham Sports, which is the network. They have the Yes Network on there as well as partnership with New York Sports. The problem is they kind of had to make it prohibitive almost to sign up for it if you don't have cable. Yeah, it's $30 a month. If you have cable and you're already subscribed to that, you get it for free. But the problem is the profitability with these streaming apps like Gotham as standalone entities aren't nearly as profitable as cable is.
What does all of this mean for the teams? Because they've made so much money in the past from these regional sports networks.
Well, the Knicks and the Rangers have long-term rights agreements going back to like 2016 when the networks were spun off. So at that time, the Knicks started at a rights fee of $100 million a year, the Rangers $30 million, which goes back to our earlier point. If you're a Knicks fan, why you're mad. The Knicks are the most valuable viewership.
And they're good this year. They're actually good.
The Rangers are not good. So their rights fees aren't going to go anywhere unless catastrophe came and it went into bankruptcy, in which case we saw what happened with Diamond and the rights fees could be renegotiated lower.
Not a good sign. We're talking about the bankruptcy word. Big change in the media landscape.
Thank you. Good to be here.
Right.
Good to be here.
Thank you.
Happy to be here.
See you tomorrow too. And thanks for watching Power Lunch.
Closing bell.
And welcome to Closing Bell.
No, it's Santelli.
This make or break
Santelli.
begins with an unsettled start to the new year on Wall Street. Stocks unable to take full advantage of new money expected to enter the market in January after December's pullback. But the index is on pace for a rare 5-day losing streak straddling the turn of a year. The S&P 500's morning rally attempts failed to hold, with big NASDAQ names applying the heaviest pressure. You see the S&P down just over 0.5%. Apple and Tesla, big winners in 2024, are leading to the downside today on a mix of profit-taking and concerns about product demands in both cases. You see them down 3 and almost 7%. A surge in the dollar index to a 2-year high, also giving pause to equities as China announces new export controls on some U.S. companies within 3 weeks of a new Trump administration stepping in. That takes us to our talk of the tape. What does the recent choppiness suggest about the setup for markets in 2025 after 2 years where reward for index investors vastly exceeded downside risk? We'll start there with Lizanne Saunders, Charles Schwab Chief Investment Strategist. And Lizanne, great to see you. Happy New Year.
Happy New Year to you, Mike.
So, I mean, obviously we don't want to make a tremendous amount, about a few days worth of choppy downside action in the markets, but I wonder what you think it might reflect just about the starting point for 2025 in terms of market field position, valuation, concentration of the market.
Well, you know, it's too soon to say because we're only 1 day into trading in January, but that old adage of as January goes, so goes the year, there's some validity to that. Some people extrapolate that into a weak December, suggesting something about how at least the first part of the year is going to unfold. And there hasn't been a strong correlation in the past. In fact, periods where you've had a weaker December and then a stronger January have actually been followed by pretty decent market returns. So I think it's a little too soon to tell. I think the setup for some of this weakness was probably very sentiment driven. We had really gotten to a lot of frothy conditions in the aftermath of the election, that post-election rally period, especially when we went back into that concentration problem. You know, top 10 stocks are now 39% of the index. And I think that was the setup for some of this weakness. I don't think there was really any kind of prime catalyst. I think it was a little bit more of an exhaustion from a sentiment standpoint.
Yeah, and actually to that point, I should point out that, you know, market breadth is actually okay today. It's about 50-50. It's not skewed to the downside. It is the large mega caps that are weighing on the index. And obviously that's a little bit of a shift, as you say, from December. Do you think that the sentiment reset is pretty much complete, or it kind of did what it had to do here? I guess I ask because I'm still seeing some of the smaller kind of story stocks move quite a bit. You did see a bit of rekindling in crypto-related stocks today.
Yeah, I think that there's still pockets of froth. The good news is that a lot of the froth you witnessed outside of just broad market type froth. So that's one differentiator, say, between the current environment and the late 1990s.
Come on, baby, let's make some money.
A bit more concentrated, whether it's in crypto or, you know, zero-dated options or, you know, bananas and duct tape a couple of months ago. Yeah. So I think that that's maybe akin to what we saw a couple of years ago when we saw it in the original meme stocks, we saw it in SPACs, and that's maybe a less frothy environment than one that is pervasive across the market. I think this is also part and parcel of many of these rotations that we've been talking about, these fierce rotations that happen within the market at the sector level. Frankly,
Go, baby.
at times back into the
Are we going to break it or are we going to get out? 1 bis, 2 bis, 3 bis. Boom. 1, 2, double top. My phone charged. I better make sure my phone's charged before I head out. Nope. Oak. God.
and the tariff policies, which all else equal, it's hard to argue against them putting some downward pressure on growth and some upward pressure on inflation. So I'm not really sure that that 27 playbook is an applicable one given the current macro backdrop now and the key differences between now and then.
Yeah, I guess tax rates staying status quo in 12 months is not quite the same carrot that sort of held out in front of the market that it was back then. And more broadly, though, in terms of how you would recommend positioning for this current environment, right? We talk about 2 great years coming into this. Obviously, valuations have been challenging, but haven't stopped the market from going higher. Where within the market still seems like it's a relatively good deal?
So, Mike, as you know, we have been very factor focused, not instead of sector focused, but at least as an additive to sector-based investing. With this rotation type backdrop, you're seeing huge week-to-week, month-to-month swings in terms of sectors and which ones are at the top of the leaderboard, which ones are at the bottom of the leaderboard. And I think that is a fairly tricky thing to try to navigate, even from a trading perspective. But there's been more consistency in performance at the factor level. And one shift, not that the world or the market thinks in pure calendar year terms, as if everything shuts off on the 31st and we relaunch a whole new era, but from a factor perspective, as we think about over the next year, we still think you want to stay up in quality, focus on balance sheet oriented factors, return on equity and strong free cash flow, but also earnings oriented factors like positive earnings revisions, that forward-looking positive trajectory, maintenance, if not growth in profit margins. But I think the one subtle shift that we may be in the midst of is one where level mattered last year. You wanted, strong versus weak in terms of balance sheet, high interest coverage versus low interest coverage on that factor. Now I think it's more rate of change oriented, where you want that leverage to any kind of improvement in the economy, especially if we can get back to an environment where the Fed is in easing mode. I don't see that very much near term, but I think that would be a force that might unleash some of these rate of change benefits accrued at the factor level while still staying focused on those higher quality factors. And the last thing I'd say is going down the cap spectrum, be really mindful of moves in longer term yields. We're not seeing the same type correlation between moves in the 10-year and an index like the S&P or maybe even the NASDAQ. When you go down to the Russell 2000, you go down the cap spectrum into companies that have more variable rate debt and they've got tougher interest coverage backdrops. I think moves in the 10-year is really going to be the key to either outperformance or underperformance down the cap spectrum.
Yeah, certainly has largely been the case for a bit. All right, Liz, and stick with me. Let's bring in Bryn Talkington of Requisite Capital Management and Brian Levitt of Invesco as well. Bryn, of course, the CNBC contributor, and welcome to you both. So, Brian, I guess how does all that sound in terms of where we begin this year? I guess the kind of basic bull case was The economy is in decent shape. The Fed's going to be perhaps doing some cutting. Earnings are broadening out, and credit looks great. What else do we need to know?
I think that all still exists. So I think the broad backdrop still exists. The challenge we're dealing with right now is there's a little bit more policy uncertainty than we were dealing with last year. And I really like what Lizanne said about this being more like 2018 than being like 2017. You think about 2018, there was uncertainty around the Fed. Of course, they raised rates. They're not going to raise rates this time, but how quickly are they going to bring rates down? We're readjusting a little bit, as well as the uncertainty around what the trade policy is going to look like. So I think for investors, what are we down here, 4 or 5% or so? We didn't feel a lot of that last year because there wasn't a lot of policy uncertainty. We've got a little bit of that now. To me, that doesn't mean end of cycle. Right? These markets will be volatile as long as policy uncertainty persists, but the backdrop, to your point, resilient economy, ultimately rate cuts, all of that should continue to be good for risk assets.
Bryn, part of the story of the past year has been, of course, dominance of mega cap tech, but not all at once sometimes, and so they kind of rotated, and sometimes some of them acted as defensive plays, sometimes they were driving momentum higher. How do you think about that group within the overall market at this point?
I think we're going to continue to see much more so in 2025 than we even saw in 2024, this dispersion of the Mag 7. We like to call them all one homogeneous name, but Microsoft was up, what, 13% last year versus a Meta or Tesla. And I think that, within that group, to me, Apple is by far the most expensive just because of the lack of growth. And if you look at, Apple's price to sales ratio, which is just one ratio, but still, it's currently got about a 10 price to sales ratio. I don't think they've ever had a price to sales ratio that high. The last 5 years, it's been about 6.5. And so I think Apple remains expensive as a name. I think Microsoft, Satya talked about in last quarter that they've had 10 billion of AI-related revenues, but they've spent, what, 50 billion, going on another probably 40 to 50 billion. And so I do think investors are going to be more discerning within those names. I continue to believe that the one of the 7 names that has the most clear line of sight is going to be NVIDIA, where we know Blackwell sold out. And so of those names, I think you're going to see dispersion. I think NVIDIA is going to do well this year. And I think, valuations do matter. And the starting point right now is not great for a lot of these names.
Yeah, and as we keep pointing out, NVIDIA really has just consolidated and bided its time in the last 6 months or so. We'll see if that's, kind of a launch pad or a little bit of a further churn. And Bryn, just while we're on this topic of, the give and take within this group, Tesla today, obviously a big downside mover. I know you thought the stock kind of got ahead of itself. How are you thinking about it right now?
Yeah, I had been talking the last few weeks, fundamentals do matter. They do need to sell more cars, right? And I think today we got a peek that, hey, their cars were light. The market wanted 500,000 in sales. And while China's sales were record for 2024, you still have in China, there's so much competition. And so I think this is a gut check for investors that, valuations and fundamentals do matter. And so I think the stock probably has a few more days of weakness. This is a great time. Last week I sold calls on the name. You get huge call premium. So I'm long-term bullish. I'm happy the stock has come down, especially going into earnings at the end of the month. It's going to be a much better setup than if this stock had like mid 400s going into earnings. I think that would have just been too lofty of expectations.
Yeah, before anybody really stopped to look at it, Tesla's like 22% off its high, and I know there's plenty of call buyers willing to pay you for those contracts that you're looking to sell. Bryn, Lizanne, you mentioned the yield effect on smaller companies and more leveraged companies. I'm wondering, just in general right now, about where, say, the 10-year sits relative to Fed funds rate and relative to inflation, and whether it creates any kind of a restraint on the real economy or housing. In other words, should we worry about yields near this level for equities and the broader economy?
I think there are thresholds, including psychological thresholds with yields that start to maybe cause some trouble within the market. But as we talked about earlier, I think it's more of a small cap issue as yields are going higher. A lot of attention given to, rightly so, the fact that up the cap spectrum, larger companies, many of them turned out their debt. They've been earning more interest on their cash and they've been paying interest on the debt, which in turn means that if we go back into an easing mode and rates do start to go down, you can't assume that that is a fillip to larger companies. That's a benefit to smaller companies, but it doesn't work in both directions. In terms of impact on interest-sensitive areas like housing, we also know that a lot of homeowners essentially turned out their debt. They switched to fixed-rate mortgages. At the peak in mortgage rates with an 8 handle or so, you had a 3 handle on the average effective mortgage rate. So it's going to take a lot more to really open up those interest-sensitive areas of the economy. And given that the Fed appears to be in stall mode right now, we might have to be a bit more patient for that effect to take.
Brian, you mentioned 2018 as a maybe resonant analogy for where we are right now. I mean, if you just want to, I guess, walk it back, it was a really strong year in 2017, very low volatility, and then you had that vol explosion in January of 2018. The market recovered from there. You actually had pretty decent upside into like the third quarter, and then things fell apart when it seemed like the Fed was too tight. You don't want to be too literal about it, but how would you try to navigate something that might have a similar cadence?
Yeah, I would think about it from the perspective of the policy clarity that we ultimately got. And so at some point, you know, the market moves and causes the actors to adjust how they're approaching it. And what you saw in 2018 was the Fed back off their tightening stance. In this instance, it would be, okay, we're not just cutting rates twice. We may need to continue to move on this, and you would need clarity from the Trump administration. The biggest challenge was, it seemed that time, you know, every handful of days or weeks, we got a new tariff or some new exchange on that, and once we got the first round, the phase one of the trade deal, we seemed okay until we hit a pandemic. So it's going to be critical to get clarity. I don't think there's anything magical about that one having happened in the fourth quarter. It's this market's a little concerned right now because the Fed put a little bit of policy uncertainty into it, and we're waiting for the Trump administration. But you know, again, the setup for the markets remains strong, even though we may have to deal with a little bit of uncertainty here.
Sure, and Bryn, I guess in terms of themes that seem a little bit more trustworthy, or at least predictable, probably more deal-making activity, obviously a little more latitude in terms of companies being able to combine with other ones. Is that something that you feel as if you can actively, you know, try and handicap and front run?
I don't know about that, because I'm not sure. There are certain areas during, you know, run up to the election where I felt, especially like a JD Vance, was more aligned with like a Lena Khan, and so I don't see a line of sight in being able to play an M&A. Maybe the hedge funds that do M&A can come back from the dead and actually make some returns. But I think in the public markets, maybe you'll see some smaller transactions. But I actually don't think that's going to be. That's really a clear strategy that you can implement at this point in time.
Yeah, I mean, I know the M&A bankers are saying they're busy, but they do like to say that's the case. We'll see if it does bear any fruit in the weeks and months ahead. Lizanne, Bryn, Brian, thanks so much for starting things off this year with us. Let's now send it over to Christina Partsinevelos for a look at the biggest names moving into the close. Hi, Christina.
Hi, Mike. Well, shares of semiconductor design firm Synaptics dumping right now, about 7% after announcing a partnership with Google on improving edge AI for the Internet of Things, also known as IoT. That means they would be combining Google's machine learning core with Synaptics hardware as well as their open source software. Cybersecurity firm Cloudflare up about 4% right now, moving on a Goldman Sachs upgrade to buy from sell with a nearly doubling of its price target. This is a 12-month price target to $140. The stock is currently trading at $112 right now, so that signals over 25% upside for the next year or so. Shares are up 4%. The analysts point to improving sales, better marketing, and traction with developers. Mike?
Christina, thank you. I do want to note the markets have firmed up a little bit here. The Russell 2000 on the verge of going flat. The S&P is down just over 0.25% right now. We're just getting started. Up next, top technician Jason Hunter is breaking down the charts and flagging one sector that he thinks has more room to run this year. He joins me here at Post 9 after this break. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
The 586s. But I think that's about it. And the 5875s are at 370. We're at the top of the channel. It has to break the channel first.
Stocks starting off the new year on a volatile note, with the S&P 500 giving back gains after being up nearly 1% at its highs this morning. Here to help chart out the rally's road ahead is Jason Hunter, JP Morgan's head of technical strategy. Jason, good to see you.
Thank you for having me, Mike.
For coming in. So, yeah, kind of a noisy churning action over the last several days. Anything significant about, where this market continues to kind of test this post-election range?
Oh yeah, absolutely. I mean, we've seen a range since the election, and even today, coming back again to test the bull gap that opened up on election night. So the lower end of that gap, 57.80, give or take, for the S&P, we viewed that as a key near-term support. Thus far, knock on wood, it's held. If that breaks, then the next big supports, and really for the medium-term trend, are down surrounding 5,600.
Yeah, which would get us back kind of in the middle of last year, right? It was kind of like most of that rally from the summer on took place above 5,600. And
Best Buy has one for 400.
Be in the context of a long-term uptrend.
With 150
right.
off.
If you look at that 5,600 area, there's a couple of
You
key
can
things
send
there.
now.
Number one, when you look at the spring summer
INSIGNIA.
September FOMC meeting, the 200-day
4
average
cubic
has
feet.
drifted into that zone as time has passed. And then if you look at, let's say, the November,
That's
December
not
price
small,
action,
no.
even if
Four-
you look
well,
at that as a
4
short-term
point-
distribution pattern,
4.1 cubic
objective
feet high
sits right
efficiency
on top
top
of that
load
zone
washer.
there. So I think
It's
that's
white.
likely to hold if we do pull back, and that's, let's say, we will. Sentiment's already come off a good bit just with the December churn that you
On
talked
what?
about. AAII bulls down to 35%. Some of the lowest numbers.
High
we've seen
efficiency
since
wouldn't
April
work?
when bonds were we're moving to higher yields again during that period. So the market's done a good bit of work with what's happened in December.
That one
already
doesn't
in
do
terms of
that.
taking some of
That's
the
an
froth
agitator,
out of
right?
the tape.
And there's a lot of attention, as there always is, about market breadth and whether it's a broad
So does
rally
that
or
sound
whether
good to you?
you're
The
seeing wear and tear. Of
insignia,
course, it's been negative for a while, to the point
4.1
where
cubic foot,
I guess
high
it's kinda
efficiency,
looking
top
oversold
load.
for the majority of it.
That's right, yeah, and fitting with that.
It's
if you
at
look
Best
things
Buy.
like the percent of the S&P above its
Call me
50
up if you
average, back to
like
levels
it.
that you saw in April again. You know, and that
Ain't that on
started earlier in December.
Glintstone?
For a period in November, you saw small caps really outperform.
Glintstone passed.
Reference back to the 2016 post-election.
Glintstone passed Battlefield.
December that gave up all of that and then some. And like you said, it took the breadth metrics down into oversold levels that we had.
Best Buy might be the place to
Not
go.
everything certainly kind of flips like a switch on the turn of the
Yeah,
year.
it's
Wondering
past
about some of these
Battlefield,
relationships. You've been looking
past
at semis
Ford,
versus software.
in that shopping center on the left.
Obviously, semis, a leadership group into the middle of last
Back
year.
behind
Software
Ponderosa,
then
I
surges
think.
ahead. Where does that stand right now?
Yeah, we've seen a couple of potential longer-term transitions.
Head over there and
Small
check that
versus
out.
Large has been basing for many quarters now.
Then I'll run over there and
Starting
get
in
it.
24 semis versus software is another one.
Okay,
where you saw
if that's
a
the
fairly
one.
clear base pattern and different than small versus large. Software versus
Bye-bye.
semis actually broke out late last year. Now, software underperforming in the month of December, those ratios, both for large and for small cap, software versus semis, have pulled back to their breakout levels. As a technician, that's where it should find support from a risk-reward perspective. If you're going to set your stop, you set it just below the breakout. So an opportunity here that represents an interesting risk-reward setup.
In software,
That's correct, yes.
to resume its relative
That's correct.
outperformance. Gotcha. You mentioned, yield and having given the equity markets some pause over time. Where does that set us up right now? They've been kind of stubborn here, well above 4.5% in 10-year since the Fed meeting.
Yeah, so when you look at the yields, they backed up not just with the Fed meeting, but starting in September, you've taken 100 basis points of priced eases out of the forwards. You've moved the intermediate sector about as much to higher yields, and at this point, as a technician, you look at the charts, the yield rise looks like it's getting exhausted. Some of our indicators, looking at call ratios and things like that, are at or near extreme levels. The trend has decelerated a good bit with key support just overhead for the 10-year note, roughly around 470. And equally as important, when you look at the shape of the forward rates curve, not to get into the nuance of that too much, but if you look at where the terminal easing price is right now in the forward OIS, it's priced right on top of what some view as market neutral 5-year OIS. So unless you're going to start to think about the Fed pivoting to tightening, it seems like the front end's moved as much as it's going to move for the most part, in which case that pressure that really came to a head in December, particularly on small caps, that should start to abate now because rates should find a level and stabilize.
Yeah, that certainly is I think, what the market's a little itchy to see some evidence of. Final point, I guess, would be this dollar move. I mean, obviously it's been an aggressive breakout, and does it seem like that's exhausting itself?
Well, that's been much more aggressive, more, let's say, not quite parabolic, but more so than any of the markets that we've talked about. Sentiment certainly is starting to get lofty for the dollar at this point. It was already even before this last move for euro dollar down to the low 102 handles. 102 has a lot of technical levels for euro US dollar, which is one of the big drivers for the DXY. Be watching for that to decelerate and show further signs of exhaustion. We don't quite see the deceleration yet, so I wouldn't necessarily try and catch that falling knife for the euro.
Right.
But this is a level where we think you could see some pause and stability, at least on a near-term basis.
And then just in terms of the dollar index, I mean, that would probably follow in a similar path, given how big the euro is.
Yeah, euro's the biggest component. Then when you look at dollar yen, that's largely at least for the last several months, it's been a rate story. And if we got the rates technical setup right, that should allow dollar yen to stall out as well.
Yeah. All right. Guess we'll have to see how this sort of like early year kind of sloshing around of new flows impacts all this stuff. Jason, great to see you.
Oh, great to see you.
Thanks a ton. All right, up next, one strategist makes his case for some serious S&P upside and tells us why he's betting big on some of last year's biggest laggards. That's after this break.
They're at 410. I'm going to get out of them here. I got to go do something. all out at 390. And of course it'll break out. The rising wedge inside of the megaphone. Oh boy. I'm gonna go buy my sister a washer. Oh God, there it goes. Damn, it's not my day today.
Now.
God damn it.
Stop losing earlier gains in a rocky beginning to the new year, though there is
Started pulling back, and I thought I really did good, and then boom.
Start, our next guest is now betting on a
And look, it's already back to 430.
Beaten down corners of the market. Osen Kwong is B of A Security Senior Equity Strategist. He joins me now, and it's great to have you on here. So big picture, you've got a formal S&P 500 target of
Well, my loss ain't as bad as it was. It's still bad.
Which would be a great year for the index. You're up 13% from here, but you think it might get there in a somewhat different fashion. Explain.
Shit.
Yeah, thanks for having me today.
I left $300 on the table, or $6.
Is through the market broadening out.
More than that, if I could sell the other two.
Last year was also a very narrow breadth market again for 2 straight years. I think, first of all, I think the macro cycle is still pretty favorable for equities. We are still in an easing cycle, although we might not get as many cuts as one might hope for. But fewer cuts because of a good economy. I don't think that's necessarily bearish for equities. I think that's actually bullish for stocks in general. And more importantly, earnings are accelerating. And also, we are expected to see more companies participating in that earnings growth. If you look at consensus numbers, 96% of companies are expected to post positive EPS growth by Q4 of this year. And I think
hit the VWAP.
Why the market was so narrow over the past 2 years was because earnings growth was narrow. We couldn't really see any positive EPS growth outside the Mag 7. The other 493 just came out of an earnings recession in Q2. So I think
you got that right, Gyro.
As earnings broaden out, I think so should the market, and I think that's going to be the name of the game in 2025.
Now, does that imply, I think you're sort of underweight tech, which has been the area of the market that's been driving the earnings story. You think the S&P can really do without technology's, kind of big upside power and still get to that target of yours?
Man, that sell-off killed me
Yeah,
today.
it's not like we are bearish on tech per se. It's just that we think there's more juice to the upside in the other sectors. So the sectors that we like are more cyclically oriented sectors, such as financials, consumer discretionary, materials, real estate, and utilities is kind of like our hedge against things going wrong. So I think the biggest driver of that rotation, like I said, is going to be driven by earnings breadth broadening out. And I think the driver of that is going to be manufacturing cycle coming back. If you look at the manufacturing cycle, it's been in a downturn over the past 2 years. And the reason why that matters so much for equities is because half of earnings for the S&P 500 is tied to the manufacturing cycle. It's been the longest downturn in history for manufacturing. And as that manufacturing cycle comes back, because the destocking cycle is over, the election overhang is removed, and I think CapEx cycle is going to accelerate again. If that's the case, I think that's going to be a major boost for earnings for an average stock, and I think that's really going to be the driver of the market broadening out.
Yeah, it is fascinating that essentially the S&P's had 20% up years with manufacturing mostly on the downswing and, you know, consumer confidence largely way below what you would expect. So clearly it's been an odd cycle in that respect. Do you think that, you know, bond yields at any level might be a threat to the manufacturing story or just in general to the cyclical upswing?
Yeah, I mean, I think the current level of rates at around 4.5%, that's probably largely neutral to the manufacturing cycle. I mean, manufacturing obviously is very sensitive to the rate environment. So if we were to see higher rates from here, that could potentially pose threat to the potential rebound in manufacturing. But at least in the near term, I think we are going to get the cyclical rebound in manufacturing, regardless of where rates go. I think tariffs are initially going to be positive because a lot of companies are going to pre-order, and they could potentially kickstart the restocking cycle that we haven't seen over the past 2 years. And I think that's the destocking cycle was one of the biggest reasons why we saw a manufacturing downturn over the past 2 years. Also, the election overhang being removed. I mean, if you listen to what retailers are saying in December, they're talking about how there was a lull in consumer spending before the election, and after the election, we saw a surge in consumer confidence and CapEx as well. So if that's the case, the election overhang being removed, I think that could potentially unleash both consumer spending as well as corporate spending going forward. And I think that's going to drive a cyclical rebound in manufacturing as well.
Yeah, that was fascinating. A lot of those consumer companies talking about a little bit of a pause around the election. When it comes to financials, one of your preferred areas, obviously been a pretty aggressive upside move in a lot of those stocks since the election. What's the basis of you liking the financials on a fundamental basis from here?
Yeah, I think financials is still the cleanest way to play this cyclical rebound in manufacturing and, you know, the PMI cycle. It really feels like financials, especially the banks, are firing on all cylinders. So first of all, the capital markets are probably coming back after a couple of years of basically recession. Trading is still doing good. Net interest margins are still pretty healthy. And valuations are still okay. I mean, it's not that expensive. And the yield curve continues to, you know, widen. So if that's the case, I think financial still looks pretty attractive. It is basically the sector that you could play the cyclical rebound without being exposed to potential tariff risk. So it's one of our favorite sectors in 2025.
Yeah, seems directionally things are favorable at that point. Osin, great to have you. Thanks very much.
Thank you.
All right, up next, we're tracking the biggest movers as we head into the close. Christina has them for us.
Oh, I also have a doozy for you. That's a meme of Rick James, a kitty, and a stock caught in the middle. I'll make sense, or at least try to make sense of it right after this short break.
Yeah, I was just checking to see if you were open.
Oh, yes, we are. We're open till 5.
Till 5? Okay, thank you.
Of course. Have a good rest of your day.
Yes, ma'am. Bye-bye. Okie dokie, I'm heading on out.